going on to say it's almost too late. So you wonder, is there room for negotiation? You wonder if those two stories are related, if the image of Modi, Xi, and Putin getting together, holding hands, giving each other hugs, giving each other claps on the back and saying, yeah, let's be partners, whether that actually did get the president thinking, okay, maybe we need to do something a little bit different here. I don't know, but it really is questionable, especially at a time where the leverage has been taken away, given the court ruling about pausing, at least, if not stymieing the IEEPA tariffs.
The president trying to drive a wedge between a few of those individuals in those pictures, and ultimately it's not working. India is not backing down over buying Russian crude.
Well, the truth is, what incentive do they have to do so if they're going to be penalized from the tariff perspective? And it raises the question, is this the beginning of a true outreach, or is this sort of a one-off, maybe we can negotiate something if you remove all the tariffs? Ultimately, this just adds to the slew of uncertainty that we've seen with respect to what the tariff regime is going to be and what this administration is signaling when it comes to just how much they want certain alliances versus others.
Well, let's talk about taxes, trade and what's happening in this bond market. This is the latest from the Treasury Department, sharing with Axios a list of 68 jobs that are eligible for President Trump's no tax on tips promise. The list includes waiters, bartenders, golf caddies and home electricians. Just a reminder of that massive bill that's been passed, and maybe some of it's shown up in the bond market just a little bit this morning.
Okay, I went through this list, and first I was thinking, okay, so does this mean that people, when you go get a pedicure or manicure, let's say you're getting a manicure, can you now tip with a credit card, and is that just as good as tipping in cash? Because that's ultimately something that they all say. I'm just saying, personally, that's something that I've noticed. But how many of these people actually paid taxes on this? How many people actually meet the threshold to be paying taxes versus either breaking even or getting money back? I mean, that's really the question. How many bartenders, I mean, I guess if you're at a high-end bar, but really are making like, three-digit figures, these are the questions that I was asking as I went through this.
We don't know, because how much of the earnings were actually disclosed?
That's a great question.
Over the past few years. In fact, the past several decades. How much of the earnings were actually disclosed? I
assume that gambling dealers and gambling cage workers did really well with their disclosures on their tax forms. That's my suggestion. That disc jockeys, if you're a disc jockey, you're good. I was going through this, and you just wonder how much was actually reported, how much do these people cross the threshold for actually having to pay extra taxes, and how much will this really shake the needle? I don't know.
It's hard to know. It's hard to know. I'm with you, but we're losing an offset potentially. And I stress potentially. The offset was going to come from the tariff revenue, and now there's just a little bit of uncertainty around that. I still believe the consensus on Wall Street is that the legal proceedings will continue, that the president will ultimately succeed in the Supreme Court, and these will stay on. But just that uncertainty enough to cause some jitters maybe stateside.
Yeah, and if you are into being a plumber or if you're doing home maintenance, then you can keep those tips. And that actually could be the area that could be most lucrative. I'm just thinking about careers for my children when they graduate. That seems
you're
like
focused
more lucrative.
on that?
I think it could be a more lucrative career than, going and working in an office these days, because that seems like it's less reliable.
I think there was a report, was it from Stanford?
Yes,
in the last week, on AI and jobs for the entry-level work. It's already been damaged, already seeing them held back.
Massively, because they can just replace them with AI, especially if you're a computer programmer. So if you're going to be in computer programming, even medicine potentially has a disruptive factor. But if you're a plumber, you can keep your tips, and you can go out there and you can get a job much more easily, and that's actually what we're seeing in the data.
And there's your pitch from Bramo. We'll get more jobs data later on in the week. We'll get JOLTS, we'll get ADP, we'll get the big one, payrolls, on Friday. Let's turn to markets. Matt Maley, Chief Market Strategist at Military Bank, is cautiously optimistic on the Russell 2000's recent outperformance, writing the following: the potential for the small cap sector of the stock market to finally outperform for more than just a few weeks is definitely growing. Matt joins us now for more. Matt, welcome back, sir. Let's talk about it. 7% move in the month of August. Let's talk about what underpinned that move and why you think maybe this can continue.
Well, it's going to depend, obviously, on a lot of things, and we have this situation suddenly cropping up in the bond market. But the whole thing, though, is that everybody's kind of focused on what's happened with the tech stocks. They've had this unbelievable run. Do they take a little bit of a breather, and do we see a rotation? And we are seeing that recently, and we're seeing it rotate into the small cap sector. And if the economy can hold up and doesn't roll back over or slow even more, this is let's face it, the market is incredibly momentum driven. And you have the Russell 2000 now not just getting close to its all-time highs from last year, but that all-time high is actually a double top high from 2021 and last year. You break above a double top high, that's going to create all sorts of positive upside momentum and attract a lot of that momentum flow into the market.
Matt, it's the inflation piece of this that gets my attention. Gold at record highs, big move also through the month of August. What's the relationship between, say, small caps, what we've seen in precious metals, and what might happen with inflation over the next year?
Well, I mean, the thing about inflation, or I guess the whole thing I'm concerned about with what's going on with gold is that it's becoming the kind of the only risk-free or flight to safety trade. I mean, we've seen that the cryptocurrencies haven't worked as well, and of course, the bond market. That's if inflation's going higher, that means the yields are going higher. And I guess maybe the biggest concern I have about this whole scenario that maybe the small caps cannot perform is what you're talking about on global interest rates. We're seeing it in Europe, Japan, et cetera. But a lot of that doesn't just have to do with inflation. It has to do with concerns about budget deficits and fiscal spending, et cetera. And if we can't make up for some of these losses we get on, some of this revenue that we lose from tariffs or whatever, we're going to have a big. I guess what I'm trying to say is that we have to be very careful. We're moving to this month of September. Watch those interest rates. If they move higher, it's going to be a big problem.
So you think that could potentially curtail the momentum that we're seeing in small caps if you see long end rates go higher, even if you see short end rates continue to decline. Is that right?
Yes, and one of the things two things. Number one, on when it comes to you were talking with the previous guest about the yield curve. And the yield curve, people like, well, boy, those old days when inverted yield curves signal a recession, well, we don't have to worry about that anymore. But it was actually never that. It was only when the yield curve not only goes from inverted back up to positive, but when it gets to 50 to 60 basis points, as it is getting now. That's usually what signals a slowdown, a significant slowdown, or even a recession. That's not good for small cap stocks. And then, of course, the other issue is that when we have the situation where the economy, we go back to the earnings growth, and we could talk about that. But the earnings growth that we're seeing right now, although it's good and it's solid, it's good and solid for a stock market that's up, that's trading at 17 times earnings, not one that's trading at 23 times earnings. So again, we have a lot of headwinds we're looking at right now. So I'm saying that the odds are growing that we'll see some outperformance of the small caps, but it's definitely not a lock, and we have to wait to see how things play out over the next couple of weeks.
Are we creating narratives to try to be bullish on all of these stocks in the universe as a result of a very bifurcated market where you have a sea change in artificial intelligence driving a massive increase in market cap of just a handful of companies? And people are saying, okay, they're looking pretty expensive, those 10 stocks that account for about 40% of the S&P 500 now. But, that dynamism can be carried out to other names as well. Are people getting ahead of their skis, over their skis when it comes to that kind of mentality and then trying to find other reasons to justify that?
Lisa, I definitely think that's part of the case. And we look at what's going on right now. We're seeing some more raising of price targets on the S&P 500. Well, that people were tripping over themselves to do that in January, just before the market went down. And people were tripping over themselves to cut their targets in April when the market was making a bottom. Now we're kind of seeing the opposite tack. But what it comes down to, though, which when you talk about, we're looking for that broadening out. People are desperately looking for that. But we have to remember that this is still a tech-driven market. And if the tech stocks trade sideways or even trade slightly higher but lag a little bit, that's okay. We can see a rotation. That's what we saw in January of this past year. January of this year. But if tech stocks start to go down, they're much too highly weighted in all the major indices for those indices not to go down. And I'll tell you, if those indices start to go down, the whole look of rotation is going to disappear. People are going to rotate into cash because we've heard all this talk about bubbles and the September-October timeframe. People are going to start pulling money out of the stock market. So if the AI situation starts to fade, and of course we had that that report from MIT a week or so ago talking about how so few companies are making money from this. And then you look at what's going on with NVIDIA, reported good numbers, but not so good. But whenever NVIDIA rolls over after reporting earnings, like it seems to be doing right now, that creates headwinds. So again, no matter what we talk about small caps and rotations and things, and everybody's hoping for that, you got to follow the tech stocks. If they go down, the market's going to go down, and the money's going to come out of the market. So we're definitely hitting into this seasonality issue that is starting this morning in a rough fashion. We'll see if it continues that way.
They're going down this morning. Matt, appreciate your time. Matt Maddy of Military Back. We're down about 1% on the Nasdaq 100. Speaking of new price targets, this from Julian Emmanuel of Evercore. New price target for year-end next year, year-end 2026, 77.50 on the S&P 500.
Yeah, the once-in-a-lifetime opportunity that he sees in AI, and this is what's driving him to see, even if there are some dips or some volatility, which people have been expecting last month, but might just be delayed, that will still lead to a much higher market on the heels of AI, which could be true. It's just a question of participation. Does everyone get to participate in that gain?
Getting one of those dips this morning, just a little bit softer. We're negative by 0.8% on the S&P 500. With an update on stories elsewhere with your Bloomberg Brief, here's Yahira Arnott. Hey, Yahira.
Hi, John. Food giant Kraft Heinz plans to split its business into two companies in an effort to streamline operations, provide greater resources to individual brands, and drive profit. One company will include its sauces like Heinz ketchup and boxed products like Kraft mac and cheese. The second will sell grocery products like Oscar Mayer hot dogs and Lunchables. The transaction is expected to close in the second half of next year. Meanwhile, Treasury Secretary Scott Bessent said the Trump administration may declare a national housing emergency this fall. He declined to list any specific actions, but Bessent told the Washington Examiner that housing affordability would be a critical leg of Republicans' 2026 midterm election platform. And New York Democratic Representative Gerald Nadler, the former House Judiciary Chairman, will not seek re-election next year, ending his 34-year congressional career. Nadler helped lead President Trump's impeachments, and he told the New York Times that at 78, he wants to respect the need for a generational change in the Democratic Party. That's your Bloomberg Brief. John?
Yahira, thank you. 34 years later, 78 years old, respecting the need for generational change.
It's better late than never, I guess. But it does, honestly, this will be a real question, though. We have seen retirements. How much are people going to push back? What does that new generation of leadership look like? That's the key question.
Well, from that party, further and further to the other extreme.
Well, this is what we've been talking about. We've seen a polarization increasingly on both sides of the party, and we've seen this globally. So who brings that together? Does anybody, or is this just sort of the way to go in the future?
How interesting is New York politics right now?
It's pretty interesting.
Right?
It would be nice if it were a little more boring.
It's going to get more interesting in a few months' time. Up next on the program, I'm right there with you. A warning sign for financial markets.
It is a warning sign, and we have seen governments react to this sort of warning signal. That's just something we need to be a little bit careful of, not to mix signals here.
We'll catch up with Matt Hornback of Morgan Stanley in just a moment, live from New York City. You're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azov. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. will feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Equities down here by 0.8% on the S&P 500, negative on the Nasdaq by 1 full percentage point. Under surveillance this morning, a warning sign from financial markets.
It is a warning sign, and we have seen governments react to this sort of warning signal. Donald Trump himself clearly has reacted to that sort of warning sign before, and we have to be careful not to conclude right away that if the bond yield rises, that automatically translates directly into much, much higher spending on interest payments. That's just something we need to be a little bit careful of, not to mix signals here.
So here's the latest this morning. 30-year bond yields inching back towards 5% as bond yields worldwide continue to climb. Matt Hornbacher, the managing director and global head of macro strategy at Morgan Stanley, writing, with Fed rate cuts approaching, we expect both Treasury yields and the US dollar to make new lows in the fall. Matt Hornbacher joins us now for more. Matt, good morning.
Good morning.
It's good to see you in person, buddy. Thanks for dropping by. Been following you, the team, Mike Gapin, your calls on the Federal Reserve. So now looking for a cut in September. But I think you make an important distinction. A risk management move versus something much larger and deeper over the next year. Can you just explain that just a little bit?
Yeah, absolutely. Well, we are expecting the Fed to restart the easing cycle this month. And the reason is not because we're on the precipice of recession. It's really about trying to avoid us being on the precipice of recession. And so the way that you do that is you begin to once again reduce the amount of restraint that the economy is dealing with in terms of short-term interest rates. And the idea there is, of course, as you start to lower short-term interest rates again, those longer-term interest rates, which have not been going down very much, will start to follow. And of course, this happens both with a steepening of the yield curve, which is what we've seen, but as the yield curve steepens, it actually increases the incentive for levered investors to put money to work further out the yield curve. And in doing so, you then start to see those long-term interest rates move lower as well. And that's really what's important for the U.S. economy, is getting those long-term interest rates to begin to trend lower, not just move lower in a given month, right? We want these interest rates to be trending lower. And without rate cuts, it's hard to see that happening.
The flip side to all of this is that maybe the Fed's going too soon. Inflation target is 2%. Inflation's running well above that. And that perhaps we just heard from a Federal Reserve that's more tolerant of inflation. And for that reason, hands off, don't want to buy the long end. How would you push back against that view at the moment?
Well, it's hard to push back against that view at the moment because that's what people are talking about. And oftentimes the narrative will drive the price action. So it is tough to push back against that in this moment, but we need some more inflation data to really understand where is the locus of inflation today. Is it in the tariff-related sectors? Is it in services? This last inflation report showed hardly any signs of tariff-driven inflation. It was mostly in the service sector. Core PCE, which we got last week, goods inflation was 0. So it's really hard to look at the inflation that we're getting and cry foul about tariffs. We think it's coming, but we have thought it was coming for several months now. and it hasn't shown up to the extent that we thought it would.
You suggest in the argument something that John's been raising for a while. At what point will weakening economic data not push people into long-term treasuries, but have the opposite effect, right? The idea that if the economy isn't strong enough, that questions how much the U.S. can really increase the revenues at a time where they're going to need to increase spending, which will lead to more inflation, bigger deficit, higher yields in the long run. I mean, at what point do we reach that kind of doom loop that we're seeing the UK flirt with?
Yeah, I tend to think about these doom loop concepts as relating more to the currency than to longer term interest rates. It's been, I think, a very long time since we've seen investors abandon the long end of the yield curve when the economy is going down the tubes. I just haven't seen it, at least that I can remember in 25 years. But you can't say the same thing about the currency. And so if we were to get into a situation where the economy hit recessionary territory and the Fed had to lower interest rates much more aggressively, that would be an environment where I think you would see interest rates across the yield curve decline, led by the front end of the curve, of course, but at the same time, I think you would see the US dollar depreciate. And that's more or less what we're forecasting. We have interest rates going down and the dollar going down simultaneously.
If that's the case, why not buy 30-year bond yields, 30-year bonds over in Europe, and just buy them for the absolute, given the fact that you expect currency appreciation relative to the dollar, as well as potentially maybe a stabilizing?
Well, I think for long-term investors, that's a great trade, no doubt. But when we talk about investment strategy, unfortunately, we have to be a bit wonky, right? We have to talk about both what we are recommending real money investors to do with their cash and then what we recommend levered investors to do. And the yield curve in the US is a great example of this. If you're a real money investor and you're really going for total return, the long end of the yield curve has great value. Real yields at 2.5% in the very long end of the curve, that's great value. That's where you should be putting your money if you're a real money investor. If you're a levered investor, meaning you're borrowing money in the short-term interest rate markets and then lending it long, it's better to be in the short end of the yield curve because from a levered perspective, that's where I think you make most of your money.
Matt, important distinction. Matt Hornback and Morgan Stanley. Good to see you in person. Once again, got to do this more often. It's been a long, long time.
Pleasure to be here.
Thanks for dropping by. Appreciate it. As we pointed out a few times already this morning, this dynamic that's playing out so far today is not just in America. You're seeing it in the UK and France and Japan and elsewhere. The move in the UK, both in the bond market and the currency, of the utmost concern, I think, going into this budget for the Brits in a few months' time.
Yeah, the highest 30-year yields going back to 1998 at a time where there's a real question about how much money they can raise through the taxes lever, given how many people, as you point out, have been leaving the region, and how much they actually have the willingness to cut budgets at a time of public outcry, and we've seen that in France. So this really is the conundrum.
I'm pleased you used that word, Bramo, because you're dead on. The willingness. They've got the ability, they've got the majority in Parliament. They just haven't been willing to make the spending cuts that need to happen. There's been pushback from their own party.
Yeah, so this is the issue. Do they take the political heat? And if they don't, does the bond market give them the political heat?
There are consequences. Yields up by 6 basis points and the currency a whole lot weaker. Coming up in just a moment, Judy Bill of Kane Anderson Rudnick will catch up with Ken Hexter of Bank of America, Erin McLaughlin of the Conference Board, and Kathy.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far we beat every quarter. So we
전달,
were all like, wait,
속도
what? Our
전달.
perfect record. We're like a 4.0 student that is going to get a B for the
있습니다.
first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is an environment that is very volatile.
In general, things have been drifting more positive.
Yields still look elevated versus where they've been.
Our long-term outlook for the equity market is that the returns are going to be lower than they have been over the prior 5 or 10 years.
Everything is expensive right now. And I think we should expect lower returns across the board, both from stocks and from bonds.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning from our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Stocks down, bonds down. Equities lower by 0.8% on the S&P 500. Bond yields higher on a 30-year bond this morning, approaching 5% stateside. Your yield, 497.27. As we work our way through the week, tons of economic data, including ADP in a few days' time, and then the big one on Friday. Payrolls Friday just around the corner.
And what is the market lining up to respond to some of this data? Is good news. I know that Stuart Kaiser is shaking his head, but this really is the question. If you get better than expected data, what does the Fed do with that? Do they still cut rates this month? If they do cut rates, do people start to worry about inflation? And on the flip side, how punitive could the markets treat a negative number or something that really is thought of as really weak, given already some of the concerns about the dollar and concerns about the fiscal backdrop?
So this is how I'm thinking about the data at the moment. I think it's rate cut on for September, whatever. Would take something massive to change that story. The debate of the Federal Reserve is what to signal beyond that. What comes next? That's where Governor Waller's speech going into the weekend becomes, I think, increasingly important. When he says, let's get on with it, it's literally the title of the speech. Everything in it from there is about what you do once you've started. And he started to signal more cuts beyond September. Is this committee prepared to go along with that, or is September still far too soon?
This market is going along with it, and this market is pricing in the greatest number of rate cuts through the end of next year that we have seen outside of a recession in the United States going back to the 1980s. So if that is true, does that come with no consequences? Does that come without the inflation that some people worry about? Or do we have to think about what that means about a tolerance of higher inflation in order to prompt growth? And that, I think, is what the market is grappling with around the world with yields going higher.
Seeing in precious metals, gold record highs up 30% so far this year, up 5% last month. Are you seeing at the long end of the yield curve? I think in some cases you might be. Just a little bit of pushback from the bond market too.
Yeah, and this has to do with inflation. It also has to do with just credibility in the fiscal backdrop over the next 3 decades. I do wonder, we talked about gold at record highs at almost $3,500 an ounce. You wonder what happens if you start to see something like Peter Scheer suggested yield curve control. If the Fed starts to say, we're concerned about the yippiness of the 30-year, we're going to try to control it, buy some bonds, try to get that down. Do you start to see gold prices go even higher? As a lot of investors around the world think of government bonds in developed markets as not being the haven that they have traditionally been.
Danny mentioned this last week, and Danny's right to bring this up. The transmission of monetary policy, is it being disrupted? Are you dropping interest rates but not seeing an easing of financial conditions? Now here in America that would mean lower mortgage costs, and that would mean lower yields at the long end of the curve. And is that a reason, a justification to step in at the Federal Reserve? And I'm not thinking about this Fed. Forget this Fed. Chairman Powell, when he offers guidance in September, that's the last guidance you're getting from Chairman Powell. The next time they deliver forecasts, we'll know who the next Fed chair is, and we'll be far more interested in their guidance for 26 than his. And I think it's the next Federal Reserve, the next iteration of this Fed, and what they're willing to do and not willing to do with the balance sheet that I think becomes more interesting.
Well, it also becomes more interesting at comparisons with Turkey, because if you have yield curve control in order to transmit monetary policy, what is the goal of that monetary policy? It means that inflation is no longer the preeminent concern. It really is about juicing growth, and that is a very different priority for a Federal Reserve that will require a very different market. And that, I think, is what a lot of people are trying to wrap their heads around, but I think the market has been pretty complacent, or at least not really taking that as a realistic kind of probability, and saying there are enough people who take their job seriously that isn't going to happen.
Bonds down, yields up by 5 basis points this morning, 30s at 4.98. Coming up this hour, Julie Bill of Kane Anderson Rudnick as we kick off a new trading month. Ken Hexter of Bank of America as shipping companies face fresh headwinds, and Erin McLaughlin of the Conference Board as we look ahead to jobs data this week. We'll begin this hour with stocks pulling back from recent record highs. Julie Bill, the chief market strategist at Kane Anderson Rudnick, writing August brought us a broader market led by small cap value and the laggards for the market. I think if the employment data continues to hold up, that can continue. Judy joins us now. Judy, welcome to the program. That disconnect that we've been talking about. A Federal Reserve is worried about a cyclical downturn. At the same time, the equity market is displaying more of a cyclical tilt in the last month. Does something have to give?
Yeah, I think something does have to give. I think everyone is assuming that the Fed is moving to a place of easing, and that's going to make life easier for everyone, including small caps. And there's also an assumption that we've really seen everything we need to see about tariffs. Like, case closed, it's really not a big problem. We don't really have to worry about it, guys. It's not showing up in inflation. And I think most people can really recognize that companies did a great job front-loading and doing everything they could to offset tariffs. I don't think we've seen the worst of it. And if they're ruled illegal, that creates problems in the bond market as far as the credibility of the U.S. government for being able to pay back its debts.
Well, Julie, let's start with the bond market then. I'm pretty sure you've brought this up. Do you think this morning's price action is somehow connected to the legal decision going into the weekend?
I think it's part of it. I do think that there is a recognition that we set up this budget with the assumption that we were going to be able to plug the hole with the tariffs. And they've done a great job rolling in. I think there's a real recognition that if we do not have that lever to pull, gosh, and we don't seem to have any inclination to be able to do the hard work of either cutting or raising taxes, that really does call into question the level and ability for us to repay our debts. I think we really sort of start to look like that kind of creditor, that friend of yours that borrowed money and under, not great circumstances. And I think that's problematic, and that's kind of where the bond market is right now.
If we do get negative economic data this week, how punitive will the response be in equity markets?
I think it depends, right? Because I'm always like, I agree with you. I'm always like, hey, just curious, is good news or is good news bad news, or where are we right now? I think that right now, the way that the market is levered to interest rates declining, and that really seems to be the place where everyone's focus is, that if we have superlatively good economic data, that you'll see actually a pullback in the markets. I would argue that that's probably a good sign. It's really showing the level of resilience of our economy to handle an incredible amount of uncertainty and a challenging, policy situation. I think it would be positive, but I think for most investors, they're really levered to what's happening at the Fed and what's happening with interest rates.
So if we get negative data, that could end up being positive for small caps because of the potential rate cuts that could come on the heels of it. Is that what you're saying? That ultimately the small cap story is a yield story, and that is the reason why when you see yields higher, that leads to a sell-off like the one we're seeing today.
Yeah, I think that most people have a really strong connection between interest rates and small cap, and some of it makes a lot of sense to me because most small cap companies are borrowing short, and they're borrowing with their banks on variable rates, and so they weren't able to lock in the fantastic interest rates that we as home buyers or large companies were able to do. So they are more economically sensitive and their leverage is more variable. There is benefit to them. But I think beyond that, it's really much more important for small cap is how good is the economy doing, because broadly speaking, it's more economically sensitive.
Well, Julie, let's talk about a couple of names. Ross Stores up 8% last month. TJ Maxx up almost 10% last month. Names that you like. What does that price action speak to?
Well, I think it really speaks to everyone in retail is moving towards where is there good traffic, right? Because traffic is where you could really recognize that a retailer is able to meet what its customers are really looking for. And just like we are hunting for value as investors, if you think of just how price starved we all are, we don't have value anymore with the level of inflation and erosion that we have. Everything that happens in off price, you go into the stores and there's a real recognition, my God, this, at least here I can find some good value, some good deals. And I think what's interesting about off price is most of our manufacturers, retail and general merchandise, they have this incentive to create as much stuff as possible, right? Because that incremental dollar is that incremental sale is so high margin. So there's always an excess of goods. And so these retailers do such a great job collecting all of them and then selling them quietly without putting them online, so you have a lot of price discovery, right? Amazon can't do this, right? It's too much price visibility. But your Ollie's, your Ross, your TJ, they do a great job being able to collect all of this merchandise, and it's structurally protected.
Do you think it speaks to a step down in economic resilience of the consumer that we're seeing those names before?
Absolutely, because it's not just them, right? You see that Walmart is able to really bring in more of the very, very high-end customers. I think that if you look across income spectrum, everyone feels annoyed with how high prices are. I mean, we had the management team of Hermes in our offices, and she just kept talking about value. And for them, value was just look at the quality of our craftsmanship and what you pay for it. And we've only raised our prices mid-single digits, while Chanel has raised them 20 or 30%. Everyone's talking about it, and I think it's just a recognition that we're just starving for any sense that our dollar is worth something.
So is inflation good or bad for small caps?
I think inflation is generally pretty bad for small caps. They've shown themselves less able to raise prices. They don't always have the level of economic control that larger cap companies have, right? They can't shrink down their packaging as easily as Procter & Gamble can. And so they were really hamstrung by what happened early on with inflation. I think they've gotten their footing. They have reset their capital structures. They've reset their cost structures, and they're in better shape. But if we see an environment where inflation really skyrockets, that's problematic for them.
Julie, appreciate your time. As always, thank you. Julie Bill there of Kane, Anderson, Rudnick. If you're just tuning in, seeing another leg down in stocks, another step up in bond yields. Stocks are down by 0.9% on the S&P 500. Bond yields higher now, Bramo, on 10s at least, by more than 6 basis points.
So how high can they get before something breaks? And can this be this sort of persistent grind higher that we've seen, particularly in the UK, but around the world? In the United States, you pointed to this idea that it could be tied to the idea of tariff revenues not coming in here. Is this the breaking point or not quite? That, I think, is what people are wondering.
The good news stateside is we're still at 430, which is the low end of the range. I believe we're still down on the year as well for 2025. Much more disturbing, I think, is what's happening further out along the curve, 30, say, and beyond America, what's happening in the UK and in France, where the bond market is asking for corrective action. in those countries. I don't think we're there yet, stateside, but we're certainly there, beyond those levels, in France, in the UK, and elsewhere.
I just wonder what the response is going to be from policymakers. Maybe it's just not to issue the debt, because ultimately, at what point is it just a dead denomination, because there isn't the demand for it at a time where we can't see out 5 years, let alone 30?
Ask the Treasury Secretary the same question when he was sat in the seat on this programme. What's the incentive for anyone right now, the UK, France, or otherwise, to issue out along the curve at a point where the investor base is turning around and saying, don't want it anymore? Don't want it.
And what you're going to expect
주문
is that
청산이
they're probably not going to
완료되었습니다.
issue as much, and we're already hearing that. So will it become a rare currency or a rare denomination that people will go to even more? I mean,
like
these
the 20.
But these are the questions. You know, then does it offer value if they're going to reduce issuance? And actually, is it the Matt Hornback view of the world that you've got to coalesce around?
Bond yields higher around the world so far this morning. With an update on stories worldwide with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. We have more details on the Klarna IPO. It is looking to raise as much as $1.27 billion in its highly anticipated debut. The buy now, pay later firm plans to sell 34.3 million shares in the IPO, with the price expected to be between $35 and $37 per share. The Swedish fintech will trade on the New York Stock Exchange under the ticker KLAR. And as you all were just discussing, the yield on 30-year gilts climbed to the highest level since 1998 as an already rough fiscal backdrop adds pressure to the Bank of England ahead of its meeting this month. But it's not just in the UK. 30-year bond yields around the world are rising to fresh multi-decade highs amid concerns over inflation and government financing. And here, the Treasury Department has given a first look at the jobs that will qualify for President Trump's no tax on tips pledge. The 68 jobs mentioned include waiters and bartenders, bellhops, golf caddies,
자, 진입 사인되도록 하겠습니다. 자, 이전과 동일하게 매도 진입 하실게요. 사인드립니다. 자, 매도 진입 사인드립니다.
체결되었습니다. 확인 바랍니다.
Appreciate it. Up next on the program, the morning calls as Ferrari shares are higher following a recent upgrade. Plus, Ken Hexter of Bank of America as shipping companies face fresh headwinds. All of that just around the corner.
현재 PC에 오류가 있어서 캡처가 늦어지는 점 양해 부탁드리도록 하겠습니다. 자, 매도 진입 대응 이어나가도록 하겠습니다.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I think the administration is going to go to the Supreme Court and get a final determination on whether the tool they use to put these tariffs in place are going to stand or not. If they fall, they've got a lot of other options. They've got many different statutes they could go to. It is not the end of the story by any means. There's a lot of other options out there.
That was Everett Eisenstadt, the partner at Squire, Pan & Boggs and former National Economic Council Deputy Director, following the legal pushback going into the weekend on President Trump's tariffs. Now, there's a few people already this morning pointing out that maybe some of this is showing up in the bond market, seeing 30-year bond yields higher, 10-year bond yields higher. Just the idea being that maybe the offset, the revenue raising of this tariff effort, has supported this bond market over the last month.
Henrietta Trey's came on and said that this reduces some to the tune of $2 to $3 trillion revenues to the U.S. Treasury Department if there is this full rollback of IEEPA, of the tariffs that have been put under that statute.
The issue for the bond market, though, is that is one small issue in the grand scheme of things. Bond yields are higher stateside. They are much, much higher worldwide. In the UK, in France, in Japan, yields higher across the board. The equity market a whole lot softer on the S&P, the Nasdaq and the Russell, following some massive outperformance on the Russell in the month of August, up 7% this morning, down by more than 1%. The S&P 500 negative by 0.9. That's the price action. Here are the morning calls. First up, Mizuho raising its price target on Alibaba to 159, saying the firm has the best cloud assets in China. Your second call from Deutsche Bank upgrading Ferrari to buy, expecting the supercar maker to unveil ambitious new targets next month. The stock is up by another 1%. And finally, Barclays raising its price target on Ultra Beauty to 617, citing increased transactions and growth across all categories. Let's turn to the shipping industry, as the end of the de minimis exemption is causing fresh headwinds. Bloomberg's Brendan Murray joins us now for more. Brendan, welcome to the programme, sir. As always, difficult to keep up. Share with us the latest and what's going on this point.
Yeah, exactly. So what we've had is about 2 or 3 dozen mail services from around the world that have suspended the shipment of these smaller parcels to the U.S. because they don't have the sort of back office facility yet hooked up to the U.S. Customs Agency to process these shipments or to pay for them. So the sender is responsible to pay the tariff, and if they don't have the linkages connected between all of these various mail operators, these parcel delivery companies, then all these packages are going to sit around or not get sent at all. So it's gonna create some disruption in this particular part of global trade. These packages that ship a small amount of goods worth not a whole lot of money, but they can add up. There are something like 1.4 billion of them sent into the U.S. every year. That's something like 4 million a day. So it's a huge volume, even if the value of them is small.
Brendan, you track a lot of the volume. Just talk to us about what's happened, not just with the US to China and China to the US, but around the world. One thing that we've noted, and Lisa and I were talking about it earlier, is that tariffs might have gone up and trade between the US and China might have gone down. But global trade between China and the rest of the world seems to keep on increasing. And that trade surplus doesn't seem to be going down at all.
Yeah, exactly. I mean, we've seen it play out in recent weeks, where China and other countries that are hit with U.S. tariffs, they go out on missions to try to establish new trade relationships and build those up if the U.S. relationship is deteriorating. So look, we've had this huge spectacle in China over the weekend with India, Russia, and Xi Jinping hosting those 3 leaders of the BRICS countries. And this is the fragmentation of the global economy happening before our eyes.
주문 청산이 완료되었습니다.
Yet to be seen whether the U.S. and Donald Trump can use this particular tariff authority that he's launched this latest trade war with. But as these experts say, he's got a lot of tools that will allow him to impose tariffs on U.S. imports. But those tools are slower and they're less broad. You can't just flick a switch and turn them on and off the way President Trump has done with his reciprocal tariffs. So the bottom line is there's just a lot of uncertainty. There already has been, but this just extends it out until the courts resolve this issue. If you're a small business or a company looking to hire or invest, you're looking at the situation and going, what do I do? Do I wait or do I go now? It's just it's going to extend this period of uncertainty.
I don't think you know what to do. That's for sure. Brendan, appreciate it. Bloomberg's Brendan Murray there out of London. Ken Hexter, the Bank of America Securities Senior Analyst of Air Freight and Surface Transportation, joins us now for more. Ken, good morning.
Good morning, Jeff.
Let's extend some of that conversation, and thanks for being here. Let's take the de minimis exemption. Can you just walk us through, give us a feel for how much of the overall volume between, say, trade between the US and China that actually accounted for through air freight alone?
Yeah, and happy post-Labor Day. Welcome back to work, everybody. So, you know, it's a great question in terms of, you know, Brendan was mentioning the 1.4, 1.5 billion packages a year. It's about 4 million a day. So you've got a lot of frequency. UPS and FedEx export combined about 2.8 million packages per day. So they're representing, that's not all de minimis, but a huge portion of this de minimis movement on a per day. But international is only about 25% of each of UPS and FedEx's revenues, and then the export portion is only 17%. So we're still talking a small portion, as Brandon mentioned, a smaller portion of the number of volumes, or the high volume but low value of the packages moved. But this is meaningful. This is the highest profitable lane, is the US-China lane. So we've already seen those volumes down about 75% year over year. Once this went into effect in May, the new news here is on Friday, it expanded to the rest of the world. So that's about 24% of de minimis is now encapsulated in this new expanded part.
How enforceable is this?
So it's enforced by the U.S., right? So it's something that our Customs and Border Protection Division is going to be watching. And so now everybody has to comply. The difference of what's going on before is UPS and FedEx already required the information on what's in the package, but now you've got to get who made the packet, who made the goods. And so the difference is the postal operators. He was mentioning 30 different postal service operators suspended because they don't have the technology. Before, you could just check a box that this was a small, low-value package. Now you've got to give so much more information. So that's guarded by the CBP and on imports.
No, I was just wondering, you know, if you get on a plane, let's say, and you get $500 worth of goods from some country, how do they come on the plane and get it? I just wonder, is this, you know, I'm just thinking theoretically, stop laughing at me. I mean, how do they enforce this? Does it become difficult given all of the changes in the tariff regimes and some of the legal challenges?
Yeah, what you're carrying on you, that's still not going to change as far as that $800 limit, right?
But this is just looking to clarify for personal reasons.
This is mailing cross-border, right? So this is what's going in packages, what's going on vessels, what's going on different methods of transport, even rail cross-border. So they're managing what packages are going cross-border.
Of the companies that you follow at the moment, who's executing really well? Who have you been impressed by?
Well, I mean, they're executing in terms of FedEx and UPS already move traffic, right, have the skill sets. But this is a question about what's going to happen with the increased rates to those packages. So, for example, Temu and Shein, right? These were low-value shippers that had found a loophole and expanded that loophole. We went from 100 million packages 20 years ago to 1.5 billion, right? And that's already up to 900 million packages at run rate by the time this went into effect in May. So you're seeing this. This is really taking those companies that learned how to take advantage. And what you've seen is Shein's volumes are down 23%. I'm sorry, down 12%, but revenues are up 23% because they've taken rates up to adjust for the tariffs, or they've gone in and as you were mentioning, gone to different countries.
Super smart. Ken, appreciate your time.
Thank you so much.
Come back soon. We'll do it again. Ken Hexter there of Bank of America. Are you shipping a parcel sometime soon? On your person?
On my person? Am I going to like pack myself with gold bars from London? Look, I do think that what the point here is, does it kill the fast fashion industry? I mean, just to be serious, aside from the fast fashion of getting on a plane with lots of clothes on.
Would that be a bad thing?
Well, yeah, but you know what I'm saying? Like that's the issue, is that, you know, I don't know that my kids are going to get from Shein in the same kind of way, and maybe that's positive.
The businesses that were viable 6 months ago maybe aren't anymore.
Or they're just going to jack up prices.
Yeah, we've still got to figure it all out.
Yeah, I mean,
how do you price this if you're a company at the moment?
I mean, this is the reason why I just wonder, do they come back to the office and say, let's invest?
Up next on the programme, the sneaky ball case.
Yeah, exactly.
That was,
I just wonder. I am curious.
Erin McLaughlin of the Conference Board joins us in just a moment from New York City. You're watching Bloomberg TV.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
현재 예상보다 저조한 거래량으로 조금 더 지켜보고.
On many occasions, you wake up in the morning stateside and Asia or Europe's had a bit of a freak out and the American session buys it. Not seeing that so far this morning. We'll see if this sticks, but at the moment, we're negative and getting lower. We're down 1% on the S&P, down by 1.3 on the small caps, and in the bond market, yields taking another leg higher. Up 7 basis points now on 10s, approaching 430, up 6 on 30s, approaching 5% at 498.
Yeah, and you just wonder whether this is being led by the United States or whether it's being led by the rest of the world. And that ultimately is the question. You asked, John, whether this is tied to a lack of revenue coming from tariffs. If the IEEPA statute isn't enough to justify this government. But there's a bigger question, and is it a loss of credibility of governments in France and the UK, in addition to what's going on in the US, that's causing this global sell-off?
Arguably, the US is in a more comfortable seat at the moment relative to what's taking place in the UK and France, and you and I were talking about it just briefly. The moves we're seeing outside of America, these moves in the US aren't screaming for corrective action from Washington, D.C. The moves in France and the UK are. And I'd be much more worried if I was sitting down in the United Kingdom, facing down the prospect of putting together a budget in a few months' time, with yields at the highest since the late 1990s, and up again this morning, and pushing 5% on 10s and on 30s, pushing 6.
Yeah, with a currency that is rapidly depreciating, with a pound that is losing ground versus the euro and versus the dollar, are they willing to make the hard decisions? And what does that mean for growth in a region that's facing off with a real conundrum?
What are the hard decisions? The hard decisions aren't putting up taxes. The hard decisions are cutting spending. That's the most difficult decision they've got to make at the moment. And you and I went over it briefly. This is not about ability. They have a majority in Parliament. This is about willingness of MPs to follow through. And the market's going to keep demanding it. We talked about this last week. I think it's really, really important. At what point do they believe they need to vote for those kind of spending cuts that the market is asking for? And I think we basically concluded that politicians won't vote for this until the alternative is worse. And the
대응
alternative
이어나가도록
needs to
하겠습니다.
get worse before they vote for it. And we're just not there yet, which means things can get worse in the UK, they can get worse in France before the corrective action is taken.
This is John Farrow asking for the bond vigilantes to pick up the pace, make things worse so that things can get
Not
better.
what I want at
mean, that's a
all.
little bit. I mean, that's kind of the idea. I mean, what is the pressure? It's going to come from the bond market. They're the adults in the room. That's what everyone keeps saying. And the question is how much they have to push back before there is corrective action. And that is ultimately this sort of game of chicken that we keep talking about that isn't quite there yet this morning.
I don't think it's a game the UK wants to play.
Nobody wants to play.
Or France, for that matter. And let's see if there's a central bank willing to step in sometime soon, because right now I don't see signs of that either. That can change, but I don't see signs of that right now. Under 1 hour away from the cash open, let's turn back to the equity side of things. Bit of a downdraft this morning. We're lower by about 1% on the S&P and lower by a whole lot more on the Nasdaq and the Russell. With your morning movers, here's Danny Berger. Hey, Danny.
A really tough start to September, John, so you've got to find some positive stories where you can. Pepsi, by far, is one of the biggest winners today. It's a report from the Wall Street Journal that Elliott Management has taken a $4 billion stake in the company, an activist stake, hoping to turn around PepsiCo, which has been falling and lagging its peers. So those shares up 4 1/3%. But elsewhere, some bad news for the beverage makers. We had earnings from Constellation Brands, the beer maker. Really tough set of results. They see for the full year some of their sales declining between 4 and 2%. They cite the macro environment that not only is consumer demand weaker, but it is just frankly more volatile, and that makes things like judging their inventory increasingly hard. So those shares down 9.2%. Finally, some of the gambling companies, those are also falling on some news. A report from CNBC that you are looking at a new gambling venture opening up with Crypto.com and Underground Sports. So that means just more competition for the existing online gambling companies. So Flutter Entertainment and DraftKings both down by more than 1%, John.
Danny, thank you. Appreciate the update. Danny Berger, Matt Miller taking over things in about 26 minutes time. So look out for open interest at 9 a.m. Eastern time. That's some of the morning movers. Let's turn back to the labour market. Key data coming out through the week, including Friday's highly anticipated payrolls report. With a look ahead, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, let's pick up on what Danny said about trying to find some good news. Are we going to find any in this week's big data releases? August is over. It's the first week of September, and that means the big data numbers for the month get released for the most part this week. And we start today with the ISM manufacturing numbers. Are they going to show any kind of rebound, and what are they going to show us about prices paid? Factory orders, jolts. And the Beige Book tomorrow. Beige Book will get some interest. Thursday's a big day, not only for the markets, but for Lisa, because ADP comes out. And, you know, it's really weird, Lisa, that everybody in the markets is saying we're suddenly going to pay much more attention to ADP, since we don't necessarily know if we can trust the jobs report. We'll get a lot of attention paid to that. Jobless claims also on Thursday, and then Friday, as you mentioned, the August jobs report right now, 75,000 jobs created, expected, but given the revisions last month, we're going to be looking to see what the ISM, the ADP, the jobless claims tell us that might change minds among those who are prognosticating for Friday. What else to watch? A lot going on. Besides just the data numbers, we've got the Lisa Cook situation. The judge last week gave the plaintiffs, Lisa Cook and her lawyers, till today to file a response to the government's arguments. We don't know what happens then. Does she make a ruling, or does she ask for another hearing? We hope to find out something today. Stephen Myron gets his hearing on Thursday to become a member of the Open Market Committee, a Fed governor, and we're expecting perhaps a vote next week on the Senate floor. Alberto Musalem speaks on Wednesday. I put this on there because he's been one of the more hawkish members. Has he changed his mind? Is he more open to the idea of that September rate cut? And then, of course, we're all waiting for the administration response to that IEEPA ruling, because if the tariffs are on, if the tariffs are off, that's going to make a big difference to what the Fed does. We probably won't have a decision by September meeting, but we'll have something for them to think about, no doubt.
Mike, just before you go, ADP, can you just sit on the ADP report just for a few beats? Can you explain to us the relationship between ADP and payrolls more recently? And has ADP given us actually a decent look at what's happening with the labour market? And have we actually seen those downward revisions on NFP come down towards ADP?
Well, that's a possibility. ADP, of course, tells you you can't use their data to predict what the NFP numbers are going to be. And remember, these are private payrolls. They don't include the government side of the payrolls report from the government. But they have been closer now, given the revisions. And we have some big revisions coming next week to the prior year's NFP numbers. So they might become even closer then. But what is important is that the Fed buys the ADP data on a weekly basis, and they track it. So if the Fed is looking at ADP and the ADP numbers are bad, and last week Chris Waller said they might be, then that's going to really influence the market's thinking about what we might get on Friday.
Mike McKee, thank you, sir. Looking ahead to ADP on Thursday, payrolls on Friday. Stephen Myron coming up too. That's box office later this week. For those of you that follow these things, that really is box office.
Especially given the push to try to get him into the seat before the September 17th meeting at the Federal Reserve. Should be fun. Should be fun to watch. So let's see how quickly they can get this through.
I imagine some senators will be more fired up than others, maybe.
Are you thinking about somebody?
I'm thinking of the senator from Massachusetts.
Yes, I was about to say, the name,
perhaps.
last name rhymes with Barron?
Yes. Yes, just about.
Tarn?
Kind of.
Okay.
We can redo that another time. So this is live, by the way.
자, 여기서 청산 사인 드리도록 하겠습니다. 자, 청산 사인 드립니다. 수익 청산입니다. 자, 5개 학기 중 약 140만 원에서 수익 청산 사인 드립니다.
Let's talk about your data, the loss of confidence. Are you seeing that more pronounced? Or have we seen a bounce back as we come into the post-Labor Day period?
We have not seen a bounce back yet. It is still, after our sort of dip
주문
after
청산이
Liberation
완료되었습니다.
Day, it elevated a little bit in May, and it's still very similar, those numbers. Looking at sort of a trend or a possible emerging trend, it looks like younger consumers under 35, are feeling more negative than some older consumers. And we think in part this might be, well, in general because of cost of living, but one thing that we're also closely looking at is the end of de minimis and the additional cost for fast fashion and other items.
Hold on a second, Aaron. Are you saying that because people can't get their Shein packages and that's typically the younger individual, they're feeling worse? Is that what you're sensing?
I am sensing that could be the case, yes. So we've done some analysis. These packages that have come directly from China, other places from around the world that have really boomed the last few years. And in fact, 83% of e-commerce packages come de minimis, and they came in virtually without any tariffs on them because they came direct from China and elsewhere. And we think that the additional tariffs could add up to 0.2 of a percentage point on inflation over the next year. And, it could be a downer for younger consumers.
Taking a step back, there are two prongs to the consumer confidence side of things. On one hand, there's this question about inflation, which has been a really dominant theme over the past number of years. On the other hand, it's employment, and that's kind of what we're looking for to understand what the breaking point will be. Are they still confident that they will have jobs? Are they still confident enough to keep spending, even if they don't feel very good about it? Because they haven't always done what they've said they've felt when it comes to inflation.
Right. Right now, it seems that consumers still feel that the labor market is fairly healthy, although they're starting to reveal in some of the answering of some of our data that they sense that there's less jobs available out there, which is kind of interesting. So personally, they may feel confident, still continue to spend, but we do think this spending will be on sort of not on discretionary goods is where it will weaken, that non-discretionary goods is where consumers will continue to focus. And that when it comes to big purchases like appliances and automobiles, as tariffs increasingly have an impact on these, we just may see that confidence erode in the future months.
Aaron, let's talk about confidence, particularly about the labour market. I think there's a lot of confusion right now about whether the step down in payrolls for growth is leading towards an increase in labour market slack or not. What do the attitudes of consumers towards the labour market sound like now relative to where they were only 6 months ago?
Well, I think consumers recognize that the labor market is loosening, but consumers often
체결되었습니다. 확인 바랍니다.
So if they feel confident in their own situation, they will continue to spend generally. they may be a little bit more wary. But if they see, even though the unemployment rate has remained steady, if they sense that there's less jobs out there, i.e. if they lose their job, it will be harder to get a new one. That will certainly has a potential to impact their confidence.
I appreciate your time. You see that in continuing claims at the moment. Aaron McLaughlin there, the conference board. You see it in the conference board data as well. Made a note of this one, Bramo. I'm sure you saw the same thing. The share of consumers that said jobs were hard to get rose for a second month to the highest since 2021.
Yeah, and the ratio between hard to get versus plentiful has been problematic for people looking for some sort of positive sign. At what point does that start to impede confidence enough to create the sort of stagflationary fear that we saw earlier this year? Right now, we're not seeing it, and we've seen that the confidence surveys haven't always tracked what they're doing, and we're seeing the spending, at least in earnings, which is what is giving a lot of people confidence as well.
I'm seeing it in this market this morning. A loss of confidence. Equities down by more than 1% now on the S&P 500. That's the equity situation. If you turn to the bond market, 2-year, 10-year and 30-year bond yields higher across the curve, up by 6 basis points on 10s, up by 7 basis points on 30s over in the UK. In the United States, we're seeing a similar move. So it's the UK, it's the US, it's France. This is a global story that keeps building and building. Got glimpses of it over the past year or so, seeing another glimpse, another bout of it so far this morning.
You know, the point that you made, that normally when we see a freak out or a yippiness, it starts in Asia trading where there are fewer traders
주문 청산이
there that are actually
완료되었습니다.
engaging with futures, thinner trading. And then it sort of diminishes as the U.S. session opens. This time it's been the opposite. And what does this mean about sort of doubling down on the themes that we're talking about, or at least the mood of people coming back to work? Maybe it's just a moodiness. They don't want to get off the beach.
That's what you're putting this down to.
I think that people are coming back and they're saying, this is really concerning. Question about tariffs. Maybe just lock in some gains for now.
Extend the long weekend.
I think that's the message.
I'd be very happy to extend the long weekend. Got to cancel the opening bell.
I think that would be great. And then tomorrow it'll open great.
Cancel the opening bell. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. The Trump administration is preparing to take its case to the Supreme Court after an appeals court ruled that the bulk of Trump's global tariffs were illegal. Treasury Secretary Scott Bessent saying the appeal will emphasize the long-standing trade imbalances facing the U.S., as well as the need to curb the flow of fentanyl into the country. Meanwhile, Secretary Bessent also saying over the weekend the Trump administration may declare a national housing emergency this fall. He declined to list any specific actions, but Bessent told the Washington Examiner that housing affordability would be a critical leg of Republicans' 2026 midterm election platform amid tremendous financial disparities in housing. And gold prices climbing to record highs, punching above $3,500 an ounce at one point, as investors add exposure to the precious metal in anticipation of rate cuts from the Fed. Gold has risen more than 30% so far this year, making it one of the best performing major commodities. Traders are looking ahead to Friday's job print for further signs of rate cuts. That's your Bloomberg brief. John?
Yahira, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Kathy Jones of Charles Schwab.
자, 익손절가 타깃하게 잡고 다시 한번 매도 진입 사인 드리도록
체결되었습니다.
하겠습니다. 자, 진입가
확인 바랍니다.
133.25 매도 진입입니다. 매도 진입 사인 드렸습니다. 천천히 대응 이어나가도록 하겠습니다. 자, 현재 5계약 기준 약 30만 원 수익권에 있습니다. 좀 타이트하게 잡고
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative
자,
AI to
현재
the job.
수익권에서 매도 진입 대응 중에 있습니다. 매도 진입권 수익권에서 대응 중에 있습니다.
Tune in
자,
to
수익
Bloomberg
청소하도록
Business Week
하겠습니다.
Daily
타이트하게 보고
from the
수익
magazine that helps
청소해드립니다.
global leaders stay ahead.
수익 청소하도록 하겠습니다.
Bringing you
수익권.
insight on the people,
수익
companies, and
청소해드립니다.
trends shaping today's complex economy.
Planning very big things.
Plus global business, finance, and tech news
주문
as it
청산이
happens.
완료되었습니다.
Floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
자, 이어서 바로 6차 진입뷰 대기
Asia is at
하도록
the
하겠습니다.
forefront of some of the world's
자, 6차
biggest
진입뷰
stories.
대기
And
하도록
we're here
하겠습니다.
where the action starts in Sydney and in Tokyo. Get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
자, 현재 하락 추세가 어디까지?
This last inflation report showed hardly any signs of tariff-driven inflation. It's really hard to look at the inflation that we're getting and cry foul about tariffs. We think it's coming, but we have thought it was coming for several months now, and it hasn't shown up to the extent that we thought it would.
Matt Hornbeck of Morgan Stanley looking ahead to inflation data a week away, next week on Thursday, this coming Friday. Payroll's just around the corner. We'll get to the week ahead in just a moment. Want to turn to the price action. Equities, another leg lower. Session lows, down more than 1% on the S&P, down by 1.5 on the Nasdaq and the Russell as well. In the bond market, attention on the long end of the curve. 10s and 30s up by 7 basis points on 10s, up by 6 on 30s, and getting closer and closer to 5% on 30-year bond yields. Pointed out a few times already this morning, it's not just a move in America, it's a move made worldwide. We're seeing it in France and the UK. I think also worth pointing out on a 10-year maturity, yields in America are actually lower on the year by more than 20 basis points. In the UK, they're higher by more than 20 basis points. In France, they're higher by more than 40 basis points. So the move we're seeing elsewhere, so far in 25, much more dramatic.
Yeah, decade highs when it comes to European bond yields, although in the United States it's coming with a question mark. Why are yields higher? Is it an inflation story or is it a growth story? And that ultimately will decide whether this is a good thing or whether it's a bad thing for equities and other risk assets.
I mentioned the week ahead. This is how things are shaping up. Later on this morning, first data point of the week, 10 a.m. Eastern Time, ISM manufacturing.
체결되었습니다.
Look out for
확인 바랍니다.
President Donald Trump on Wednesday. JOLTS data, durable goods plus the Fed's beige book on Thursday. The ADP report, another round of jobless claims, and a Senate hearing on Stephen Miron's Fed nomination before we get to Friday. The main event, the big one, the payrolls report just around the corner. And the range, let's just say the range is already pretty wide for Friday. 115 at the high end, 0 at the low end, and the estimates are still coming through.
And how credible will the numbers be after the firing of the Bureau of Labor Statistics chief? And how will the administration message this, given their concern the first time around when we got the last jobs market report and some of the turmoil that ensued subsequently?
Kathy Jones, the chief fixed income strategist at the Charles Schwab Center for Financial Research, writes the following. The bond market is struggling for direction. Yield curve steepening remains the dominant trend. Kathy joins us now for more. Kathy, we're seeing that steepening again this morning in the US, in France, in the UK. Can you pick one dominant driver of things, Kathy? And if so, what is it?
Well, I guess the story is, well, there's two things. There's inflation being stubbornly high, and there's deficit spending that continues to increase with no checks against it. So you have these policies that really are incompatible with lower inflation and with lower yields, and that I think is driving the market in the long end pretty much around the world, and don't really know what's going to change that dynamic unless you get policy changes and or some sort of recession signal that actually pulls long-term yields down.
We had Matt Hornbach on earlier today, and he was saying that this actually is a good opportunity to buy the long end of the yield curve around the world, including the United States, if you are a long-term investor. Do you agree with that?
Well, real yields are high at the long end, so you could make the argument that if you're willing to ride out the volatility, that this is an opportunity. I'm not terribly enthusiastic about that because I think that opportunity will get bigger as we go forward, unless some big change happens. But I would say the bond market is telling you, not just here, but everywhere else, that it's worried about the path that we're on. And I don't see what's going to change that path anytime soon.
So in other words, you think that yields are going to go up even more. What do you think the pain point is that would actually prompt some sort of change on the policy front that would prompt you to see an opportunity?
Wow. I would have thought we'd reached that point already. So it's very difficult to say what the pain point will be. I suppose if we go up very quickly, we hit a liquidity problem, which in the U.S. is probably unlikely, but in other markets it could happen, where we start to see it very difficult to finance operations or to, get into the market in an orderly fashion, or a big drop in the dollar. Now, we've seen the dollar come down pretty sharply from its peak, but a bigger drop in the dollar might spur some sort of action from policymakers. But at this stage of the game, they seem willing to kind of ride through this and continue to do what they've been doing for decades, and that is cut taxes and increase spending.
Kathy, I've got to say, the US side of things is actually pretty stable. Some stability in the face of what's happening elsewhere. If you told me at the start of the year that we'd have yields down to 4.29 after all the policy changes we've seen over the last 6 months or so, I think a lot of people might be surprised from that we were approaching 5% before the start of the year, and now we're down to 4.30 as the rest of the world is freaking out. The difficulties for me lie elsewhere, in the UK, in France. And Kathy, I wonder if I could sort of frame this question differently, whether you believe the US can remain some kind of bastion of relative stability in the face of what's happening elsewhere.
Well, I think the U.S. still has that advantage, having the world's reserve currency, having the ability or some leeway for the Fed to cut rates. I think that there is some room here, but our call for the year was a steeper yield curve as these policies play out, and I think it's very difficult for the U.S. to see a lot of progress on the downside in long-term yields with everything going on in the rest of the world. So we have a bigger market, very liquid. We certainly have the capacity to handle our debt and deficits.
Yep.
We just don't seem to do it. And I think the market will continue to price in a higher term premium until we get some sort of coherent policy or a signal that the economy is really, really slowing down. And we might get that Friday with the jobs report.
Certainly seen those steeper curves, that's for sure. Kathy, thank you. Kathy Jones there of Charles Schwab, thank you very much. Bramo, let's just finish on that note. The US, in the face of everything at the moment, the US is looking pretty good compared to what's happening in the UK and France.
And you could say it's a bastion of relative stability. You put that well. Key question is going to be the labor market data. If it rolls over, how much do you end up seeing the dollar punished in a material way where you see true weakening, in addition to, yields coming down, but a sense that maybe the United States isn't the haven that it was in terms of growth and momentum?
Got a shortened week, at least, Bramo. Had a long weekend, shorter trading week.
I think
sprinkle of economic data.
There is so much going on this week, with Congress coming back, with this question on economic data.
What's your favorite?
Well, payrolls report is going to be really interesting, or maybe ADP report on Thursday. That could be most interesting. But I do think that the economic data is going to take front and center. Real questions, though. on the political side as well.
The fact that ADP has taken on this additional importance is amazing, isn't it?
What's your favorite?
ADP.
Hey, there you go.
Super excited
Absolutely.
for it. Coming up, Julian Emmanuel of Evercore, Kate McShane of Goldman Sachs, Libby Cantrell of PIMCO, Mark Urbana of Bank of America. They join us tomorrow morning. Looking forward to that. From New York City, this was Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the US. And the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the US. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Welcome to September. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, it is the first trading day of September. Stocks and bonds retreat as Wall Street returns from a long weekend. The market's fate comes down to the next 14 trading sessions with the jobs report, a key inflation reading, and a Fed decision all on deck throughout. And plenty of news on the corporate front, too, from Elliott's $4 billion stake in Pepsi to a packed pipeline of IPOs. Danny, what do you watch?
Well, September is the market test. We are failing it so far this morning. Look at what's happening to the Mag 7. NVIDIA, Amazon, Meta, they're all leading the big cap stocks lower in the pre-market trading. It's building off not just last week's move, but also concerns concerns of overstretched government budgets, inflation risks, the move in bonds you're pointing out, Matt, also weighing on
주문
this sector.
청산이
We're also
완료되었습니다.
watching, and it could be related, home building stocks after Treasury Secretary Scott Bessent said the Trump administration may declare a national housing emergency this fall. You see the home builders reacting negatively, and I kind of wonder, Danny, if this may worry the market because it means more fiscal spending, especially at a time when we might have to give the tariff money back.
I am totally there with you, Matt. It is just another thing, tick off the list of things to be worried about with long-term bond yields and higher deficits. And to that point, as you pointed out, we've returned from a long weekend to renewed anxiety in the bond market. Hello, September. Goodbye, summer. U.S. 30-year yields have climbed 5 basis points, while the U.K. 30-year yield has hit its highest since 1998. Valentin Marinoff of Credit Agricole thinks it's the vigilantes, not the data, driving the move in global long-end bonds.
I don't think data is driving the price action today. It's really the bond vigilantes in the developed markets that are driving the price action in the FX markets. We see the sell-off at the long end of the Japanese, the UK, even the European really bond markets intensifying.
Joining Matt and me now is Christine Aquino, Bloomberg's managing editor of Markets Live. Christine, what a painful start to the start of September. Summer is truly over, but there are so many things that could be driving this move. What can we pin it down to?
Well, Danny, I think, the bond vigilantes are definitely back, as Valentin mentioned earlier. And it's very interesting because it's playing out in such a way where you are seeing these twin declines in stocks and bonds, but that is primarily a question of what is going to win out at the end of the day, right? The benefit from potential Federal Reserve rate cuts as soon as this month on September 17th, or this idea of a longer risk of that fiscal situation playing out negatively for the bond market initially, which of course we know has a negative feedback loop back to stocks. And I feel like that is the tension between markets right now, that short-term hit from lower interest rates potentially, and then that long-term worry over the fiscal situation coming to head as September begins.
I don't know where I saw it, but tech stocks are seen as like very long duration assets. What is it? Eternal?
Like the infinite maturity.
Infinite maturity. That's right.
Okay.
Yeah. Or at least when bond yields are down, we call it that, and we say we like tech because of that.
Right.
That's right.
So is that why we see right now the big tech sell-off, or why else? Is it just market concentration risk, worry?
I'm sure it all plays together, Matt. I mean, of course, there is that question again, concentration risk, especially at a time when valuations not as high as before, but they are still near those astronomical heights. And then, of course, we got that reality check from NVIDIA last week. But then also, I think the question of, in a low yield environment, they are great stocks as a whole. They are relatively inflation proof when you're looking for assets like that in the stock market. In an environment where there are potentially inflation risks lingering in the background, and then, add to that this idea that potential imminent rate cuts from the Fed could stoke further those inflation risks. Then it really comes into question, is it really a good inflation hedge at this point if you want to buy stocks when you have all these risks coming together and coming to fore as we go back to real markets, back to school this September?
All right, Christine, thanks so much for joining us. Christine Aquino, they are from the Bloomberg MLive team. Type MLIV Go, I should say, to follow along with what's going on in this market. There's a lot there on what's driving yields higher and how that's affecting stocks. Let's turn now to the tech sell-off with Bloomberg Tech co-host Ed Ludlow. Ed, as we were talking about, there's concentration risk. That's a concern. Right. There's the idea that these are longer yielding assets. What do you see across the tech sector driving us down this morning?
I see the markets are split, right? Nvidia's been under pressure, and the main drag at the index level Friday, long weekend, in today and this morning, largely on news flow post-earnings. But most investors that we'd speak to would be sanguine and say, look, compared to 2000 dot-com bubble, even the financial crisis of 2008, the 5 largest Mag 7 names have just infinitely stronger balance sheets and much greater earnings growth than any technology company showed at that time. The data in the stories that we have on the terminal are very clear. In the period of earnings we just had at the S&P 500 level, you have 11% earnings growth from a year ago. For the biggest 5 Mag 7 names, you have 26% profit growth. And that's great. And, there is nothing to dissuade many in the market that will change. Thing is, it goes back to old-fashioned investing and having a diversified portfolio, because at the index level, if you have 30% of weighting in just those 7 names, that goes against everything that Danny Berger learned about investing. Isn't that right?
Thank you. I'm going to brush out my textbook, Ed, to figure this one out. But the textbooks might not help me with the politics of this moment, right? That's another theme that has been so dominant. And TSMC perhaps falling another victim to this, Ed. This morning we're learning that the U.S. pulled their waivers for China shipments of chip supplies. What's happening?
Okay, so breaking news story. This relates to TSMC's validated end user agreement, which allowed them to move gear to their mainland China facility in Yanjing. Basically, it's the same move that we saw from the United States last week, Friday, with Samsung and SK Hynix, where essentially any supplier associated with that facility in China has to get specific licenses in order to operate and pass on material to TSMC. The fundamental difference, but noting that TSMC's US ADRs are down significantly on this piece of news, is that TSMC has a very small footprint in mainland China. Basically a single facility that's run since 2018. By comparison, Samsung and SK Hynix have a lot of chip manufacturing in mainland China. But going back to what we were just talking about on concentration risk, you know, the idea that the markets are sanguine on some names relative to others is that you also have NVIDIA and the software names Microsoft, Alphabet, etc., Amazon. They are largely seen as being beneficiaries of US policy. TSMC is kind of caught in the middle, where America is trying to push them to do more in this nation while policing their activity outside of its borders.
Speaking of policing activity, we just have a breaking headline here that you can see on the bottom of the screen. Trump's LA troop deployment violated federal law. This according to a judge. We're going to talk later in the show with our Supreme Court reporter Greg Stohr about how the nation's highest court is letting these things slide. Let me get back though to tech, Ed, with you, because there's a story on the terminal about Tesla selling or getting only 600 orders for its launch in India, which is far fewer than had been anticipated. On the other hand, I don't know how much it matters if, as Elon Musk says, Optimus Prime is 80% of the future value of his company.
Okay, the reporting, Bloomberg reporting that around 600 orders, 600 for Tesla vehicles in India, which are priced at the entry level like $68,000, very high. Tesla had been very hopeful that they would hit a full government-mandated allocation of almost 2,500. So that comes in well below that. Starting in September, our sources are saying they might ship 300 to 500 to India this year. But you're exactly right. We've got Master Plan Part 4, an accompanying post on X from Elon Musk that basically says in the future, 80% of value was the word he used, but let's say revenue or profit or whatever it is, comes from a humanoid robot, Optimus. So what does it matter in the here and now, tracking sales of consumer cars to specific markets? Well, you know, Tesla often has a very distant timeline for its vision and stuff, but you know, India, just as with smartphones, is a potential giant market. So that's why we track it so closely.
Ed, thank you very much for helping us track it. It's Ed Ludlow of Bloomberg Tech co-host. Matt, it might just be Optimus, not Optimus Prime, by the way.
Yes, that was.
I think that's a transformer.
Was my mistake. It's not Optimus Prime, although the first one would be Optimus Prime.
It's a great point.
Yeah.
It should be called Optimus Prime. All right, let's get back to the market that is September. It is a tough month for stocks historically, and it's chock full of potential market-moving events. It includes jobs reports this Friday and a lot of jobs data like ADP and JOLTS heading into it. For more, we're joined by Michael McKee, Bloomberg's international economics and policy correspondent. Mike, it's back to school.
It's back to school. I was thinking Green Day this morning. Wake me up when September ends, because it's going to be a rough month. And we start with a lot of focus on the jobs report, of course. And it's not just the jobs report, it's the build up to the jobs report and where we go after that. We get the jobs report on Friday. Then next week, the BLS gives us a revision to a year ago's numbers that should show, at least according to Chris Waller's speech last night, that the economy created a lot fewer jobs over that time period, and that will have reverberations. September 11th, we get that CPI report, and then the Fed meeting on September 17th. After that, good luck. with everybody looking for things from the economy. On Friday, right now, the forecast is for 75,000 jobs to be created, but we have a lot of numbers between now and then that will bear on that, maybe get people to change their views. 258,000 in revisions last month. Are we going to get something like that again? And the unemployment rate expected to tick up a little bit. If that happens, that's something that the Fed is keeping a close eye on.
I'm supposed to ask you about Stephen Myron's confirmation, but I'm sure it's in the bag and it doesn't really matter because the rest of the board is probably going to vote for a cut too. What I wonder about is the potential for tariff refunds. Have you thought about this? Like, if a high court says the tariffs are illegal but gives them a stay until, the Supreme Court decides, is it possible that we have to give this money back at some point?
Oh, it's definitely possible if the Supreme Court, and this will go to the Supreme Court, rules that the tariffs were illegally applied, then they have to refund the money that they have collected, which will be very difficult because remember, the administration has made a big deal about how this is partially paid by foreigners, partially paid by importers, partially paid by consumers. How do you get your money back? Do you even know how much you paid? So that's going to be really difficult. They'll give the money back to the importers, basically. And then if Trump uses the other authorities he has to put tariffs on, then they'll start collecting those tariffs again. So it's money in one pocket and then out the other, it appears. But it is going to be very difficult for the government, particularly the longer this goes.
All right, it'll be very interesting stuff. Mike, we're going to continue talking to you about this for sure. And remember, Greg Storr coming on later to tell us that the Supreme Court has actually ruled in Trump's favor in about 18 of 21 emergency cases. So it's not likely to say that these tariffs are illegal either. Quick check on what's going on in futures. We do see equity indexes down pretty big to kick off what is historically a bad month. More than 1% a drop on the S&P futures, 1.5% on NASDAQ futures as big tech falls. And September, actually, if you look back, Danny, over the last 29 years, which is the most you can on the SEAG terminal function, you can see that September is absolutely the worst month and one of only 3 down months over that period.
It makes complete sense, right? Because you're lulled into a summer, people are away from their trading desks, they get back, and in this case, they say, oh my God, deficits are spiraling out of control, be it abroad or be it in the U.S., so let's freak out and let's treat the first day of September like we are today.
Yeah, and there's a lot of news today, as we've heard from Crystal C., and we're going to talk to her after the break. It is really a big deal for M&A, Labor Day weekend. Coming up, we're going to talk about the reversal of one of those deals. Kraft Heinz is splitting up the company. Just the latest move in the refashioning of the food industry. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg. Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years. Of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency?
Absolutely.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let's get now to high interest. Look at what's making headlines around the world. First up, gambling stocks under pressure following a report that Crypto.com and Underdog are reportedly teaming up to launch sports prediction markets across 16 states. It's a very busy space. We are also watching the home builders this morning after Secretary Bessent said the Trump administration may declare a national housing emergency this fall. It can't come soon enough for these three, which are all down today. And shares of PepsiCo are rising in the pre-market after Elliott Investments said it has built a $4 billion stake in the company. Elliott says it sees a path for a price increase of more than 50% from today's level in Pepsi. Danny?
Let's get more on that story, that $4 billion stake from Elliott in Pepsi. For more, we're joined by Bloomberg Deals reporter Crystal C. Crystal, it's a big stake, $4 billion. Do we understand what Elliott actually wants to do to try to turn around Pepsi?
So Elliott this time put out a deck, so rarely we get to see what they really think, but this seems to be focused on a North America business. North America business, in terms of beverage, Pepsi's losing ground. In terms of food, which they own Lay's, potato chips, and they are also slowing in growth. So this is a story about undervalue, which is the most popular activist thesis. And this is Elliott coming in and say we should be able to help you with your value.
What do you think they're going to do that? Like, which levers do they have to pull to make Pepsi more valuable?
So we're kind of in the early innings of this. The most popular things to do is probably to review the portfolio. With a conglomerate like that, it's always the thesis of bulk up versus breakup. In this scenario, you can totally see how they can pull like a Kellanova. You can see parts of the business are more under the influence of the Ozempic of the world, and you can potentially like carve out certain things. Or there could be more financial engineering, like the share buyback, like committing to some sort of, governance structure. So there are different things that they could do.
You bring up a point in consumer stocks, and it feels like every day we're learning about some new company that's deciding to split up. It was Keurig Dr. Pepper not that long ago. Today, it's Kraft Heinz. Is this a moment of stress? Is that why companies are looking not at roll-ups, but I guess rolling down?
So Kellogg was a great example of this. Kellogg was the one that started the whole trend. Like they broke it up into Kellanova and WK Kellogg, and both pieces have been sold off since. I think a lot of consumer companies are looking at this, having a soul-searching moment, thinking, is this actually better off? Like, are we going to unlock more value? And activists are seeing the exact same things. So whether it's Pepsi, whether it's any of the big conglomerates in any sector, will have to face this. Basically thesis.
Well, all of these companies, Pepsi, Kellogg's, Kraft Heinz, are under the stress of consumers wanting to eat healthier and GLP-1, weight loss drugs helping them choose fewer, Pepsis. The interesting thing, I think, in the Kraft Heinz story is that it's like a good bank, bad bank breakup. So the strong brands, the ones with the most growth, like mac and cheese, and Heinz ketchup, are going to be in one company, and the CEO isn't going to run that company. He's going to run the bad bank. He's going to run the Oscar Mayer wieners, right, and the Velveeta cheese. What's up with that?
You may want a more seasoned person to go with the brands that are less, growthy.
자, 현재 본장
That's a good
계장까지야.
point. Like when you see the breakup of
10분을
like
앞두고 있습니다.
high growth versus lower growth.
현재
Any
매도
breakup,
진입권 약
it's almost
100만
always a
원 손실권에
precursor to
있습니다.
potential
자, 대응
M&A deal.
이어나가도록
So
하겠습니다.
whether someone else comes in, the part that is higher growth, we call the flavor elevation business. It's like the condiments, you know, the ketchup, the mustards. There are players in the chemical space, you know, in the flavoring space, that could be a good buyer for that. So, you know, if you foresee that happening, you may want to keep your CEO with the remaining business.
What do you have against Velveeta cheese?
I don't have anything against it. I don't
Cheese
think
is only
I've
good
ever.
if it's radioactive color.
I don't think I've ever eaten it, but that's what the one you spray out of a can, right?
Yeah,
Is
they do
that-
that.
Yeah, one of the things.
Yeah. Okay.
Great.
I don't know if I would. I guess I would try it. I'll try anything, but it's not something you want to add to your diet on a regular basis.
No, or feed
right?
your kids probably.
All right, Crystal, thank you very much. Busy weekend, I know it was for you, so I hope you can relax this week. Crystal C. from our M&A team. Coming up, RBC's Lori Calvasina says expectations for higher inflation may be helping to boost equity prices. She joins us to explain next. This is Open Interest.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
자, 현재 진입권 개장 이후까지 대응 이어나가도록 하겠습니다. 자, 개장까지는 약 6분 앞두고 있습니다. 분량 개장까지는 약 6분 앞두고 있습니다.
Welcome to September, and we are kicking it off on a very cautious note. Higher bond yields putting pressure on stocks this morning. Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets, joins us now. Lori, it feels like it's picked up steam with September. To be fair, the long end has been going higher throughout the past month and some time. Why is it now that it seems that the pain is starting to trickle through to equities?
Look,
I think that equity markets in August were really focused on this interminable earnings season that just went on and on and on. Even last week, we had a number of different consumer companies reporting that kind of preoccupied people. But look, I think there's been a growing chorus, count me included, that has been warning about sort of the September scaries, the October angst. This is a weak seasonally, kind of part of the year. We tend to see equity flows fade. For the past 5 years, September's been down. 3 of the past 5 years, October has been down. And you can even go back to earlier years in my career, right, when August has been pretty nasty.
Yep.
So, look, I think the market, it was just sort of very laser focused on earnings. We've now finally gotten past that, and people are able to think a little bit longer term right now.
I look, as we were talking about before, I look at the SEAG function on the Bloomberg terminal, and 29 years is the most you can look at. But if you look at that far back, the average is August and September are the worst months, and then February is the only other month that's down historically. I want to ask about the tariffs. This news from an appeals court, a federal appeals court, came Friday night, and it was like the conversation at every Labor Day barbecue that I went to, and I went to them all weekend
Good for
long.
you, Matt.
So everybody's talking about it, and does it have any reverberations, do you think, in equities?
So look, I think to the extent the bond market is reacting to that, the equities are reacting to that as well. I mean, a bond market spook will, kind of do us in equities every single time. But I'll tell you, I took kind of a more balanced view in the piece we put out this morning. Wrote it last night very quickly. But if you go back to Friday night, when I saw that news hit, I said, I'd almost forgotten that the court case was even going on because we've been so focused on things like earnings, the Fed, there's been all kinds of other news coming out of DC. And I wonder if that's part of it today, to be honest. My assumption all along has been this court process was going to take a long time to play out. Right. I did go back last night and sort of go through what companies had said about the last court decision that went against Trump on the tariffs. Found very, very little. Most of it was in late May after that international.
All right, Lori, let's dig more into that later because we have to go to the break right now. Lori Calvasina, RBC Capital Markets Head of U.S. Equity Strategy, sticking around with us.
Take us inside and tell us what you can without violating confidences, what it's like to be in a board meeting of Berkshire Hathaway. You've got, for a long time, you had Charlie Munger, you have Warren Buffett still there as the chair, and you've got other people now on the board. Do people ever say, Warren, you're wrong on this? Or Charlie, you don't really know what you're talking about? Does that ever happen?
The difference on the inside versus the outside is really very limited. In other words, this is a company that's valued transparency, candor. I mentioned Warren and Charlie, their ability to teach. And so I would say there were no surprises being on the inside versus the outside because of that culture. I would say the one difference of nuance is it's just amazing how much Warren and
주문 청산이 완료되었습니다.
think about the durability of the business, how much they think about risk, how much they are determined that they are trying to build something to last, and the sense of responsibility they feel to their shareholders, the people that have their life savings in it. And that was one of the big lessons from Charlie in terms of our business, was to really reinforce this culture of stewardship.
진입사인 드리도록 하겠습니다. 자, 8차 진입뷰 대기하도록 하겠습니다.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Moments away from the start of fall trading, and it doesn't look great this morning. We're looking at futures that are off more than 1% on the S&P, more than 1.5% on the NASDAQ as the big heavy tech stocks, NVIDIA et al. Fall. You hear the opening bell, and you'll see it on the New York Stock Exchange. You've got Bed Bath and Beyond ringing the bell. So psyched to still be in business. And not just that, the company is up 82%. The stock is year to date. It's a meme stock. Obviously, they've lost almost all of their value over the past 5 years, like 90%. Bolsa Mexicana is ringing the bell down at the NASDAQ, which I always think is interesting when one exchange trades on another exchange, but it happens apparently a lot. Danny, what are you watching this morning?
Because just everyone wants to be in the U.S. That's the story, even other exchanges. But I am watching big cap tech, Matt. As you pointed out, a really painful start to the year for them. I should point out, if NVIDIA holds this loss, it'll be the 4th consecutive day that it posts a loss, the longest losing streak since March. Mag 7 stocks leading the pre-market lower.
체결되었습니다. 확인 바랍니다.
Concerns over stretched government budgets and inflation risk, Matt, as you've been pointing out, have been driving up bond yields globally.
Yeah, absolutely. And everybody from governments to corporates is moving to shorter dated securities. We'll talk about that throughout the program. We're also watching home building stocks after Treasury Secretary Scott Bessent said the Trump administration may declare a national housing emergency this fall. You see all these home builders down in a down market. The worst is luxury home builder Toll Brothers down 1.6%. Now, amidst this sea of red, there were two really bullish calls out over the long weekend. Morgan Stanley's Mike Wilson expecting stocks to build on their 4-month winning streak as Julian Emanuel of Evercore calls for the S&P 500 to rise another 20% by the end of next year. I believe that target is 7750, though they say that there are a lot of different potential scenarios. Lori Calvasina, RBC Capital Markets head of U.S. equity strategy, still with us here in the studio. And Lori, what's your take? I heard you on this morning with Nathan Hager, and you were saying, like, we're going to see a lot of volatility, and you've been forecasting that for the second half, but we still could end up.
Yeah, look, I think in the short term, over the next few months, September, October have been weak seasonally. We've got valuations bumping up against recent ceilings. For the AI trade, I mean, S&P 500 cap-weighted, NASDAQ 100, those are the real anchors. And then also, if you sort of think about funds flow, they tend to be weak, and we're going to get a lot of tariff commentary for companies in conference season, right? So I think there's a lot of good reasons to be concerned about chop in the next few months. Looking longer term, we haven't done a 2026 target yet. We think it's way too early to do that until you really get a little bit closer to the end of this year. Things like my sentiment models just aren't going to give you a good signal right now. Some of our valuation modeling, and we run a bunch of different scenarios, I can get you to like 63, 6,400 on some more conservative scenarios. I can get you up to like 7,000, 7,200 for next year on more optimistic ones. So I don't feel bearish on next year, but I think it's too early to really have a high conviction call.
It's a very polite and subtle dig from Lori there.
No, I think it's fair. But I mean, Julian also lays out like 7 different scenarios. So they have that modeling as well.
But to that point, I mean, there have been plenty of people who have said, Lori, how can you possibly be bearish on this equity market? As long as you're getting the hyperscalers spending the amount that they are, as long as you have the promise of AI and the productivity boost, how could you be bearish at all?
And look at today. We've got the NASDAQ futures, getting hit pretty hard in the pre-open. If you look to last week, we didn't sort of get comfort from the big AI names that reported. And what I noticed in the second half of August was that there was some AI skepticism that really emerged that really seemed to kind of pull some, optimism out of the market, even though we were sort of creeping up to these new highs. And one of the things my colleague Amy Wu Silverman on the derivative side always points out is there is a lot of risk from concentration. So I think to the extent that you're seeing maybe a little bit of loss of faith, even if it's just temporary because valuations are so bad, on this AI trade, that can pinch.
I will say to our viewers, Nathan Hager's radio program from 5 a.m. to 6 a.m. is like indispensable for me. I listen every day on the way to work, and you're on it quite a bit. I learn something every time I listen, and today I learned that A, you used to be big into small caps, and B, through that, you started connecting inflation and higher stock prices. Explain that.
Yeah, so, last week of August, frankly, it's quiet. A lot of people are gone. We're sort of like looking at things we wish we had gotten to a little bit earlier in the summer. And as a small cap strategist from like the 07 through 2014 period, I remember one of the things someone told me when I first launched on that space and was kind of doing work is small caps are inflation bets. Right, they were born in the late 70s and used to be able to do these really cool charts on inflation expectations against small cap performance. And it kind of broke down. But as I was sort of thinking about, why did markets just run so hot this
As you were
summer?
doing this research on your vacation vacation.
Well, no, this was after the vacation, but like when I was, sort of, cleaning up and, kind of getting to things I wish I'd been able to do earlier. I went back and I looked at a whole bunch of charts on inflation versus stock market performance and small caps in particular. Stumbled on ISM prices paid, which we use a lot for sector work, but we actually found it's done a great job of explaining year over year both S&P and Russell 2000 performance. If you go back, a number of years. Now, the last couple of years, it's broken down. So, is this a really sticky relationship right now? I don't think so. But over time, I think these charts may have gone back to like 1996 or kind of 2000. I forget exactly which starting point it was. But it's been a really robust relationship. And we knew that, energy stocks were acting a little bit better. I'm getting an earful of about gold from my, commodity strategy team. And there were these little hints that...
We haven't brought up gold yet today.
This is probably the first time I've ever brought it up proactively on television, I can tell you that. But, it just sort of, there were hints that people were putting on inflation bets. And I said, I wonder if that's what's going on with small cap. And so we dug out those charts.
But last week when we talked, Lori, you really poured some cold water on the idea that rate cuts are going to mean that small caps can outperform that time. And I got to say, maybe we take a victory lap this morning because it's starting to play out. Small caps are getting punished basically more than everything in the market this morning.
The small cap futures were down even more than the NASDAQ 100 futures. And, if you look at the relative ratio, RTY against SPX, it peaked last Wednesday. If you sort of think about what's been going on, there's been a lot of optimism about rate cuts. And so that's what I've been hearing about, frankly, from my clients and my salespeople. What we pointed out, and I give credit to my rates team. I spent a lot of time with them last summer when the rate cutting cycle was kicking off. And they talked a lot about how this cycle that was starting up was similar to the mid-90s. Well, guess what? That is one time, that mid-cycle adjustment cutting cycle, one time we did not see small cap embark on a longer-term outperformance trade. There was no recession, and it made us realize that it's the economic cycle against the backdrop of those rate cuts that gives small caps springboards. You either break the economy and springboard it out, or you need a hot economy, things like really strong ISM manufacturing, job growth accelerating. We're just frankly not in an environment right now where we're getting those things. We'll see about ISM, but in general, we think economists are flagging growth concerns on top of inflation concerns, and that just doesn't seem like a recipe for small cap outperformance.
We've seen also, I think I was reading a note by Meredith Whitney over the weekend pointing out that consumers continue to spend a lot but aren't making enough. So they're digging into their savings right now. And we just had a slew of consumer earnings reports. What's your take on the U.S. consumer?
So, if you go back to week one of reporting season, the financials all come out and tell you everything is fine, that the spending levels are good and the delinquency's down and the stats all look great and we're proud of the consumer for being value conscious. And then you actually listen to these consumer companies and the consumer is not feeling good underneath the surface and they're seeing it from a boots on the ground perspective. It's not a disaster, but the value consciousness has crept from the low income now into the middle income. So I'm seeing more and more companies talking about those stresses on middle income consumers. And even the high-income consumers, these discount stores are talking about high-income consumers trading down. So it seems to us there has been a response. It's slow. It's not, it's not kind of a bloodletting or anything like that, but we do see the consumer reacting to current conditions.
The consumer reacts, Lori, and Matt's been talking about the confusion of tariffs this morning. When you get court cases that maybe call into question whether these tariffs will last, what the income is this just another knock to corporate America trying to figure out how much and when to invest?
Well, that was kind of one of the punchlines of our note this morning was, we think uncertainty stays elevated. And on the one hand, you look at, okay, these tariffs getting knocked down in the court, maybe that gives you some hope. But we've been hearing from companies that they're seeing delays in decision making. And that has been part of the problem from the tariffs themselves, in addition to sort of the potential price impacts down the road. So even if it's for good reasons, right, are you encouraging corporations to just sort of sit on their hands and not do much? As opposed to kind of saying this is the operating environment we're in and moving on and proceeding. And I think that, to me, was kind of the biggest negative associated with what we heard on Friday.
Right, Lori, ending on a note of caution feels appropriate for today's markets. Thank you so much for joining us this morning. That's Lori Calvasina, RBC Capital Markets Head of U.S. Equity Strategy. All right, we're about 10 minutes into the market trading session, and it is a weaker day. You're looking at the majority of stocks easily moving down down, 440 of this S&P 500 moving down. What is it that is dragging us down? It is the tech players. It's the same thing we saw on Friday. NVIDIA dragging this index down by 11 points. Then Apple, Amazon, Broadcom, all of them under a lot of stress. There's a lot of some of the corporate news that seems to be moving us higher. Pepsi on that Elliott news. And otherwise, you're going to see some of the more safe stocks moving us to the upside. And that's what you see in the sectors, too. Everything is in the red this morning, except for consumer staples, which is, I mean, barely in the green, 0.01%. And then it goes healthcare, and then it goes energy, and then real estate, some of the bond proxies. Again, this is kind of your textbook safety trade. Matt, at the bottom, it is infotech. It is what we've been discussing, down 1.7%. If it is the infinite maturity asset, what happens when long-term bond yields are moving higher across the globe and you get near 5% here in the U.S., maybe this is what we get more of. And again, that is tech leading us on the way down.
Yeah, I think another interesting thing is something that we tend to ignore on this program, and Lori Calvasina says she's never brought up on purpose, and that is gold, right? We see another record high on gold. It continues to march higher and higher right now, and it had been so flat from Liberation Day, but over the last like 6 trading sessions, it just goes up, up, up.
And you know, the other thing I think this underscores is, where in the world are your havens? Can you buy bonds right now with inflation, volatility? Gold maybe becomes the option, maybe the only option for you.
Yeah, I think it's a fascinating issue. And when you said haven, it really brought that back to roost for me. Coming up, we're going to talk about Constellation shares after they cut guidance. Constellation seeing weak demand, particularly in high-end beer. Isn't that a haven? More next. This is Bloomberg Open Interest.
I think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to 0. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of
자,
our
이전치는
lives.
And laying the foundation
53.3위
for the future.
From finance to defense, AI to entertainment.
And from the road to the
나옵니다.
stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
Ed Ludlow in San Francisco.
Watch Bloomberg Tech.
자, 예상보다
every
하향세는
weekday.
Only
53
on Bloomberg Television.
발표가 되었습니다.
Welcome to September, welcome to the real markets, and welcome to this rude awakening. Stocks down across the board about 15 minutes into your equity session, led down by the NASDAQ, down 1 1/3% with those longer bond yields pressuring equities in a big way this morning. Let's now, though, get some of our top calls, some of the analyst action in focus this morning. First up, Deutsche Bank upgrading Frontier to buy, saying that the low-cost carrier is best positioned to benefit from rival Spirit's bankruptcy. Shares up 20.5% this morning. Next up, UBS has been upgrading Corning to buy, pointing to an AI-driven fiber growth exceeding expectations.
주문 청산이 완료되었습니다.
And finally, D.A. Davidson raising its price target on Alphabet. That goes to $190. They cite the company's competitive advantage in AI accelerator market. But everything AI, everything tech getting dragged down this morning. So those shares down 2%, Matt.
All right. Thanks very much for that. Let's turn back to the consumer now. Shares of Constellation Brands falling as the beverage company cut its fiscal 2026 guidance, citing weak consumer demand. Joining us now is Ken Shea, senior beverage analyst for Bloomberg Intelligence. And Ken, this is a company that's been shifting around a lot of the brands that it owns, selling off some of its, for example, wine brands, Mondavi and Mayomo, but it has Casa Noble, tequila, High West whiskey, and then a ton of beers that we know like Corona, Modelo, Pacifico, and so forth. What's the big problem at Constellation?
Yeah, hi, Matt. Well, the announcement today really reflects the continued slowdown in our high-end beer business. The brands that you just mentioned, Corona, Modelo, Pacifico, they all trade at a premium or command a premium. And so with the malaise in consumer spending, or at least cautious consumer spending right now, that's clearly a reason behind that slump. But also, I would point out, Constellation has even said that about half of their beer sales are targeted toward the Hispanic community. And given the weakness in, home building and for other factors, that is a demographic that's been particularly weak as well. So those two factors are really behind today's miss. If I just might add real quick, there's more than just economic pressures as well. I think what the companies like Constellation and others seem to be understating is that there's lifestyle shifts going on. The GLP-1 drugs, the moderation in alcohol, these are all things that are weighing on alcoholic beverage more broadly as well.
Ken, do you think that's why we keep seeing a lot of corporate action, be it Kraft Heinz, let's just talk about today, Kraft Heinz saying that it's going to split Pepsi, getting a $4 billion activist stake from Elliott Management. How much of this is a consumer sector under pressure and in need of change?
Well, I think you're right on there. And also, Keurig Dr. Pepper last week said it's going to divest coffee as well. The common thread here is that the cold soft drink business is a really good business. And so that's why Keurig is trying to get out of coffee. With PepsiCo, and I would say Kraft probably is that they're all feeling the pressure on the same things that Constellation is, in that the consumer's under pressure. They're economizing. They're buying less. They're deferring purchases. That we all know. But again, some of the structural issues of moderation, cutting back on sweet, salty snack, and the lifestyle dietary decisions are changing. And they're affecting different categories in different ways. And I think companies ought to be a little more forthcoming and candid in conceding that, like Brown-Forman did actually last week. They said, look, there's cyclical pressures, sure. We've had those in the past, but this is different. We have other factors going on. These may be longer lasting, and they're affecting all these companies.
All right, Ken, thank you very much. Those Pepsi shares up 3.4% this morning on that news. Ken Shea of Bloomberg Intelligence. Coming up, the U.S. IPO's market hot streak. Klarna is on deck to go public after its Wall Street debut was delayed earlier this year.
원자재 비용과
Is it finally going to happen? We have the details for you coming up next.
주요 원인으로 작용했다고 이제 해석이 되기도 하고요. 이제 기업들은 이후 향후 가격 상승과 공급망 불안에 대해서 재고를 쌓고 있다고 해석이 됩니다. 자, 9차 진입 사인 드리도록 하겠습니다. 자, 매수 진입 사인 드리도록 하겠습니다. 자, 매수 진입
체결되었습니다.
자,
확인 바랍니다.
206.75입니다. 자, 206.75. 자, 매수 진입 대응 이어나가도록 하겠습니다. 자, 진입가 206.75입니다.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines
자,
of
짧게
today
보도록 하겠습니다.
and what
해당
will likely be the
증권 짧게
headlines
보도록
tomorrow.
하겠습니다. 자, 수익 청산하도록 하겠습니다. 자, 수익 청산 사인 드립니다.
Every citizen should be investing
수익
in
청산 사인
markets.
드리도록 하겠습니다.
in all fields of science.
Watch Wall Street Week right here on Bloomberg.
주문 청산이 완료되었습니다.
You need to think about.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
자, 그리고 약 15분 뒤에 그 9분 뒤에 이제
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on with stocks to kick off the month of September. We're looking at big drops. So 1% down on the S&P 500. The same is true on the NASDAQ as you get some big, heavy tech stocks falling. I do want to point out that even as the dollar rises, investors are selling off longer-term debt. So here's the 10-year yield. You can see rising to 4.28. If you had the 30-year yield on here, you'd see it going to almost 5%. NVIDIA, the heaviest stock in the world, down 1.2%. I should say the biggest stock in the world and the heaviest stock on the S&P 500 and on the NASDAQ. All of these Mag 7 names, Meta, Apple, Tesla, all down right now. And Tesla had some disappointing news in terms of orders out of India, where it debuted.
체결되었습니다. 확인 바랍니다.
You have gold as kind of the only thing rising in this market. I think Danny showed consumer staples rising just a little bit, but gold stocks rising as the underlying commodity posts an all-new record high. 6 days in a row of gains, Danny.
Yeah, it's gold and it's dollar as your options of things that are doing kind of okay today. Maybe the IPO market will save us all, Matt. Klarna is looking to raise as much as $1.27 billion in its IPO. They're looking to offer shares for $35 to $37 a piece. It's expected to price on September 9th. Joining us for more is Anthony Hughes, who leads our equity capital markets team. Anthony, this is a company that had initially backed off of its IPO because of tariff stress. So how much of this is a test whether IPOs can come back into a market which, at least for today, still looks volatile?
Thanks. Yes, it's been a busy morning. We've actually had 5 IPOs launched this morning. Klarna was one of them, and perhaps the most high-profile one of those. But yes, having that many IPOs on the road at once, and they're all pricing next week, is going to be a test for the IPO market. But certainly there's a lot of confidence driven from recent performances, and certainly the interesting theme with these IPOs we've seen launched today is there's a lot of you could call fintech. There's a bit of crypto stuff as well, which has been a continuation of the themes we've seen recently, and most of these deals have been very successful. Maybe they haven't done as well as they did in the first few days as they did further along as they go along, but there's definitely a lot of enthusiasm. You would completely expect these IPOs to draw a very strong audience.
I look at a firm as a competitor to Klarna to judge how that may do. It's up 38% year to date. Is that a good thing for Klarna, or is a firm like taking too large a slice of the pie?
Yeah, well, I think Affirm being a little bit depressed earlier in the year was one of the reasons that Klarna was delayed. So obviously Affirm has had a pretty big run up more recently, and that's going to be the direct comp, certainly. That's going to be the company that people are going to be looking at to try and work out what's the appropriate valuation for Klarna. And basically Affirm had a big bump there last week, and that was perfect timing for this IPO. So, you know, I mean, buy now, pay later is obviously a big part of Klarna's business, and this is a theme in financial services, which has been, not everyone's 100% a fan of, but it's been fairly durable, and the firm's been reasonably successful. Had some ups and downs along the way, but it's been sort of fairly successful over time.
Anthony, also, whenever I see a company like Klarna, it makes me think, okay, the IPO market is coming back, but maybe just for the US, you get one of these big UK tech companies that decides to list here instead of abroad. To what degree does this just cement the dominance of the US market as the place that these international companies want to list?
Well, I think certainly companies with the tech flavour are looking to the US as probably a more logical place to list, simply because of the ability to get high valuations. Also, there's just a very well-established number of comps to look at to assess the valuation, and also this is where a lot of money is as well. So, you know, certainly for a company that's certainly styling itself as it's a financial services company, but it's also a technology company, and, you know, for tech companies, no doubt the US is a difficult place to be, you know, to list.
All right, Anthony, great having you on the program to talk about these IPOs. We're going to be watching, obviously, very closely, and we often talk to people from the NYSE and the NASDAQ about this. They're obviously thrilled. Bloomberg's Anthony Hughes covers initial public offerings for us. Coming up in the next hour, we're going to talk with Paisley Nardini of Simplify Asset Management about the cracks that she sees in the markets. We're certainly seeing them today. Plus, we're going to talk about LNG and ammonia with Woodside Energy. The CEO, Meg O'Neill, joins us. And there's a lot to talk about in terms of yields as well. Rising yields continue to pressure stocks around the world.
Yep, and you also see, by the way, energy prices also adding to that. Higher energy prices, higher LNG prices. What does Woodside see going forward as we look at the NASDAQ leading losses with stocks off by 0.9%?
자, 데이터 발표까지 약 3분을 앞두고 있습니다. 현재 5개 약 기준 약 100만원대 손실권에 있습니다. 자, 데이터 발표 이후 방향성 체크 후에 홀딩 및 청산 사인 드리도록 하겠습니다.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Astonishing day for US technology.
자, 잠시 후
Shaping the region's technology ecosystem.
발표됩니다.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
자, 데이터 발표되었고요.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs,
자,
the
이전
uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by
자,
news
고용
events.
Breaking market headlines and corporate
고용
news
부분도
from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Also streaming live on YouTube as well, so check us out there. This begins a
구매 물가
new
지수
era.
이외에는
Scarlett
대부분
Fu joining the show as co-host.
이전주보다
Thank you for having me.
She
Good
didn't have a
morning.
choice. What do you mean? Thank you for
No,
doing
no, I
this?
had a choice.
Oh,
I had a
she
choice.
always has
yeah.
a choice. It's in the
John
contract.
Tucker.
Come on. It's in the, her people talking to the people here.
I have a lot of people.
How long have you been at Bloomberg?
Too long to say out loud.
Really?
Yeah.
Well, I mean, John Tucker's. You can say it.
Less fewer than John Tucker's.
Coming up on 32, I think.
Okay, fewer years than him.
Fewer years than John Tucker. All right, so you're.
자, 해당 부분 데이터 정리해서
Great to have you on Bloomberg Radio. We're
하겠습니다.
streaming live on YouTube as well. Busy day. There's mergers, there's demergers. I don't know what's going on. The bankers are getting paid. We'll break it all down. Market drivers. We're going to talk to Isabel. Let you give us what's happening in the markets. Ira Jersey, Bloomberg Intelligence, Chief U.S. Interest Rate Strategist. On the eco data here, we got some ISM data here. I don't know, a little bit weaker than forecasted, but we'll break it down. Ann Maletti, Head of Equity Investments and Chief Diversity Officer at Allspring Global Investments. We'll get her thoughts on the markets. Kraft Heinz, talking about breaking up the company. Jen Bartashis, who covers all that retail stuff for us, she'll join us and break it down. And Sam Fazeli is going to join us. I don't know where he is. It could be London, it could be some Bordeaux, who knows, but we'll talk all things global healthcare, so that's always a good thing. But let's kick things off, as we do here, with John Tucker and a Bloomberg Business Flash.
All right, thanks, guys. And this Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to interactive brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. We are data dependent, so let's start there. At least the headline number weaker than expectations for the ISM Manufacturing Index, 48.7. We're looking for a number about 49. And the prices paid index actually coming in lower than expectations. New orders also higher than expectations. Remember, 50 is the dividing line, so at least on a headline basis, this shows continued contraction for the second biggest part of the U.S. economy.
현재 수익권에서 약보합권 왔다 갔다 하고 있습니다. 현재 낙폭이 큰 만큼 드리는 사인에 집중 부탁드리도록 하겠습니다.
Dow down 288 points. NASDAQ 100, 219 points lower. And I can tell you, one of the nicest people I've ever worked with, our own Scarlett Fu.
Wow. Oh, look at this. This such a great welcome. Thank you, guys.
Such a supportive environment in here.
Aren't we?
In this little bubble here.
We're such great guys, aren't we?
Exactly. John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Scarlett, what are you looking at this morning? Tons of news flow. And I guess summer's over.
Summer's over. Everyone's back. You know, the big food deals that John Tucker was just talking about, I feel like there's a common thread there between PepsiCo being targeted by an activist investor and Kraft Heinz breaking up. And that is that the food industry is going through some massive structural changes.
Yeah, the headwinds are really tough there. I know just with the inflation, we've switched to a lot of store brands. You know, I don't know. It's tough. And we saw, you know, Kellogg broke up you know, a couple of years ago.
Yeah, to the cereal company and the snack company.
Yep, and then they were bought by
Mars
private companies. So I don't know if that's going to happen here with Kraft Heinz. I don't know what's going to happen with Pepsi. You could certainly see Pepsi. They got the snacks on one side and the sodas on the other. Maybe that's a natural break. I don't know. But
well, not so long ago, it was the rage to combine them, right? For scale, for consolidation, for you know, diversity.
So are there dis-synergies here when you break them up? I don't know how that all plays out, but I'm sure the bankers will spin it positively. We had some data come out here today. The ISM manufacturing, prices paid, new orders, employment, a little bit weaker than expected. But let's break it down. Susan Spence, she's the chair for ISM manufacturing PMI at the Institute for Supply Management. Susan, again, the headline ISM manufacturing 48.7. It's better than last period, which was 48, but below the consensus of 49. What do you make of some of these numbers today?
Good morning, Paul and Scarlett. Really happy to be here. The 48.7 is a bit higher than our July reading, about 0.7. Based on what our panelists are telling me, not really surprising. You mentioned earlier in the beginning, new orders did jump into expansion territory. We really love to see that. That's up to 51.4, a 4.3% leap. However, the production number is back in contracting. So it wiped out almost all of that, down 3.6. So we're left with a flat PMI. Our conclusion is while there's an uptick in new orders and as customer inventories continue to be too low, at some point reordering has to happen. I'm not sure I'd consider it a trend. We also pay a lot of attention to employment, which is the contraction has slowed down a bit. But the, you know, overall, the demand indicators, which are new orders, new export orders, backlog, and customer inventory, they continue to be mostly weak, at least 3 of them still in contraction territory.
Susan, what are some of the commentary from the folks that you survey? What are they telling you? How are they feeling on the ground?
So the things that jump out at me, number one, 90% of our panelists are still mentioning tariffs in a negative way. For every positive comment we have 15
주문 청산이 완료되었습니다.
The other trend is the employment comments. You know, we look at, you know, who's hiring versus, you know, how many are hiring versus
그리고 발표된
not
ISM 제조
replacing folks
PMI
that have retired or layoffs. It's still, unfortunately, for every hire comment, there's 4 that we're not hiring backfills.
자, 일단 제조 PMI,
we're closing
ISM 제조
factories.
PMI는
So
48.7로
I think we're going to see
6개월
that turn
연속
around as
위축
new
국면을
orders,
이어가고
new
있고요.
export orders.
자, 신규 주문이 51.4로 6개월 만에
with the
확장
uncertainty
저항했으나
still with
생산은
the tariffs, we
47.8로
understand that there are deals
위축
and there are
구간으로
outline agreements,
돌아왔습니다.
but it's still an issue, and
자,
their
고용은
customers are holding back
43.8로
where they can.
7개월 연속
Prices index, you
위축세를
also
보여주고
mentioned,
있고요.
it is eased
자,
a bit.
기업들이
It's still
신규
increasing it
채용보다는
slower,
인력
but this is our
감축력,
11th
기존
month
인력 관리에
with the prices index above
집중하고
50.
있다고
So
해석될 수 있습니다.
not good. You're
자,
starting
가격
to see, of
지수는
course,
63.7로
you know, inflation
원자재
concerns.
가격이
So we really
11개월
do need
연속
to see, number one,
상승을
deals
했고요.
made and not changed. Certainty.
상승 속도는
People need to
7월보다
believe
소폭
that these
둔화되었습니다.
tariff deals, once they're made, aren't going to just
자, 철강
get reversed, and that's still
알루미늄
on their mind.
관세가
So a lot of this
주된
reshoring
영향이라고
that this
판단이 되고
administration's
있고요.
been talking about, maybe not
자,
seeing it
관세가
yet. Is,
가격
do your
상승과
respondents feel like that's something that they
불확실성의
expect
주요
to see in the
원인으로
coming months?
Yeah, there
자금했다고
weren't a
판단이 되고
ton of
있습니다.
comments about, we're moving things back to the
자,
U.S.
11차 진입
My
비용
experience
대기하도록
being in
하겠습니다.
aerospace for 30 years and
11차
the last
진입
10
비용 대기하도록 하겠습니다.
in transportation logistics, depending on the industry, of course, it takes a while to open a factory. And so with uncertainty about tariffs, the input raw material prices, I think there's still a hesitation for capital investment. And what if things change again? So it is one thing to pick a direction and stick with it, but I'll still use the word whiplash because it's still coming up.
Yep. All right, Susan, thank you so much for joining us. Always appreciate getting a few minutes of your time. Susan Spence, she's the chair for ISM Manufacturing PMI at the Institute for Supply Management. Let's get back to the markets here. We are selling off here. The S&P off about 60 points, and the Dow's off 300 points, and the NASDAQ is off 235 points. So let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Scarlet Fu, and we're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
I'm looking at Constellation Brands. Shares are down by 8%. The stock is STZ, that's the ticker. So this comes after the company cut their fiscal 2026 guidance. They cite weak consumer demand, which will, of course, hurt inventory and really cause a rebalance at the distributor level. We have Citi analysts saying they expected a cut in their note, but the opening of a negative catalyst was unexpected. The magnitude was worse than expected. The new forecast appears de-risked, and Bloomberg Intelligence also says that the guidance cut stems from weaker than expected beer sales, which reinforces the, quote, extraordinary challenges facing alcoholic beverages. I feel like we've been hearing this for a long time now, that Americans are really just drinking less alcohol.
Maybe they need to get more into non-alcoholic beverages.
Yeah, and they also make Modelo and Corona.
Yes.
So I'm thinking there's a correlation.
I did try a non-alcoholic beer over the weekend from Heineken.
Yeah, how'd that work?
Did you like it?
Pretty sad.
They do say if you
Did it taste similar?
No.
In a word, no.
They say you should just, if you want the real thing, just drink the real thing. If not, just drink something else.
Okay, very good.
Don't even pretend. All right, you're also looking at Elf Beauty.
Elf Beauty down also by 2%. So this comes after Deutsche Bank downgraded the cosmetics company to hold. The analyst there, Stephen Powers, cites valuation with the stock up more than 150% off their April lows. He also notes that there's just no clear upside in the near term, and he argues that any reinstated guidance are likely to be conservative. And this is interesting to me. He also notes that the commentary on social media channels of Elf has become increasingly negative. And then, so I'm not that plugged into this world, but then I looked earlier this morning and it was kind of negative. Like in August 2025, Elf faced backlash for a certain campaign, and Rode, which is the product of a celebrity, has just received ongoing criticism for their product. This is Hailey Bieber's brand.
Wait, so marketing is playing a role here in why people are steering away from Elf Beauty products?
Yes, and just, I mean, now with one wrong tweet or one bad review can really just cause a brand to spiral. I mean, that's the scary thing about social media, or the good thing.
All right, very good. One more, we got Frontier Group. What's going on there?
Frontier, this is an exciting stock because it's edging up by almost 20%. It actually opened 23%. That's the highest in 5 months. So Deutsche Bank raised a recommendation to buy from hold. They said that the company is best positioned to benefit from Spirit's bankruptcy, which is a rival. So like Spirit, Frontier is a low-cost carrier. The analyst there said that currently 35% of Frontier's network overlaps with Spirit. So the Spirit's filing of bankruptcy for the second time this year is going to bode well for Frontier. He estimates the overlap should increase to about 40% by the December quarter. So I guess that's good news for Frontier. One company's bad news is another's good news.
The discount airline sector has had a really, really hard time. It always amazes me because everyone I know is looking for cheaper airline tickets, but we have these carriers and they have been trying to look for ways to increase their exposure to higher end customers.
That's exactly right. And I feel like it's not really low cost when everything adds up. I mean, there's a joke
the nickel
now.
and diming.
Yes, there's so many memes that soon there will be a standing
Yeah,
right, and I think people will still take that.
Who's it? Ryanair that charges you for the bathroom, or at least at one point they were. They supposedly thought about it.
Yeah. I don't know. I'm flying over to Italy Friday night, and if I get charged for a bathroom, I think that's gonna be a problem.
That'll be the final straw.
We'll talk about it in the show.
Yeah. All right. Thank you very much, Isabel Lee. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The business of sports, Scarlett.
Yes, it's fascinating. I'm all over that because we have the Power Players Conference today, this week, I should say. I'm looking so forward to it that it's, I think it's today. It's actually on Thursday. So we're going to have a lot of athletes and folks from the business of sports industry in our offices.
Nice.
Thursday, but in advance of that, it's perfect timing. Apollo, the private equity alternative investments giant, is going to launch a $5 billion strategy to invest in sports deals. So this is yet another major asset manager targeting this sector, looking at it as an entirely singular asset class.
It is. It's amazing how, and what I've noticed is, I've heard from a lot of people, I'm priced out of the NFL. Maybe I'm even priced out of the NBA. I'm priced out of the English Premier League. But I can do like pickleball, all these things that are getting real investors, real money into these secondary and tertiary sports.
What does it mean for the consumer, the people who watch this? Is it getting more expensive or having less access to watching sports on TV for free?
I don't think there's that impact. I just think I think what's interesting is from Scarlett's perspective, that more and more institutional investors
주문 청산이 완료되었습니다.
whether it's the NFL or something much lower, as a real viable asset class like stocks, bonds, commodities, and because the values just keep
right. They're going to professionalize it. They're going to add new financing options to it. They're thinking of it as a huge market with more things to add on to. And it's going to change. I mean, it's going to get bigger. Growth is the priority here. And so for fans of lacrosse, they might be able to see it on TV, whereas before they weren't able to.
Yeah. So, I mean, you know, and then even Ira Jersey, he's a part owner of Real Central New Jersey. It's a junior minor league soccer thing, but
is he really?
Yeah, you got to talk to him.
I mean, I've seen the scarves of the football teams, the soccer clubs in his house.
Right. Well, and you see what we used to call Red Bull Stadium, where the New York Red Bulls play over in Harrison, New Jersey. It's now got a sponsorship, Sports Illustrated.
Sports Illustrated is not what it used to be, though.
No, but still, they're paying money for Major League Soccer, which, you know, so the money's
10 years ago,
and
that wouldn't have happened.
And the institutional money is everywhere. But if you want to buy into the, certainly the NFL, the NBA, you got to be a billionaire, not a millionaire anymore. Those days are over, and you have, so it's just
or private equity firm increasingly.
Yes. Which is interesting. Now, private equity can buy up to 10% of it.
Yeah, I mean, there's a cap for it in the NBA and in the NFL. But John Tucker, you don't look convinced. You look pretty skeptical still.
I have this problem with private equity getting into everything and changing the way everything
확인 바랍니다.
Well, it's their opportunity, but as a consumer,
the consumer's loss.
Increasingly,
like the housing market, for example, that.
Cutting back on things that are consumer-facing, like the consumer, just dealing with customers, these various businesses, it's changed radically, and I don't think for the good. Anyway, that's my 2 cents today, and I'll stop talking.
Apollo getting into the business, so that's solid there, and we'll see where they want to go with that money there. So the business of sports. So this conference, you're bringing some smart people together.
Yeah, we have a ton of smart people, and Jason Kelly and Alex Rodriguez will be doing a live taping of their show, The Deal. I'll be speaking with the NHL's commissioner, Gary Bettman, as well as the owner of the Washington Capitals, Ted Leonsis. We've got Carl Anthony Towns of the New York Knicks coming on as well. Yeah. Cool. So, and the head of the PGA of America will be there too. Yeah. So
great stuff.
All kinds of important sports people talking about the business of sports.
Ted Leonsis made his money originally in
AOL.
Very good. Yep, very good. Back when it was America Online, stock symbol AMER back in the day. Who was the third analyst to cover the internet on Wall Street?
Paul Sweeney?
Paul Sweeney with America Online initiation
A+
of coverage.
right now.
So there you go. S&P 500 is down 57 points. That's 0.9%. The Dow is down 290.6%. I call that out for John Farrow. NASDAQ down 215 points. That's 1%. So off the lows, but solid red across the street. And Tom Keen's VIX is higher. This is Bloomberg.
자, 여기서 수익 청산 사인 드리도록 하겠습니다. 대단기권 수익 청산 사인 드립니다. 예약 기준 약 100만 원에서 수익 청산 사인 드렸습니다.
주문 청산이 완료되었습니다.
자, 이어서 13차 바로 진입 사인 드리도록 하겠습니다. 자, 13차 진입 사인 드리도록 하겠습니다. 자, 이전과 동일하게 두 개 약 운영하도록 하겠습니다. 자, 매도 진입 사인드립니다.
체결되었습니다. 확인 바랍니다.
2.50입니다. 자, 매도 진입 사인드립니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Stocks continuing Friday's tech-driven declines. Global bonds, a lot of action there as well. Broad retreat there, led by sharp declines in longer-dated debt. You have the 30-year yield right now, well, 3 basis points higher. That's at 396, I'll call it. The U.S. has revoked Taiwan Semiconductor Manufacturing authorization to freely ship essential gear to its main Chinese chip-making bases. The end result potentially curtails the production capabilities of Taiwan Semiconductor Manufacturing. And Kraft Heinz splitting into 2 separate publicly listed companies. One's going to focus on stuff like Heinz ketchup and Kraft mac and cheese. The second's going to sell the grocery products like Oscar Mayer hot dogs, Lunchables, or kind of the dogs. Klarna Group and some of its shareholders seeking to raise as much as $1.27 billion. This is the fintech company reviving an IPO. It was delayed earlier this year because of the market volatility. S&P 500 down 56, down 0.9%, 6403 on the index. The Dow down 326 points. NASDAQ 100 down 218. It was kind of an interesting interview on CNBC with the CEO of McDonald's.
Wait, what? Where?
There was another network that sometimes we look at. But he says global consumers are making choices to avoid American brands because perceptions of the country are becoming less positive. And of course, you know, with its global footprint, it matters to a company like McDonald's.
It's an ambassador of the U.S.
Yeah. Oh,
McDonald's.
God help us. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Happy first day of Scarlet Flu.
In September.
Everybody. Yes, in September.
The first day of
well,
September.
yeah, on Bloomberg Intelligence.
That's right. Very good. All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So check us out over there. The yield on long-dated UK bonds rose to the highest since 1998, and the pound fell, pressuring Prime Minister Keir Starmer's government to regain the confidence of investors. Let's talk about government bonds. We talk to our next guest. We usually talk about U.S. government bonds, and we'll get to the U.S. Treasury market. But Ira Jersey joins, a chief U.S. interest rate strategist. Ira, I know clients have been probably calling you saying, "Hey, what's going on in the UK government bond
주문
market?"
청산이 완료되었습니다.
Yeah, so I'm also happen to be the team leader for the Bloomberg Intelligence global team.
There you go.
So I spoke with Hugh Worthington this morning. He's our European rate strategist. And, you know, I think we agree that a lot of the bond market angst basically stems from two things. One, it's higher and more persistent inflation and inflation expectations. And in the UK, that's a little bit different than the US, because in the UK you have the market is pricing for basically 4% policy rates for the next few years, and 5 years basically, and then on top of that you then have to add a risk premium to that, and that's where you wind up getting plus 5+% bond yields in the long end. And then second is this continued supply fear.
체결되었습니다. 확인 바랍니다.
G3 plus sovereigns, whether it's the US, the UK, Germany even now, you have supply concerns because deficits are continuing to be very high, and in some cases like Germany and Europe will probably grow further. And because of that, you have this long-term debt sustainability fear, so people are demanding a little bit more of a premium for long-end bonds.
That all makes a lot of sense, but that was the case a week ago as well as a month ago. What's changed today and this week to get bond vigilantes to go in there and target the UK long bond?
Well, I would say that in the UK in particular, it's been a long trend, right? It's not new. It's been going on, like you mentioned, for several weeks now. Now, it's not a straight line, right? Like that's the thing. You get a little bit of optimism that maybe inflation's going to be a little bit better. The employment situation in the UK is not necessarily great, and there's a lot of people who, like myself, who are, look at the whole mosaic of what's going on in the economy. And if you're going to have relatively weak labor market, whether it's the number of jobs and wage growth, if that starts to moderate very substantially, it's hard to see prices continuing to increase at the same pace. But the sticky price thing, I think, is something that did change over the last couple of weeks, and that's one of the reasons why you see the slightly higher bond yields. People are asking me about the U.S. and like, hey, why is the U.S. 30-year yield up 4 basis points today, although it's come down a little bit since then? And the answer is because yesterday the UK and Germany sold off, and today the UK and Germany are selling off. So it's the entire kind of developed market bonds that are selling off more or less in unison.
And Ira, there are some long-term inflation concerns out there in the marketplace stemming in part from tariffs here. Could we see something here in the U.S. Treasury market like we're seeing maybe in the UK and France?
Well, it's not impossible, and it wouldn't surprise us if we retested the cyclical yield highs on for the 30-year Treasury. And there are other factors, like if private foreign investors start to reduce their holdings or don't buy 30-year debt in the U.S. as much, you wouldn't expect to see the same. You could expect to see similar reactions where you just don't have enough buyers for the number of amount of debt outstanding. That being said, U.S. domestic, what we call LDI, liability-driven investors, whether it's insurance companies or pension funds, they still have a lot of cash and like to buy Treasury securities and other long-term U.S. dollar-denominated assets when you get yields at or above 5%. It's just like a natural place for them to start buying. It fits a lot of their investment needs. And those domestic buyers, they don't have alternatives, right? And part of the issue is that there's not enough 30-year corporate debt outstanding that they want to be able to buy.
주문 청산이 완료되었습니다.
Treasuries are not worried about default. But at the same time, you have the Trump administration saying we're not going to issue more long-term debt than we have been. So you have supply and demand that maybe is more in balance than you might think in the U.S. But we will be driven a lot by what's going on in other jurisdictions.
Ira, thanks so much for joining us. Always appreciate getting a few minutes of your time. Ira Jersey, Chief U.S. Interest Rate strategist and soccer aficionado for Bloomberg Intelligence. Let's get back to these markets here. The sell-off continues with the S&P off 59 points, now off 340 points, and the NASDAQ off 200 points. I guess maybe it's true what they say about September not being a good month for these markets. Anne Maletti joins us. She's been through a few cycles in her day, head of equity investments and Chief Diversity Officer at Allspring Global Investments. Zoom from Naples, Florida. But Anne always lands in the right places. And talk to us about these markets here. I feel like I got to be in the markets, but I got to tell you, I think a lot of people are concerned about valuation here. Even though we had a really good earnings cycle, I think there's a lot of concern out there, some angst. What are you telling your clients?
I think you're right, Paul. There is a lot of angst. I mean, the equity markets are expensive by almost any measure investors use, and you know, you having a long history in the space probably certainly see that yourselves. But as you and I both know, timing, valuation is kind of one of the worst timing tools in the market as well. And so, although there is uncertainty around where valuations are, you are still seeing some positives. Earnings are still increasing, margins are still increasing. That's generally been positive. I think as we dissect the market, it's time for investors to be more tactical, and that's what we're telling people, and more active. So don't just stay invested the way you were, be more diversified. And the markets are broadening out. There are other places to look rather than just kind of the concentrated areas that have worked.
So if you're tactical, does that mean staying away from equities this month? I'm still not totally clear on why September is so seasonally awful for U.S. equities.
You know, I'm not sure either, Scarlett. You look at the history and it is kind of daunting when you see September. But maybe, you know, the market is just like us, and it's just sad to see the end of summer come over and there's a little downward pressure from that. But look, there are some tensions going on, as we all know right now. There's question marks about tariffs. There's question marks around what kind of rate decreases we're going to get. Policy question marks here, whether or not we're going to have a government shutdown. There's a lot of things from a macro standpoint that give investors a little bit of angst here. But to your question, I think you do have to stay invested. If you sell, you have to be right twice. You got to be right on the exit, and you got to be right on the re-entry. And history would suggest that staying invested through any of these cycles, short or long, actually have been way more beneficial to equity shareholders and to investors at large.
And we saw a lot of investors move money, talk about moving money earlier this year out of the U.S. into other parts of the market, maybe European equities. How do you think about that?
Yeah, you know, this is an area where late last year, despite my history long being in the domestic markets, one of the things that, you know, when I talk to our own teams about internally, one of the things I really understood well is that the dollar was kind of probably near its peak. And if you get a tailwind from a softer dollar, that's going to be actually a good tailwind for emerging markets. And I really kind of believe that that could happen. There was also clearly dynamics around emerging markets that our teams who spend day and night in those markets believe were also positives. So that area of the market has done well, continues to do well. In fact, in the last quarter, the MSCI EM index beat the S&P 500 index. And I think it's kind of been a sleeper of a story, but it looks like it can continue. And I think, Paul, though, the one other thing that I realize is only 5% of global assets are really dedicated in the EM space right now. And if you just get back to a longer term average of 6.5%, that could mean another 500 billion could flow into this space. And so because, you know, investors largely just haven't been here, any kind of demand push forward could also accelerate the performance of these areas.
So it's tremendously underowned is what you're saying. What's the obvious place to go to within EM?
자, 현재
Is it by
진입권
sector or is it by
약보합권
country?
진입하였습니다. 천천히
Well,
대응해
our
나가도록
investment teams, and we
하겠습니다.
have two EM teams that really spend a lot of time, and they are both focused on a regional basis, but also on a sector basis as well. And some of the same challenges that we've seen in the domestic markets, or some of the same focus areas, have also been there in the EM space. So while China is a large part of the EM market, it's had its areas that have worked and its areas that have not worked. So that's clearly an area you cannot ignore, China. But if you look at other areas of the market, including Japan, South Korea, other areas, those are also areas of interest to our teams. And India, which had its time in the sun last year, and now some softness.
All right, Ann, thanks so much for joining us. Ann Maletti, she's head of equity investments and chief diversity officer at Allspring Global Investments, based in Milwaukee, Wisconsin. Again, here's my call again. You've heard me say it before, pound for pound, some of the best investment professionals I've ever encountered are in Milwaukee. No idea
Milwaukee?
Why. Milwaukee. Pound for pound, one of the best. This is Bloomberg.
자, 현재 미시황 분석 중에 있으면 현재 진입권 길게 보고 대응 이어나가도록 하겠습니다. 자, 정리된 시황은 이제 급등 링크에다가 올려드리도록 하겠습니다. 자, 해당 링크 잠시만요. 접속하시면 기업별 및 미시황 실시간으로 업데이트 해드리고 있으니 참고 부탁드리겠습니다. 자, 현재 진입권 대응 이어나가도록 하겠습니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks extending their declines off the worst levels of the session, however. The Nasdaq 100, 238 points lower. That's down just about 1%. The S&P 500, 59 points lower, and that's down about 0.9% right now. The Dow Jones Industrial Average, 318 points lower. That is down 0.7%. So you do have this renewed anxiety over maybe the frothy levels of the technology stocks in particular, and also stretched government budgets. The global bonds staging a broad retreat, a gold touching an all-time high. And manufacturing remaining bogged down. Factory activity index for manufacturing shrinking in August for a sixth straight month, and that was driven by a pullback in production. PepsiCo shares, they are up just about 2%. Elliott Investment Management building a roughly $4 billion stake in PepsiCo, and they're pushing the beverage and snacks giant to make some changes to boost the share price. Frontier Group holding shares, they're jumping 16%. Deutsche Bank raising the recommendation on the low-cost carrier to buy from Hull. The firm, they say, is best positioned to benefit from Spirit's bankruptcy. And then you have Air Lease shares. They're up about 6.5%. The aviation finance company agreeing to a $7.4 billion sale to Sumitomo, SMBC Aviation Capital, Apollo Managed Funds, and Brookfield Asset Management. And then Constellation Brand shares sliding over 6%. The alcohol beverage company cutting its 2026 guidance. People just not drinking anymore. Let's get you again. S&P 500, 62 points lower, just recapping. That is down just about 1%. 30-year yield, 3 basis points higher. Yeah, that is at 495. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well, so go check us out over there. Kraft Heinz to separate into 2 publicly traded companies. Stocks down 5.4% on the news. I don't get it. Jen Bartashis joins us, Senior Retail Staples and Packaged Food Analyst at Bloomberg Intelligence. Jen, what is Kraft Heinz doing? It wasn't just like 10 years ago they put the companies together?
Hi, Paul. Yes, it was just about a decade ago that they put the companies together with the plans that it would become kind of a packaged food powerhouse. But trends have changed and consumers have changed, and it just hasn't materialized the way they originally thought it would.
So what did the 2 companies get out of this merger then?
So when we're looking at what they brought together some products where they were able to recognize some synergies. They were able to do some co-branding, some product development, that sort of thing. But as I said, the consumer has changed, and demand for shelf-stable packaged food products is just less than it was. And so we've seen multiple years where scanner data shows that Kraft Heinz brands have sort of been shrinking a little bit. And I think this separation is an attempt to kind of reinvigorate growth in different parts of their portfolio.
Kellogg's split the 2 companies. They ended up selling each of those 2 companies ended up selling to private owners. Could something similar happen here?
There is that possibility. It definitely echoes what Kellogg did. They took their emerging markets, they took their higher growth brands, spun them off into Kellanova, which then got acquired by Mars, or is in the process of being acquired by Mars. Their WK Kellogg was their residual North America cereal business, was recovering from strike issues and distribution issues, and that has been snapped up by Ferraro. So there's definitely a possibility that a Kraft Heinz split could result in the same sort of end result down the road.
You mentioned several times how the consumer has changed. Let's dig into that a little bit more. Are we talking about because of the anti-obesity drugs like GLP-1? Is it a case where RFK and Make America Healthy Again is really taking root? This is kind of a slow-moving shift in the consumer, right?
It is indeed, Scarlett. It's a slow-moving shift, and it started, coming out of the pandemic. In the pandemic, everybody sort of retreated to familiarity, right? They went back to brands, they went back to shelf-stable products, and since then, there's been more emphasis on things that are more natural, lower sodium, healthier for you, that sort of thing. And while Kraft Heinz has been making updates to their portfolio, it is hard to envision how kind of electric orange mac and cheese has a long-term growth appeal to people where, there's pressure from, as you said, RFK on more like natural colorants and things like that. So, their portfolio is caught in that crosshairs.
Again, as a former banker, I probably told my clients, hey, when you announce this thing, the stock's going to go up. Well, the stock's down here. When you put companies together, the press release often talks about the synergies that are going to be, the cost synergies, maybe some revenue synergies, maybe. Are there dis-synergies when you break them apart?
Yeah, there are dis-synergies. The company expects about $300 million in dis-synergies. Thankfully, most of their manufacturing practices are fairly separate, but there is a component to that. The stock is down today, but this isn't really new news. Kraft Heinz actually said in May they were exploring strategic options. There's been repeated rumors that it would result in a split of two companies. So the confirmation today isn't necessarily unexpected news.
Paul, dis-synergies, does that just mean upfront costs?
I think so. I need a new CFO. I need a new accounting department. I don't know. So go ahead, Jen. What's next for the packaged food business? I mean, is this just a industry-wide secular decline?
Well, right now it appears to be, especially in North America, a bit of a secular decline. Pockets of growth are becoming more and more isolated. And so when you're looking at scanner data, the problem is the consumer, as I said, they're shifting behaviors, but they're just not buying as much as they used to. And you see this even with Walmart or Target or Kroger, where people used to buy in multiples and stock up their pantries, and they just don't shop that way anymore. They're buying more on an as-needed basis, and part of that is the macroeconomic environment. And so that just doesn't favor these companies right now, where historically they've been pantry staples. And so right now when consumers are looking what they're going to make for dinner tonight, a bigger portion of their plate is fresh foods. So the perimeter of grocery stores are doing much better than the center of the store, which is these shelf-stable products.
Let's talk about the folks who brought these two companies together. Is Berkshire Hathaway, run by Warren Buffett, and 3G Capital, run by a group of Brazilian operations guys. Where do they stand in all this, Jen? What happens do they each still hold stakes in the companies? I mean, do they come out looking better 10 years later?
Well, Berkshire Hathaway still has a large stake in the company. I think they own just over 25% of the outstanding shares. But they did relinquish their chairs on the board shortly before the strategic options were announced, or that the company was exploring strategic options. So they've been slowly pulling back. From the time of their initial stake, they're probably still going to come out ahead, but it has been a 10-year play for them.
Do we know where they're going to put their shares? Are they going to go equally between the two companies? Because I'd like to invest alongside Warren Buffett, I think.
At this point, I don't think that's been disclosed, but it is certainly something that everyone will be watching for.
What will you be watching for, Jen, in terms of how competitors respond or react or move in, to kind of take advantage of this breakup?
I think what will be interesting is to watch the level of promotional activity. There will likely be some effort to take market share, and Kraft Heinz is likely to up their marketing spend in order to try to drive volumes just ahead of when this split actually becomes realized, to sort of show improvement in some of their legacy brands. So what that really sets a stage for is actually probably good for the everyday shopper, and that there'll be probably more sale items, more discounts. But it also means that it's less profitable sales for the companies that are involved in chasing that market share. So it will be interesting to watch how it unfolds. Companies only expecting this to close or to be realized at the second half of next year. So there's some time for those dynamics to play out.
All right, Jen, thanks so much for joining us. Jen Bartash is Senior Retail Staples and Packaged Foods Analyst for Bloomberg Intelligence down there in Princeton, New Jersey. I know, like, my mother used to food shop every Wednesday like clockwork. Mm-hmm. We don't do that. We just kind of, hey, I need some stuff. We'll go to the store.
And you get what you need.
Yeah.
And that's it.
And then when you're there, you see stuff. You're like, oh, yeah, I'll get some more of that. I'll get some more of that. But it's not, and so it's probably not the same type of shopping.
You know, what I didn't ask about was about private label, because when we go to Costco, I'll often see the Kirkland version of it, and I'll go for that because it's better value.
Yeah, I did a lot of that coming out of the pandemic. Much more. I never did it before. Mm-hmm. I'm always brand loyal.
Did you notice any difference?
No.
There you go.
But there's some things I won't go. A lot more coming up. This is Bloomberg.
자, 진입권 조금 더 지켜보도록 하겠습니다. 현재 진입권 조금 더 지켜보고 대응 이어나가도록 하겠습니다. 자, 현재 진입권 손절 후에 재진입 사인 드리도록 하겠습니다. 자, 현재 진입권 손절하도록 하겠습니다. 자, 손절 사인 드리도록 하겠습니다.
주문 청산이 완료되었습니다.
자, 손절 후 15차 진입 대기하도록 하겠습니다. 15차 이어서 바로 진입 사인 드리도록 하겠습니다.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com. Check us out there. Lots going on in the world of global healthcare. We want to check in with Sam Pizzelli. He's the Director of Research for Global Industries and a senior biotech, pharmaceuticals, all that healthcare stuff analyst. He's based in London here. Hey, Sam, we've had a lot of turnover and a lot of uncertainty within our healthcare, I don't know, Washington, D.C. government entities. How does that affect the rest of the world?
자, 이전과 동일하게 매수 진입
That's a very
사인드리도록
big question,
하겠습니다.
Paul, and lovely to talk to you again. It's been a while. There's all sorts of layers. Of course, you know
체결되었습니다. 확인 바랍니다.
lots of projects have been going, have been stopped in terms of funding. Then you have the CDC, which is much more focused on the US. The CDC, the Centers for Disease Control and Prevention, is the body that is responsible for US's health. And it is part of the Health and Human Services division. So HHS Secretary RFK Jr. is in charge of basically the whole thing. And there's been major upheavals in terms of people that even they have had appointed themselves to the CDC, resigning within after about a month. I'm talking about Mona Reyes, who was the director of the CDC and just left, or was fired, because apparently she wasn't prepared to rubber stamp whatever the advisory committee for immunization practices, which is part of the CDC, suggests to the CDC what vaccines should be used, when, how, and that then impacts insurance coverage, she was told you need to rubber stamp what they say. And of course, she didn't believe that that was the right way to do it. So there's a lot of upheaval, and we now have another ACIP, Advisory Committee meeting, on the 18th of September. Let's see what they say about COVID vaccines. But already the US's access to vaccines has been reduced.
What does this mean for the rest of the world, though, Sam? I get what you're saying about insurance coverage in the U.S., but do the equivalent of CDCs in other countries take their cue from the U.S. CDC?
No. In fact, to be honest with you, the FDA's decision with regards to the limiting of vaccines in the U.S. for COVID, for sure, has brought the U.S. policy, or will bring U.S. policy, in line with the rest of the world. In the U.K., I am not 75 yet. I hope you can tell that.
You look
I'm not
amazing.
allowed to yeah, thank you. I need to go pay for it until you're 75, right? In the US, it was pretty much available to anyone under the age of 64 or 65. Now it's been limited to 65 and above. So this just brought the rules in line with Europe. So Europeans were already there because of our healthcare budgets being under constraint, etc. But the US is supposed to be about free choice. And that is where I think the complexity comes in. And what I'm more worried about is that the language and the way they're addressing it is what will cause people more concerned about actually going and getting a shot.
So what about just if the FDA limits approval of COVID shots, for example, or I don't even flu shots, I'm not sure how they're going to approach it. That would be more, I guess, out-of-pocket expense for consumers?
Correct. Yeah. I think Bloomberg had an article saying that it's going to be like $220, $224 a shot. Now, you and I can probably afford that, right? A lot of people can't. And that will then be the issue that, a pregnant woman, where actually a lot of scientists and medics believe that they should get the shot. And in Europe, it is approved. They do get it. They're not recommended for the vaccine anymore. So that is the problem, because then your baby is born with no protection against the virus, which is bad for babies. So there are these issues. And of course, we got this meeting coming up. Don't forget, there's another thing coming up in September, this big research they've been doing to try and see what is causing this massive rise in autism. And we'll talk about it, I'm sure, the day the research comes out, or that week. I wouldn't be shocked if it comes out and says, oh, here you go, there's evidence that it's caused by, there's a correlation with vaccine use, or aluminium in vaccines, or whatever. And I can show you chart after chart that you can show it's related to glyphosates, or high fructose corn syrup that we've used in juices. You can keep making these correlations. We've done things to our lifestyle that have caused this issue, and mental health issues, etc. You can't just pinpoint vaccines until you do a full prospective analysis.
Yeah, but that's very complicated, and it feels like people want simple answers, Sam. What does this mean for the companies that develop the vaccines, that sell the vaccines? How are they positioning themselves? Are they pushing back?
Well, they can only push back so far. We just saw some tweets from President Trump saying, look, if you've got this great data about vaccines and their safety, and that we hear you've got them and their efficacy, why don't you come and show us? I'm sorry. I can show you a link. I can send it to you. We can put it in the show notes or whatever they go into, a link to the CDC meeting where the companies came, and the CDC itself did research showing what the effectiveness of the vaccines had been in the previous 12 months, how many hospitalizations it saved, the economic impact, and their safety analysis. What is it that the administration is looking for? They've been presented 4 or 5 times a year through that same mechanism at the CDC. Who says these companies are hiding the data?
Right. All right. Well, we'll stay on top of this story because I'm sure it's going to continue to develop here. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceutical Analyst, Bloomberg Intelligence, based in London, covering all the big pharma companies and a lot of the biotechs as well. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research as we have a market selling off here with the S&P off 73 points. That's 1%. The next hour of Bloomberg Intelligence starts right now.
대응이 이루어지고 있습니다. 자, 여기서 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 문제 진입권 수익 청산 시작해드리도록 하겠습니다.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the
주문
sectors
청산이
and how they performed.
완료되었습니다.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check with Tyler Kendall, Bloomberg Television Washington correspondent, get the latest out of D.C. It looks like the U.S. and India may still be open to some trade talks. We'll get the latest there. Ken Shea is going to join us, Bloomberg Intelligence consumer products analyst. We'll talk about Pepsi. The activist investor has taken a big stake in Pepsi, $4 billion, and may revive talk of a breakup. You sense the theme here today, breaking up some of these companies. Shelley McFadden, senior analyst at Motley Fool Asset Management, get her thoughts on these markets here. Sonia Wind, a Bloomberg consumer reporter, on Nestle shares falls after the CEO is ousted over a workplace relationship. So we'll get the latest reporting from Pepsi. Right now, let's go to John Tucker and get a Bloomberg Business Flash, John.
All right, guys. All 11 major industry groups in the S&P 500, they are lower right now. The biggest decliner coming from information technology as this tech-led sell-off continues from last week. The worst performing individual stock in the S&P 500 belongs to Constellation Brands. It's down about 7%. That's the alcohol beverage company cutting its guidance for this year, citing weak consumer demand. Factory activity shrinking in August to 48.7. This is the ISM survey. This is a sixth straight month of declines driven by a pullback in production that shows manufacturing remains bogged down. Remember, 50 is the dividing line, so that means contraction. Prominent economists rallying behind Federal Reserve Governor Lisa Cook. This after President Trump moved to fire her based on the allegations that she committed mortgage fraud. About 600 economists signing an open letter backing Cook, saying there's a high bar for removing Fed governors and that elected officials should refrain from actions and rhetoric that erode the independence of the central bank. Seeing more moves toward cost-conscious consumers. Walmart adding a new streaming perk for its paid membership program.
체결되었습니다.
members now have
확인
complimentary
바랍니다.
access to the Peacock Premium. In addition to Paramount Plus, an existing benefit. McDonald's bringing back extra value meals for a limited time. There's a $5 sausage McMuffin and egg meal, which comes with hash browns and a small.
That's my go-to.
This is only for breakfast?
I guess. I don't know. There's an $8.
I'm partial to fries.
Oh, wait a second. $8 Big Mac meal includes medium fries and a soft drink. So that's going to start on Monday, Scarlett.
Next Monday.
Just for you.
All right.
S&P 500 down 73, Dow down 400, but NASDAQ down 299. 10-year yield up 4 basis points, 427. The long bond up 4 basis points. That's at call it 497. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
John Tucker, thank you so much. We appreciate that. As always, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at today?
We're looking at TSMC. The stock is down. The ADR is down by around 1.5%. The ticker is TSM. So the U.S. has revoked their authorization to freely ship essential gear to its main Chinese chip-making base. So this potentially curtails production capabilities. The site is located in Nanjing, which is an older generation facility. So American officials recently informed TSMC of their decision to end the so-called VEU, or validated end user. So what is this? It means that TSMC suppliers will have to apply for individual approvals when they want to ship semiconductor equipment covered by U.S. export controls instead of a blanket authorization. So obviously, this is bad news, and it mirrors steps the U.S. took to revoke VEU designations for SK Hynix, a South Korean company, and also, I'm forgetting, what's that one company? Samsung.
Yeah.
Yes, thank
Absolutely.
you, Paul. So the waivers are set to expire in about 4 months. So again, this is, I think, just sits at the geopolitical tension, so the stock is down.
You think if they pay 15% of the sales to the U.S. government, they can get this thing going again?
That might be the way back into it. I don't know. I just grew up in a world of globalization, and I don't know. So this is all.
This is a foreign world
for a lot of people. Yeah. Putting up trade barriers all over the place.
자, 여기서 끊어가도록 하겠습니다.
That's what they say, the deglobalization,
사인드립니다.
the opposite of what we work so hard towards.
Okay. 사인드리도록
And PepsiCo is
하겠습니다.
in the headlines today, Isabel, because an activist investor, Elliott Management, one of the biggest, is targeting it.
Yes, so Elliott took a 4 billion stake in the
주문
company. The stock
청산이
is now up by more than
완료되었습니다.
2%. Ticker is PEP. So this makes Elliott one of its largest investors. So we all know that Pepsi has struggled recently in the face of really just stiff competition with Coke and changing consumer taste. Coke is their biggest rival. And Elliott said in the letter to Pepsi's board that PepsiCo's strategic and financial challenges have led to poor results. They also commented on their underperformance and their meaningfully discounted valuation. So Elliott sees the path for a price increase of more than 50% from today's level. So investors are likely definitely going to cheer that because 50%
확인
is a huge
바랍니다.
jump. We have Bloomberg Intelligence analyst Kenneth Shea writing that Elliott's stake could renew calls for Pepsi to revisit a separation of its global food and snacks and beverages business. But for now, yeah.
We got Ken Shea coming up in a couple minutes, so we'll break it down.
Did you know Pepsi was number 4 behind Coke?
Get this.
Who was number 2 and 3?
What did I say?
2 is
Dr. Pepper, and then Sprite, and then 4 is Pepsi.
I can't. I have to go. I have to go fact check.
And I'm willing to bet that it's only number 4 because so many stadiums are Pepsi-only stadiums, too.
Oh, that's a smart call, yeah.
Now, I'm a Coke person, but you put Pepsi in front of me, I'm just as happy. I could care less, but I am a Coke person. Caterpillar rounded out.
Caterpillar is down by 0.6%. They reported earnings last week, but it seems like Wall Street analysts are still continuing to weigh in on the company's expectations that tariffs would have an even greater impact on its business. And again, Caterpillar is viewed as a bellwether for global economy because it sells on heavy equipment, construction, mining, energy, and basically a lot more other things. So D.A. Davidson, for instance, acknowledges that the tariff instability could last all 4 years under the current presidential administration. Daiwa Capital Markets said that Caterpillar may not see any impact of higher tariffs on sales and revenue, but they're still cutting their revenue estimate for the second half of 2025. So not a lot of good news there. And you see the stock under pressure by 0.6%. Ticker is CAT.
All right, very good. I'm a big fan of Caterpillar. It's a great company. I always want to ride on one of those tractors. You know who rides in those tractors? It's Count Ubelhart. I have pictures of
really
on big tractors.
That's what you get to do as a Bloomberg intelligence analyst?
Exactly. So, anyway, it's good stuff there. All right.
That sounds dangerous.
I know.
Or
Isabel
fun.
Lee, that's good stuff from you. Thank you very much. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get back down to D.C. to get the latest reporting there. Tyler Kendall joins us, Bloomberg Television Washington correspondent. She's down there in Washington, D.C. Tariffs, I guess, Tyler, let's start there. It looks like the U.S. and India may be open to talks despite some frosty discussions recently. What's the latest?
So, hey, Paul, we had heard from President Trump over the long weekend when it came to the negotiations with India, saying that they had suggested that they could reduce their tariffs down to 0, but he didn't fully open the door that these discussions with India are going to reopen. And keep in mind, we had seen the Trump administration double tariffs to 50% the other week. 25% is that so-called reciprocal tariff rate. Stacked on top of that was that additional 25% over India's imports of Russian energy supplies. Now, at the moment, about 36% of Russian crude makes up India's crude imports, and our analysts at Bloomberg Intelligence say that that number is actually expected to go up in September after we saw a slight dip amid President Trump's rhetoric in August. And at this point, after we saw, for example, Indian Prime Minister Modi meet with Russian President Vladimir Putin over the weekend, we really haven't gotten indications that India is going to let up when it comes to its imports of supplies. Now, we did have White House trade advisor Peter Navarro on Balance of Power last week, and he told us that all India would have to do is halt these shipments. But at this point, it really is unclear if India were to wind down their imports of Russian oil, if the White House would be willing to make any sort of trade concessions, because Paul and Scarlett, in that post from President Trump over the weekend, he said that it is starting to get too late for India, indicating to us that it doesn't necessarily appear that he is open at this point for those discussions. discussions.
All right, thank you for that update. You mentioned the meeting between Modi, Putin, and President Xi Jinping of China at the Shanghai Cooperation Organization. There was a photo that made the rounds of Modi and Xi Jinping holding hands and Putin with his arms around them as well, kind of a BFF picture from the two-day summit. I'm wondering if the White House has had any response to that and the optics that that presents for a White House that is very much looking to, put each country on the spot when it comes to tariffs.
Right, exactly. I mean, I think you're really painting the literal and metaphorical picture here, Scarlett, which is that this is not going to be a welcome image from this White House, that we haven't heard them weigh in directly when it comes to this specific meeting. Now, White House officials would likely point to the fact, for example, I think Treasury Secretary Scott Bessent did kind of mention it in an interview over the weekend, that this was a long-planned meeting, this security summit, so they were expecting these leaders to all be in the same room. But when you look at some of the tangible deliverables that we saw out of this meeting, including China and India agreeing to resume direct flights after about 5 years of those being halted, this sort of cooperation isn't going to be something that this White House wants to see, as they're trying to really build up the pressure here. And when it comes to India in particular, and for our radio listeners, we have the Indian Prime Minister on the screen right now. This was really an important alliance that we saw prioritized in the trade talks pretty early on, in large part because of India's role as being a bulwark, really, for the U.S. to counter China in the region. So it's something that we are watching closely as to whether or not President Trump weighs in on, but it definitely does add perhaps some heightened tension to the negotiations, not just with India, but also, of course, with China, as we know that those trade talks are ongoing as well.
All right, Tyler, thank you so much for joining us. Tyler Kendall, she's Bloomberg Television's Washington correspondent. She's down there in Washington, D.C., getting us the latest on tariffs and maybe some geopolitical discussions between India, China, Russia, and what does that mean for the U.S.? So that's our geopolitical call here of the morning. Let's get back to what's going on in the markets. Your markets continue to sell off. Lots of deals out there, but the deals aren't, M&A per se. They're mostly about breaking stuff up. Some of those consumer products companies that have been put together over the last several years, we're seeing some of those companies think about breaking themselves up. One of them is Pepsi. We have Pepsi. We have investor, Elliott Management, activist investor, taking a $4 billion stake in Pepsi, maybe provoking some change down the road. Let's see what happens there. Ken Shea joins us, Bloomberg Intelligence Senior Consumer Products Analyst here. Ken, I mean, when you look at Pepsi, you think about it as Frito-Lay and all the snacks on one side, and Pepsi and all the other soft drinks on the other side, and it just feels like it's a company that, boy, it could be broken up just like some of these other consumer products companies. What do you think?
Yeah, hi, Paul. Actually, it's only a few weeks ago, I wrote a report over Bloomberg Intelligence saying that given the weakness in the stock, it's really just a matter of time where these talks are going to be revived. Recall back in 2014, Tryon, an activist, actually advocated that, breaking the company up between beverages and foods. The company decided not to do it. It made the case that it was getting good synergies between the two. Fast forward to today, Elliott isn't quite going that far. In Elliott's letter today, it said it believes that value can be created by simply having the beverage side, roughly 40% of the business, just refranchise their bottling operations. In plain English, what that means is to divest those capital-intensive operations, manufacturing operations that create the finished product from the syrups and concentrates that Pepsi, the beverage company, sells. That's really the golden part of that business. The jewel of that business is the concentrate business. That's what Coca-Cola does. Coca-Cola sells concentrates, syrups, they're high margin, to third parties to make the product. PepsiCo chooses to do it in-house. That results in tying up capital, lower margins, and so on. At the same time, Elliott is also saying on the food side, perhaps some SKU rationalization is due, meaning there's a lot of food products there that they may not be well suited to sell. The Frito-Lay is doing really well, although it's a kind of a slowdown right now with many consumer products. It's the Quaker Foods, I think it's really targeting and saying, maybe some reduction there may be in order. So that's really what the gist is today with Pepsi.
All right, Ken, thank you for that very, very detailed rundown. I want to pick up on what you were talking about with the bottling business, refranchising the bottling business, which is what Coca-Cola does right now. What does Coca-Cola give up by doing that? I mean, there had to be a reason why Pepsi chose to keep it in-house up until now.
Yeah, that's a great question, Scarlett. So go back in time, 10, 15 years ago or so, both companies had done that. They both had separated those businesses. PepsiCo decided to retain, or it sold it, and then it bought it back, and it decided to keep it and made the case at the time that the soft drink business was in a downturn. Volumes were weak. They thought by gaining more control over those bottling operations, they could right size the ship, that they could get it back in order, align the interest between the bottlers and the company. Because you've got to remember, Coca-Cola, by separating it, it is to some degree giving up a little, it's accepting a little risk. I mean, these are third party, these are independent companies. They can sell beer, they can do other things. PepsiCo didn't want them to do that. PepsiCo said, look, we want you to be fully aligned with what we want. So that's what they said they gained from that, and I guess there's some truth to that. But you're giving up a lot also for the factors that I mentioned before.
Ken, you've been covering this consumer space for a long time. You've seen the cycles come and go. It seems like we're in a cycle of breaking these companies up. I mean, you've seen this game before. How do you think this is going to play out across the consumer space?
Well, given the PepsiCo stock before today was down about 20% over the last 2 years, so it's really disappointed investors. And beyond that, it's that their long-term algorithm of high single-digit comparable EPS growth is not going to happen this year. They're looking at flat earnings, this year.
주문 청산이 완료되었습니다.
They see a slowdown, and they're saying, look, maybe there's more than just a cyclical element here. Maybe there are some structural things this company can do. I think Elliott's making some good points here, and I think PepsiCo ought to follow through on some of these if they want to regain some of the low sentiment that's out there among investors.
Do you expect other investors to jump in here and kind of ride on Elliott Management's coattails? I mean, is Elliott going to be empowered to ask for more going forward?
That's a great question. I think there are going to be some supporters of Elliott. Like I said, I think Elliott's making some fair points.
체결되었습니다. 주문 청산이 완료되었습니다.
On the operational side, and like I said, in the stock front, I think it ought to be open ears to listen to what Elliott says. I think others will support Elliott in this case.
자, 매도 진입 사인입니다.
체결되었습니다. 확인 바랍니다.
Coming up, Shelby McFadden.
매도 진입
She's a
사인입니다.
senior analyst at Motley Fool Asset Management. She's going to join us to talk about these markets. Again, do you drink soda, Scarlett?
No, I avoid it like the plague. I can get my empty calories somewhere else.
Okay.
Through Lay's potato chips, which is also owned by Pepsi.
Okay.
So.
All right. Again, John, Coke or Pepsi?
No.
Nah?
Pinot Noir. I mean, why,
why
just
waste time?
skip right ahead.
Go straight to it. I love it.
All right. Again, I'm a Coke person, but again, you put a Pepsi in front of me, I'll be just as happy. But they spent years and gajillions of dollars creating brand loyalty.
And Paul Sweeney's like, either way.
Well, Matt Miller's the worst. He doesn't arbitrage his Uber and his the other one, the Lyft. Yeah, he just goes right to Uber. And you can save like 20-30% by arbitraging.
Big spender, that Matt Miller.
I know, exactly. S&P 500 off 82 points. That's 1.3% down at the lows of this session. NASDAQ down 336 points off 1.5%. We're going to have more coming up. This is Bloomberg. Good morning.
자, 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인 드리도록 하겠습니다. 자, 현재 매도 진입권 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
자, 이어서 바로 19차 진입뷰 대기하도록 하겠습니다. 자, 계약수 맞춰서 2계약 운영하도록 하겠습니다. 자, 단기 조정 예상되기 때문에 자, 매수 진입 사인 드리도록 하겠습니다. 단기 조정 올 수 있다고 판단되어서 매수
체결되었습니다. 확인 바랍니다.
8.50입니다. 자, 매수 진입 대응 이어나가도록 하겠습니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the sell-off continues. S&P 500, 85 points lower. That's down 1.3%, 63.74. Last check, all 11 major industry groups in the S&P 500 were lower in today's trading. Dow Jones Industrial Average down 470 points. The NASDAQ 100, 360 points lower. That is down right now 1.5% as the tech-led sell-off in stocks continues. Now, for those of you like Paul who follow the league tables, Centerview Partners has nabbed the key advisory role on the Kraft Heinz breakup. Wow. So they got it coming in and they get it going out. The boutique bank advised them on the mega merger a decade ago. Awesome. Kraft Heinz splitting into two publicly traded companies. They're going to separate the business selling condiments like ketchup from the slower growing brands like Oscar Mayer hot dogs. Centerview is the only financial advisor on the deal. They've long been at the center of deals in the food and beverage industry. For instance, they advised Altria Group on the separation of its food unit back in 2007, which was eventually named Mondelez. Factory production activity, that is, shrank in August for the sixth straight month, driven by a pullback in production. Manufacturing remains bogged down by higher import duties. That's the start of the data this week. At the end of the week, we're going to get the jobs report. And creatine, it's shedding its Jim Bro reputation, unlocking some lucrative new markets. Women and older Americans getting wise to the benefits of the supplement. Sales are booming. GNC, which has over 4,000 locations across the U.S., has seen creatine sales surge 75% from 2020. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. September, historically not a good time for markets. Well, first day of trading kind of bears it out here. But let's check with somebody who does this stuff for a living. Shelby McFadden, Senior Analyst of Motley Fool Asset Management. Shelby, what do you make of a day like today? Just another day of trading, or are we in for something more here?
You know, I think it's mostly another day of trading. We're coming off of a long summer, off of a long weekend. Going to see a little bit more volume and activity in the markets, not surprising at all, because we're not just coming off of a little bit of a break in the US, but traditionally we know that European trading also slows down quite significantly in August. So everyone's sort of coming back to the table. From the institutional side, rebalancing has just wrapped up. And if you're watching institutional trades, then you might be sort of chasing that into the first trading day into September. So on the second day of the month, first trading day of the month, I'm not yet too worried. This seems a bit normal. We'll wrap up with some somewhat important earnings coming through for the rest of the week with Broadcom and Salesforce. So we'll get a little bit more information there, but I'm not yet ready to jump out of my shoes on this activity.
Shelby, I'm going to ask a dumb question, which is, you mentioned how institutional investors are done rebalancing. Why do they rebalance at the end of August?
Yeah, so there could be a little bit of rebalancing there just because part of it could be the fiscal year that they're running on. Another could just be that wanting to take a little bit off of the table if things are a bit rich, especially in tech sector. So oftentimes we'll see some rebalancing quarterly, but it could also be on a monthly basis, depending on where some of their targets are for pricing. So it's not completely unusual to want to take some chips off the table to get back to some of the more tactical shifts, and then going ahead and making the bigger rebalancing plays on a quarterly basis to go ahead and get back to the long-term sort of target target allocation. So seeing that at the end of the month is not unusual at an institutional level, also because they're able to sort of scale up on the cost of trading. So it's easier for them to do trading a bit more often.
Okay, that makes a lot of sense. And I ask all of this because I wonder how this influences retail traders and whether they slow their buying as well.
수익 청산 사인드립니다.
Yeah, and I mean, we've seen this happen in the past where you're looking to see what either chairmen or executives, and even sometimes they're just on buying and selling plans for their own exposure. But we have seen these things sort of get followed, right? We know that different 8K filings can be signals for certain quantitative funds and things like that. We don't necessarily use them for triggers at Motley Fool Asset Management, but it is something we will follow. Our board members
주문 청산이 완료되었습니다.
their shares, and if it seems to be sort of outside of exposure management, that's something we might want to look into. Should we be interested? Is there a reason they're picking up more on the market?
How are you positioned here for the remainder of the year, Shelby? We've had some volatility, obviously, in the beginning of the year. We've had a little bit of stability here, but there's still a lot of crosswinds out there.
Yeah, I would say that much like the rest of the market, we still have a good amount of tech exposure in our sort of flagship funds, if you will, TMFC, TMFG. And that's just partly because that's where a lot of the fundamental opportunity is, even though there is still a great amount of fluff in the valuation. You don't necessarily want to just run out of those positions. But we are also still looking at different opportunities outside of tech. So we have not completely abandoned consumer and things that are consumer exposed. We've not completely abandoned retail or CPG. It's something that we have to watch keenly for. We do also have some other smaller software plays. So I think that
체결되었습니다. 확인 바랍니다.
right now we don't look as diversified, but in terms of how we're considering opportunities, it's definitely a little bit more inclusive. Still looking at things like financials, real estate, insurance, sort of across the board.
And how are you thinking about the earnings that you mentioned, Broadcom coming up, because it's been seen as one of the beneficiaries of the AI play that is not as overly inflated as an NVIDIA or, a Palantir. And I recognize that Palantir and Broadcom do very different things, but if you are looking to just get in on AI exposure, that's certainly one way to do it.
Yeah, the thing about Broadcom is I'm sort of thinking about it also in tandem with Salesforce, because it's a great example of the supply and demand dynamic there. So when we look at the enterprise level, we look at companies like Salesforce that are going to be sort of providing solutions, selling solutions to customers that would employ some of this technology. The demand for it, that's where some of that's going to get reported. Similarly, when we're looking at the hyperscalers, Microsoft, Meta. So we're seeing the demand get reported in those calls, and then the supply coming from the Broadcoms of the world. And so that dynamic has to continue to play. If we would have seen something come out of a Meta this quarter that says we're slowing down, it would have probably been more likely that we'd see a little bit of negative sentiment when the likes of NVIDIA reported. So I think that coming off of a summer where we had really strong demand from hyperscalers, I'm pretty keen to see at least neutral to positive rhetoric and guidance come out of Broadcom. But some of that might be influenced by how Salesforce does as well.
All right, Shelby, thank you so much. Always appreciate getting a few minutes of your time. Shelby McFadden, she's a senior analyst over there at Motley Fool Asset Management based in Alexandria, Virginia. Some news coming out of our friends at Nestle over there in Switzerland. The shares fall after the CEO is ousted over workplace relationship. We want to get the latest reporting on that. Sonia Wind, Bloomberg consumer reporter, joins us here. Sonia, give us the background of what's happening at Nestle.
Yeah, so it's really an unprecedented time for Nestle. Another ouster of the CEO. So the background is yesterday Nestle came out to say that the CEO, Laurent Frexe, is immediately dismissed. The background is that he had an undisclosed relationship with a subordinate, which he failed to disclose. So that's a no-go at the Swiss group, which is known for its conservative corporate culture. And what we learned through our reporting is that the concerns were first raised through an internal system called Speak Up. Nestle then chased these concerns and couldn't substantiate these claims. But the concerns continued, and then the board decided to launch a wider investigation, which also included external counsel, and that then ended up to confirm the allegations. So really a turmoil that's going on at Nestle is an extension of the turmoil, because Frixe has only been there for a year. It's exactly on the day that he started his position last year, and now it's over. And he took over from Mark Schneider, who was the previous CEO, who was also ousted, surprisingly, but in his case, over poor performance of the company. So Frixe was seen as a safe pair of hands, but now that's clear. It's also that didn't really work out. So now we have a new CEO coming in, so the first CEO in just a little over 1 year, Philippe Navratil, which I can tell you a little bit more about.
Yeah, let's do that, because I mean, I'm just looking at the parade of CEOs coming in and leaving the company, and I imagine that investors are feeling pretty nervous about this situation. Do they want someone who is a lifer at the company, or do they want someone from the outside who can inject some new ideas into the company?
Yeah, so I would say the most reactions were quite like shocked and surprised. The new guy who's coming in, Philippe Navratil, he has been at the company for 20 years, more than 20 years. So he's like a company insider, which is generally seen like as a positive thing. His focus was mainly on coffee in the past, so he rose through various
확인 바랍니다.
coffee unit, and then turned out to be the CEO of the Nespresso unit since July last year. The Nespresso business is one of the most important businesses of Nestle. And now he will have to take up the challenges that Frixe was trying to fix, which is to focus on fewer but bigger product initiatives, to boost advertising spending, and also to divest of struggling businesses. So that includes certain vitamin brands like Nature's Bounty, and also the bottled waters unit, which Frixe spun out into a separate standalone unit. So he inherited quite a lot of restructurings, and we will see how that turns out, and if he will be able to turn around the Swiss group that has been struggling of late.
So what is the primary challenge for this company, Sonia?
Yeah, so it started under Mark Schneider, who, so in 2022, Nestle kind of peaked, and since then it struggled. And the background of that has a few reasons. So one of them is that Mark Schneider, he tried to bring Nestle into various new arrays, which some said might not have been the best choice. And then also we saw this bout of inflation after the pandemic, and that led many consumers to flock to cheaper off-brand items away from Nestle's branded products. And Nestle since had trouble to window shoppers back, because Nestle raised the prices to deal with inflation, but some say this was a bit too much. And now we have the new situation with soaring commodity costs for coffee and cocoa. And Frixe has also hiked prices for various items that included those commodities. And so far we've seen that it hurt Nestle a bit, especially for the cocoa products. Coffee is a bit of a different story because consumers really like to stick to their habits. And so Nespresso and Nescafé was actually holding up pretty well compared to that. Apart from that, another challenge that Navratil will also have to look at are, of course, the US tariffs by Donald Trump. Frixe has previously said that Nestle can deal with it well, but Nespresso is, for example, one product that's exclusively produced from Switzerland.
All right, Sonia, thank you so much. Appreciate that. Sonia Winning, consumer reporter for Bloomberg News, talking to us about the news coming out of Nestle. We're going to have more coming up. This is Bloomberg. Good morning.
자, 여기서 해당 진입권 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 자, 두 계약 기준 약 190만 원권에서 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
자, 앞전에 있던 무리한 트레이딩으로 인해서 발생한 리스크 상쇄하였고요. 금일 수익권 진입하였습니다. 자, 천천히 트레이딩 이어나가도록 하겠습니다. 자, 22차 진입뷰 대기하도록 하겠습니다. 천천히 분석 후에 진입 사인 드리도록 하겠습니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And this on a day with the major averages. They are all lower, down by over 1%. At the same time, we've been seeing a sell-off in bonds. Prices down, the yields up. The 30-year yield up close to 5 basis points at 4.97%. The stocks joining a slide, the global bonds for the first trading day of September. All the mega caps falling. NVIDIA seeing its longest slide since March. Among the most active, it is now down just about 3%. PepsiCo shares, they're up. Elliott Investment Management has built a roughly $4 billion stake in PepsiCo. They plan to push the beverage giant to make changes to boost its
전저점까지 하방
share
가능성
price.
열려있다고
Right now,
판단되어서
the shares
다시
up
한번 매도 진입
2.4%.
체결되었습니다. 확인 바랍니다.
To separate the company into two independent publicly traded companies, which kind of raises the question whether they're hooked up in the first place. The current dividend level expected to be maintained. They may also change their names. Right now, the S&P 500, 92 points lower. That's down 1.4%. Dow Jones Industrial Average down 516 points. The NASDAQ 100, 401 points lower. The crypto token of the project backed by President Trump fell on the first day of trading Monday. WLFI is the token of the Trump family's World Liberty Financial. Fell as much as 25% before recovering some. World Liberty Financial was set up last October with Trump as the co-founder emeritus and his three sons as co-founders. By the way, the crypto entrepreneur Justin Sun, he's the guy who bought and ate a $6 million banana last year. He has invested $75 million.
So that adds credibility, right?
Yeah, in my book, I guess. In today's world, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Yeah, that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got some really smart folks here at Bloomberg that track and analyze the energy transition that we're going through here on a global scale. That's Bloomberg NEF, and they join us here today. Antoine Vanya-Jones, Head of Trade and Supply Chains for BNEF. Antoine, talk to us about your world these days, the transition to cleaner energy. How's that being impacted by this administration?
Yeah, there's a few things that have happened that are quite dramatic in recent months. There's been a bill that has been passed by the Trump administration which seeks to reverse a lot of what was brought in under Biden, under the Inflation Reduction Act, which was this big climate bill that gave all of this federal money, mostly in the form of tax credits for clean energy. A lot of that's being cut. So there was a really big high-profile tax credit for electric vehicles. That's going to be gone as of this month. And a lot of the other stuff is made much harder to access. So this is a big problem for many of the manufacturers who have led to over $110 billion of announcements for factories in the United States. There's a lot of question marks about the fate of those factories and the business case under the current environment.
Does the current administration want a transition to clean energy, to green energy?
The current administration is focused on a number of different things, such as when it comes to energy, data load increasing due to data centers is one, a nuclear revival for the United States is another. When it comes to clean energy, when it comes to electric vehicles, those are things that are being actively diminished in terms of their rollout and support at a federal level. So the answer is no, they are pushing against it.
So how are companies within the entire supply chain, how are they reacting?
They're waiting and seeing for example, there's a number of different things that are happening where it's just not clear what the outcome's going to be. One of the things is that in the most recent bill that's been passed by the Trump administration, there's a number of rules around whether or not you can have any kind of Chinese involvement in a factory project at any real level. It seems it's incredibly expansive beyond what was done under the Biden administration. And the guidance for that isn't out yet. And that's just one of the things where uncertainty is just continuing. We're still waiting for clarifications on that specific rule. And then if you zoom out again, the tariff situation, the volatility there, we've had recent news around, the ultimate Supreme Court decision, which will likely impact many of the so-called reciprocal tariffs, is going to be, something that we are waiting for early next year. And that's just one example of how, even with the tariff situation, things are changing by the day. And there's a lot of uncertainty there too. So in terms of new investments, very little is happening because people are waiting and seeing. And that's due to the volatility, not just in terms of federal support and the fate of those programs, but also in terms of trade policy.
And there was the One Big Beautiful Bill as well.
Yes.
How did that change up the landscape?
So that scrapped the electric vehicle tax credit, for example. That is gone. That has also brought a whole host of what's called foreign entity of concern rules around accessing many of those tax credits. Those rules were in place under the Biden administration, but in a much more restricted form. These are being expanded far beyond what they were. And the aim there is really interesting. Originally, there was a thought that the Trump administration, when it came to Chinese involvement, investments in the US, would be much less ideological, much more quote-unquote transactional. That doesn't seem to be the case with this bill, where suddenly you have a new series of rules which is going to make it extremely hard for any project where there's any kind of doubt as to some Chinese investment in the form of debt, financing, inputs into a factory from going ahead and receiving tax credits. So that's one big outcome from this bill, and we're still waiting on the guidance for that and how it's going to play out.
I mean, does the U.S. have the capability to be self-sufficient in, transitioning to cleaner energy, or does it need a global supply chain?
It needs a global supply chain. So what we've done, we've just published a huge report sort of detailing the current installed capacity for lots of different sectors in terms of factories online in the United States. We look at what's been announced. We make a call as to what could come online. And when it comes to some products, like downstream products for things like solar modules, so solar panels in their finished form, when it comes to lithium-ion battery cells, so that's batteries in their finished form, the US actually has a pretty good shot at being self-sufficient by 2030, we think. However, and this is a big however, when it comes to the inputs, the components that go into those things, so for a battery, it's stuff like the cathode, the anode, you're going to have to rely on other trade partners. If we suddenly have rules which shut out China from those supply chains, that means that the mapping exercise that we've done suddenly becomes quite relevant, where you begin to say, oh, well, Japan has a surplus in separators that are used for making batteries. South Korea has a surplus in cathodes. And that's when you start having this sort of rejigging of all the different puzzle pieces and where procurement teams are going to be very busy over the next few months.
Can any of that be brought back to be made in the U.S., onshore manufacturing?
That's the aim. And under the Biden administration, where you had not just tariffs that were relatively stable, but you also had visibility in terms of future support. And you also had demand side policies, which meant that there'd be local demand for your product that was locked in. That, even under those circumstances, still quite hard to do with the kind of price increases you see in the US. We've got a lot of announcements. We'll see whether those factories get built now. But in terms of that midstream, we haven't seen as much in the way of announced investments. And it's very unlikely that we're going to see anything in the short term under the current environment. So the short answer is no, not anytime soon.
What are the capital markets like for any of this these days? I would think with the uncertainty that you've laid out for us, capital markets have they dried up? Raising capital for these?
It's become a lot harder, and we've seen a real fall in terms of VC funding for example, for a lot of these projects. There's been a shift towards things like AI, defense spending, and there's also some big question marks around, the suitability of some of these early stage funds for funding clean energy and climate technology in general. The returns profiles are very different to many other sectors. And that means that, there's an increased relevance to the kind of policy changes we've been seeing recently. And actually, when it comes down to it, you really do need a lot of state support. Even, that needs to be qualified. When it comes to EVs, that might be the case. We're still going to see a lot of deployment of solar power, for example, and things like batteries, because costs have just gone down so dramatically that a lot of that will be built even without the kind of federal support that we saw until recently. So there is a silver lining for some sectors, but for many sectors, we're going to see some real difficulties in terms of financing.
Right. Yep. Seems like a difficult headwinds for this transition here. Antoine Wagner-Jones, head of trade and supply chains for BNEF. They're the team that tracks pretty much this and analyzes this energy transition. So we appreciate getting a few minutes of their time.
The solar energy sector has had a really rough go these last couple of years.
Yeah.
I mean, higher interest rates made it unaffordable for a lot of people to want to install paneling on their homes. And now you have an administration that is actively against it in every way, shape, and form.
Yep. And boy, I think the hardest hit is the offshore wind. I mean, just shutting down projects, projects that have been funded and
80% complete.
Yep.
And then they get shut down, like the one in Rhode Island.
Yeah. So I don't know. It's, again, some tough times for the transition to perhaps a cleaner energy grid. We'll have more coming
그래서
up.
포지션 정리하고 재진입 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드리도록 하겠습니다. 현재 진입권 수익 청산 사인 드립니다. 자, 두 개월 기준 약 100만 원권에서 수익 청산 사인 드렸습니다.
주문 청산이 완료되었습니다.
자, 캡처 후 이제 사진 등록까지 좀 딜레이가 있어가지고요. 해당 부분 양해 부탁드리도록 하겠습니다. 자, 수익 청산 사인 드렸습니다. 자, 23차 진입뷰 이어서 대기하도록 하겠습니다. 자, 23차 진입뷰 이어서 대기하도록 하겠습니다.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast Live. I tell you, we're getting some IPOs are starting to pick up here. I just heard from a little bird that 5 IPOs launching today. Maybe get some pricing next week. Anthony Hughes joins us, equity capital markets reporter for Bloomberg News. Anthony, talk to us about just today, what we're seeing in terms of filings today. It feels like things are picking up in the IPO market.
Yes, this is really shaping up for next week to be the busiest week of the year in terms of the amount raised by US IPOs, with the companies that launched their IPOs this morning, which was somewhat flagged because they've first filed a few weeks back. Really, we're looking at these companies raising somewhere around $3 billion. There might be 1 or 2 IPOs that launch over the next day or two as well. So, you know, you're getting to a reasonable sum of money. These aren't really massive IPOs, but they're significant in their own way, with a big sort of bias towards fintechs, crypto, with some AI aspects to them as well.
All the buzzwords. Now, you know, September, people get back to work from their summer holiday, try to get deals done, but unfortunately, there's some headwinds out there most years, and that is September is not a good month for the stock market.
Yes, I saw some data this morning which suggested that in the last 10 years it was the worst month of the year, and I think the average was down about 2%. But you know, having said that, I think that there's a real appetite for IPOs, and if these things come out of the gates, and there's a sense that there's a chance that these IPOs can really produce pretty large alpha from day one, then perhaps these broader market headwinds may not stop these IPOs from going ahead and doing reasonably well. But it is a little bit of a concern.
One of the deals that filed today is Klarna, a fintech company, and here's what I didn't like. Klarna, the company, plans to sell 5.6 million shares in the offering. Selling shareholders are offering 28.8 million shares. I don't like my selling shareholders selling an IPO. In fact, in my deals, you have a hard time getting me to do that deal.
Yeah.
Is that unusual, or is that happening more and more these days?
We see a reasonable number of IPOs where there is selling shareholders, and I think it's always looked on upon as a little bit, not always totally favourably. I mean, this is the company that's been around for 20 years, and really in the last 5 years has sort of expanded pretty heavily in the US. So, I mean, I think some of those shareholders have been there for a long time, and ultimately they sell a portion of their holdings and retain some. So you know, it's something that pretty much accepted. But there's always a question about that.
Times have changed. Wouldn't have happened on my watch. That's why God made the 180-day waiting period, so you can't sell. Talk to us about performance. How have the IPOs been performing this year?
Pretty well, yeah. The average IPO is probably up around 40%. It's changed a bit over time. I mean, sometimes we've seen IPOs come really strongly out of the gate, up 100% or more, and then come back somewhat over the course of time as people move on to the next thing. But generally speaking, IPO performance has been very good, particularly we've got to say for companies that are in areas such as crypto and AI, whereas companies that have a lot of debt and come out of the sponsors, the private equity firms, are not as attractive. So, it's worth not getting carried away. And then the companies that people really like are the ones that have scale and growth.
체결되었습니다. 확인 바랍니다.
As long as companies are growing pretty strongly, there's going to be a fair bit of demand. But there are some companies that go public that don't really have strong growth characteristics.
Dumb question of the day. Do ETFs buy IPOs?
Well, typically in an IPO, the institutional allocations would go to ideally active investors. So there wouldn't be really a significant allocation to passive investors, although obviously when these stocks go into indices and whatever, they would form part of ETFs. But typically the aim and the goal of most IPO processes is to allocate to active managers who've done the work, they've looked at the fundamentals, they're looking at the company not because they're making a passive investment decision, but because they like the company.
What's kind of the institutional retail allocation these days on most deals?
Yeah, well, it's an interesting question at the moment because there is a big push on for more retail allocation to IPOs, but typically it's a single-digit number for retail allocations. But obviously, in the recent IPO of Bullish, which was quite notable, that company decided to allocate a significant amount of the IPO to retail through not just through the usual retail channels, but also through these self-directed retail channels. And this is something we've been looking at too. But for say 20% of the deal to go to retail is unusual. But it shows you that for certain sectors, particularly say crypto, where obviously a lot of the foundational support for that sector has come from the individual investors. That's not a bad strategy. But to capture a lot of the enthusiasm about IPOs is happening in the retail side, the self-directed side of the market. But a lot of that enthusiasm is really evident on when the stocks begin trading, because it's very difficult for those sorts of investors typically to get a lot of shares in these offerings.
So how's the calendar look for the remainder of the year?
Yeah, so we're seeing a reasonable pace of IPO filings that are suggesting that we'll have a pretty solid amount of IPOs. I think by the end of the year we might get somewhere between, I'm going to say, 20 to 40 pricing, but say from next week to the end of the year. The problem is when you get through to November, December, you do have some calendar disruptions because of holidays and the like. But so the real prime period to push ahead here is September, October, and obviously the bankers are hoping the market holds up through that period as well.
All right, Anthony Hughes, we'll keep an eye on some of these IPOs. Again, Klarna Group, one of the ones filing today, fintech company, and as Anthony said, you kind of have one of those buzzwords, AI, crypto, fintech, something kind of in your story to get the attention of the IPO market, which is not unusual. There's always flavors of the day out there for the IPO market. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. Looking at the markets here, still red on the screen, down at the lows of the day. The S&P's down 1.5%, the NASDAQ's down 1.9%. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now. Looking at the yield space, we got yields higher, up about 5 basis points. Your 10 years, 4.27%. Coming up, more Bloomberg Radio. This is Bloomberg.
is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. California's challenge to the Trump administration's summer troop deployment in Los Angeles succeeds in federal courts. CBS's Jake Rosen.
In a 52-page ruling, U.S. District Judge Charles Breyer found that the president and his administration violated the Posse Comitatus Act, an 1878 law that prohibits the use of the military for domestic law enforcement. Breyer blocked the Trump administration from deploying or using the National Guard currently deployed in California or any military troops in the state for civilian law enforcement.
But the judge said the troops still remaining don't have to leave. On social media today, President Trump called Chicago the most dangerous city. He's considering federal action there. Now to Washington, correspondent Nicole Killian reports Congress is back with action needed soon to head off a possible government shutdown.
You have a lot of concern with the, quote, big, beautiful bill that Congress passed as well. Obviously, that was a Republican bill, but Democrats remain concerned about those cuts to Medicaid and SNAP and really feel that this could be an opportunity with respect to government funding to try to leverage some of those issues to try to maybe restore some of that funding.
Overseas, a landslide wiped out an entire village in Sudan's Darfur region, and a rebel group controlling the area is appealing for international aid. CBS's Ramy Inocencio.
Local sources indicate that between 300 and 1,000 people may have been killed, and if it does end up being at that top end, then that would make this landslide one of Sudan's deadliest natural disasters in modern times.
There have been powerful aftershocks reported today near the epicenter of a major earthquake in Afghanistan, where the death toll tops 1,400. Jerusalem reporter Linda Gradstein tells us additional forces have been called up in Israel.
The call-up of reserves comes as Israel prepares to take over Gaza City after ordering the 1 million Palestinians who live there to move to safe zones in the south of Gaza. Hebrew media report that many reservists have requested exemptions for personal or financial reasons, and units are seeing lower turnout than in previous emergency call-ups.
A stock market dip today is being blamed on Friday's court ruling against President Trump's tariffs. Strategist Michael Farr.
There could be a court challenge to President Trump's tariffs, and that many of the revenues collected would have to be returned. That was unwelcome news for markets this morning that really do hate uncertainty.
Right now, the Dow Jones Industrial Average is down 540 points. This is CBS News. We now learn a familiar Starbucks drink almost had a different name.
Peter Dukes created the pumpkin spice latte back in 2003, but he told People magazine back then pumpkin-flavored things weren't that popular, so they almost went with another name instead, the Fall Harvest Latte. But they ultimately decided to give the PSL a go, and while it was well-liked at first, it really became a cult favorite years later when it blew up on social media.
Come on, it's pumpkin spice time. When it comes to fall, I'm about as basic as a kid.
Imagine ordering a grande FHL with extra whip. Doesn't quite have the same ring to it. Stacey Lynn, CBS News.
Kraft Heinz is splitting into two companies a decade after a merger of those brands created one of the biggest food makers around. Company says the move is designed to capitalize on new consumer trends. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
They're back. Welcome to the Tuesday edition as lawmakers fly into Washington from around the country with only 14 working days to avoid a government shutdown. What could go wrong? We're going to run the odds and look at the obstacles with Nathan Dean from Bloomberg Intelligence in just a couple of moments as President Xi sends a message to the U.S., appearing alongside Vladimir Putin and India's Prime Minister Modi as he attempts to rewrite the geopolitical map. We're going to talk about this important moment with Adam Ferrer at Bloomberg Economics. We'll have analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us as President Trump's global tariffs are ruled illegal by a federal appeals court. We've got a lot to talk about, and we start, as always, with a look at the markets, Wall Street, and a Bloomberg Business Flash now with Lisa Mateo. How's it look, Lisa?
Not too bad, Joe. Right now, Wall Street, they're returning from the long holiday weekend. It's a sour note. This week, traders are looking ahead to key labor market data for any clues on economic growth, the Federal Reserve's policy outlook. So let's get right to it. We have the NASDAQ down more than 1.5%, 397 points. The S&P 500 off about 1.5%, 96 points, and the Dow off more than 1%, 551 points. Heading over to the yield space, we have the 2-year 3.65%. That's up 3 basis points. The yield on the 10-year 4.28%, and that's up about 5 basis points. To commodities, gold hit a record. Let's check in with COMEX Gold. It's now up more than 2% at $3,587 an ounce. That's on rate cut bets. Then we have oil on the rise. Brent crude up $68 a barrel. That's up about 1%. And the Bloomberg Dollar Spot Index up about 0.4%. Few companies making news. We have Kraft Heinz. They're saying they plan to split into 2 publicly traded companies. One firm, including Heinz Ketchup, the other condiments and boxed meals. The second company, that will include slower growing grocery products, things like Oscar Mayer hot dogs, Lunchables. Their shares, well, they're down about 6.5%. And activist investor Elliott Investment Management, well, it has built a $4 billion stake in PepsiCo with plans to call for changes at the firm. The move makes Elliott one of PepsiCo's largest investors. PepsiCo shares, they're up about 2%. And the U.S. has pulled Taiwan Semiconductor Manufacturing's waiver to freely ship essential gear to its main Chinese chip-making base. TSMC, their shares down, ADRs down more than 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, what a treat to have Lisa Mateo along for the ride here on the Monday edition. No, it's Tuesday. Feels like a Monday edition of Balance of Power. I hope you had a long weekend. It's the big re-entry day here in the nation's capital and probably in your town as well if you're not with us here in the newly safe version of Washington, D.C. It's kind of a back to school, back to work, back to Congress situation here. It's fly-in day in Washington. It's going to be awfully busy at Reagan National Airport with lawmakers streaming in from around the country. And we're going to be talking to Nathan Dean in just a moment here about what is on the agenda and whether we can avoid a shutdown, because that's all anybody's going to be talking about, well, starting right now for the rest of the month. But you could tell something's different in the air, right? The light is a little bit different. The school bus is rolling by, the group of kids on my front yard this morning, and the traffic. I don't know how you did this morning, but it took me twice as long to get in as it did on Friday because it's on. It's the fall season. There's pumpkin spice in the air. In fact, Starbucks, did you hear that story? Producer James just put this in front of me. The best sales week ever? Yeah, record sales week, thanks to the pumpkin spice. And we've got headlines on the terminal here. Starbucks CEO, pumpkin spice season drove record sales week. Stand by for the protein cold foam. That comes out at the end of the month, September 29. I don't know about this. Maybe the biggest sign of them all was the return of the fleece vest that will someday hang next to Fonzie's jacket in the Smithsonian. Nathan Dean's Bloomberg Intelligence fleece vest. We're on YouTube right now. Search Bloomberg Business News Live, and you'll see what I'm talking about. You can always watch the radio show on TV. Nathan Dean, of course, senior U.S. policy analyst at Bloomberg Intelligence. And it's the fleece vest that really is the reason why we call him America's dad. Welcome back, sir. Happy fall.
Happy fall.
Are you a pumpkin spice guy?
I am. I usually do 1 or 2 a season.
1 or 2 a season,
yeah.
So not really a fanatic.
I got to lose some weight. They're pretty bad for
you. I mean, in August, we're doing record sales week. In August with the pumpkin, it does seem to be something. The other thing that comes with fall, apparently, is a government shutdown. Now, you've been running odds on this, and I want to talk to you about this because lawmakers are coming back with what they think is an agenda, and it could be interrupted by a lot of things, beginning with this. There are 14 legislative days left, Nathan. What does that do to the odds?
So we're at a 40% chance of 40% chance of a shutdown.
Okay.
I want to make sure I got that right.
Good.
40% chance of a shutdown. Now, the reason being is that if you look at the goals of each party going into this, the rhetoric is going to be high. You've got a rescissions package. Democrats are not going to like that. You have Republicans going out there saying that we want to have more cuts. Democrats are not going to like that. You have Democrats who also want to be seen fighting President Trump. But at the end of the day, we still don't think that there's going to be a shutdown because we don't see the reason why the political parties would get gains out of this.
Yep.
What I would say is that the Democrats, we have a long way between now and the election. And, it's one of those things where if they don't come together and create a deal, it's not going to really hurt them right now. I just say that we'll see this in December.
If not a shutdown, a CR. So it's a CR to December. Some are talking again about a year-long CR, which a lot of lawmakers have an allergy to, and certainly the defense hawks do as well. They're actually marking up bills this week. There's no way they get the 12 spending bills done, so it becomes a continuing resolution. Why December? Because of the deadline? The holiday creates the pressure?
Well, don't get me wrong. These funding fights, these are great opportunities. Like, look, if I'm a policymaker and I want to get something done, I don't want to have a one-year continuing resolution. Let's call this case in point. One of the things that we've been telling our clients to watch out for is Senator Durbin's Credit Card Competition Act bill. It hasn't been offered on the floor, but there is a greater than 0% chance that Senator Durbin and co-sponsor Senator Marshall try to attach this either to the NDAA or to our government funding fight, because these are great chances to try and push policy and bypass a lot of time and rhetoric. So if you're in the credit card space, if you're looking at Visa and MasterCard, something to keep in mind. So if I'm a politician, I'm looking at this through the guys wanting to try and score political points, let's not have a one-year CR. And I should just say is that if we get into a situation where like December or March, where both parties are saying, look, maybe we should have a government shutdown, the party that always is seen instigating the political the shutdown is the one that pays the political price. Now, we're a long way from November of next year. I mean, we're not, when we get to next summer, chances are government shutdown isn't going to be what people are thinking about voting-wise.
Yes, right.
But momentum is certainly a real thing. Momentum needs to build. And so that's why I do think at the end of the day, the Democrats, will face this decision of, do we want to keep the government open? Because if you don't, I could see a scenario where the Republicans come back and say, fine, 85% of the government is now not essential.
Yeah.
And let's try running it for 6 months and see what happens.
Russ Vought has a plan for that.
Exactly.
From what we understand. I think you mentioned that. The Democrat from Connecticut sees it differently. Chris Murphy, the senator, on Twitter, on X. Trump, he writes, is rooting for a shutdown. He knows he has created a huge problem because now any budget deal with Republicans isn't worth the paper it's written on. He's not even pretending to follow the law. Is he talking about rescissions? He's talking about the big, beautiful bill?
He's talking about rescissions. Yep. I mean, obviously, last Friday we had a rescissions rescissions package come in from OMB. This is $4.9 billion. Most of it is geared towards foreign aid. And for what it's worth, I don't think this rescissions package is the one that would push Democrats to say, is enough is enough. Let's go to a government shutdown.
They said that after the last one, I thought.
They would, but when it comes to foreign aid, it's a little bit different. I think if you're actually paying, if you're trying to rescind stuff, and for those of you who don't know, this is essentially an offer from the White House going to Congress and saying, look, Congress has already approved this money. We want to rescind it, and you can get it through a vote in the House, a majority, and a majority vote in the Senate, no filibuster. And this is what happened earlier. Now, you've seen Senator Murkowski and Senator Collins come out and say, we don't like this. But again, this is one of those things where if Congress doesn't resolve it, and if Congress shuts down on September 30th, this rescissions package is known as a pocket rescissions, and it just moves forward. I don't think it's going to rise to the issue of the Democrats are going to put their flag on the ground and say, this is it, because foreign aid is a little bit different than things that impact your constituents. Think of the Medicaid cuts that came from the one big, beautiful bill. That's what the Democrats want to be fighting.
Well, it was NPR and PBS in the last one that was said to be a deal breaker. The Democrats say, how can we trust you if we thought we had a deal, we voted to approve the money, and then you came and clawed it back?
Well, but that's why you do the continuing resolution. If you don't trust the White House, come up with these short-term extensions and just try and keep the funding flat. And I think that's where ultimately this is going to happen, because if the Republicans come in saying that we want to cut funding, whoever comes back and says we're going to agree to a funding flat CR, minimum changes, But at the end of the day, also remember, President Trump wants $2 billion for Washington, D.C. There's a lot of things that President Trump wants on the revenue side from these deals as well.
Interesting. We've mentioned rescissions a couple of times. We have to fund the government. What else is on the agenda? Are we going to see a stock trading ban, for instance, see the light of day?
You know, we're actually seeing a little bit more momentum. This is the legislation that would ban Congress people from going and trading stocks. You know, it seems like there's a little bit more momentum building on that, but I would just caution and say, look, things don't happen fairly quickly unless they have to. And the only thing that's keeping the government working right now, or at least working towards, you know, trying to get something done, is this government funding, the NDAA, extending programs like the Farm Bill, the National Flood Insurance Program. You know, there's a couple of things that have to be extended. Those are the things that Congress is going to focus on. Everything else is going to get pushed to October.
I have to ask you about cannabis because you're here and we tend to touch this. And there's a big question about rescheduling that we've been getting to on the regular here. Roger Stone writes the big op-ed last week that had your phone ringing. People wanting to know if we need to take this seriously or not. Of course, this is a longtime friend, supporter, advisor of and to Donald Trump. And he writes, if Trump makes the move to reschedule cannabis, he will be bringing Washington in line with the American people. It was an op-ed in Marijuana Moment. Does he have the president's ear on this?
He has one of the president's ears. And what I mean by that is, let's go back
Who's
to
got
President,
the other one?
Well, let's go back to President Trump's question in the press, the press conference.
Yeah.
You know, he said, well, I think, and I'm paraphrasing here, I think there's a lot of good things that can come from reschedulization, but I've also heard a lot of negative things. And so for us, what I'm telling my clients is, look, anticipate a decision coming from the White House that has positive tones for the marijuana industry. But again, I think it goes back to this process is that the DEA is the one that's going to drive it. I think it's going to take time, and I don't think it's going to happen in 2025. But, you know, there's a decent chance it could happen in 2026.
He's got a very concerned DEA on his hands, is the answer, right?
Yeah,
that's the tempering effect.
Obviously, anecdotally, you've heard the DEA staff is not on board with this. And then Terrence Cole, the administrator, is, has 30 years of anti-marijuana positions.
You've also got some Republican lawmakers who don't love this idea either. So we'll keep chewing on this in the meantime. And if there's another rescissions bill, you'll hear it from this man right here. America's dad, Nathan Dean, with the most famous fleece vest in America, the BI fleece vest. One of these days, I'm going to get some of that BI swag. I feel like the gift shop needs to happen. I'm Joe Matthew in Washington. Thanks for coming in. It's the Tuesday, feels like a Monday edition of Balance of Power. We're going to turn to geopolitics coming up. Did you see President Xi, Vladimir Putin, Prime Minister Modi shaking hands, laughing? Is this the new world order? We'll have that next on Bloomberg.
현재 두 계약 기준 200만 원대에서 큰 거래량이 붙지 않고 있습니다. 조금 더 지켜보고 대응 이어나가도록 하겠습니다. 손절 사인 드리도록 하겠습니다. 손절 사인 드리고 재진입 사인 드리도록 하겠습니다. 자, 손절하겠습니다. 현진이 건 손절 사인 드립니다. 손절하도록 하겠습니다.
주문 청산이 완료되었습니다.
24차 진입뷰 대기하도록 하겠습니다. 24차 진입뷰 대기하도록 하겠습니다. 자, 금일 예정되어 있던 이제 경제 지표는 모두 발표가 되었고요. 현재 백악관 일정 3시에 트럼프 대통령 발표가 예정되어 있습니다. 자, 정확히 어떤 발표인지는 아직 확인이 되고 있지 않고요. 발표 예정이라고만 나와 있습니다. 자, 24차 진입뷰 대기하도록 하겠습니다.
It is 12:21 on Wall Street. I'm Lisa Mateo. Wall Street kicking off September, trading lower. Right now, the NASDAQ down more than 1.5%, 365 points. The Dow off about 1%, 500 points. And the S&P 500 down more than 1%, 89 points. The two-year yield's 3.65%. That's up 3 basis points. The yield on the 10-year, 4.27%, and that's up 4 basis points. We have the Bloomberg Dollar Spot Index. That's up about 0.5%. On the economic calendar, traders, well, they're turning to key jobs data out later this week. Ahead of it, though, today, U.S. factory activity, that shrank in August to 48.7 for a 6th straight month. That's driven by a pullback in production. The Institute for Supply Management's manufacturing index, well, that saw a slight improvement from 48 in July. In other news, Jane Street pulled in a record $10.1 billion in net trading revenue in the second quarter, beating out all of Wall Street's biggest banks. And it looks like consumers continue to spend on jewelry. Signet Jewelers, that's the owner of Zales and Jared Chains, well, they raised their full-year sales guidance ahead of the upcoming engagement season. Its shares are up about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash.
All right, Lisa Mateo, thank you so much. I'm Joe Matthew in Washington. This is Balance of Power, the early edition on a Tuesday. Bloomberg Radio, satellite radio, channel 121, and you can watch the radio on TV by going to Bloomberg Originals or to YouTube. Search Bloomberg Business News Live. For this program are all of our shows that come from Washington and New York throughout the day. It's the coolest thing. I've said this before that we've got going. You can pause it. You can back it up when you want to hear exactly what Peter Navarro just said. He was speaking yesterday, in a big day yesterday. The optics
자, 진입 사인 드리도록 하겠습니다. 자,
geopolitics
매수 진입 사인 드립니다. 자, 두 개야. 매수 진입.
Putin.
체결되었습니다. 확인 바랍니다.
071.25입니다. 071.25
is an item. Add President Xi, and you've got quite a story here. They were shaking hands, they were hugging, they were laughing. And a striking answer to the summit that we saw in Alaska. Peter Navarro, the president's trade advisor, was out at the sticks in the White House driveway talking about trade with India. You know, we are now looking at a 50% tariff on India. And the last time we spoke with Peter here in this studio, it was unclear whether we were actually still in talks with India, having seen negotiations break down. That's what he had to say in the driveway at the White House yesterday. Listen.
It was a shame to see Modi getting in bed as the leader of the biggest democracy in the world with the two biggest authoritarian dictators in the world, in Putin and Xi Jinping. That doesn't make any sense.
The Shanghai Cooperation Organization, the SCO, the Eurasian Security Grouping, met on Monday alongside the heads of state from these other countries, which is why we found this remarkable collection of people. And it's brought a really great piece of reporting to the terminal here as we look at the big picture with questions about redrawing the geopolitical map as we know it. China's Xi redraws geopolitical map with embrace of Putin and Modi. Adam Ferrer covers all of this for a living at Bloomberg Economics, where he is senior geoeconomics analyst for the Asia Pacific. It's great to see you. Welcome back. I hope you had a great weekend.
Yeah, good to be here.
Because we're trying to understand really what's happening here, the redrawing of geopolitical lines. It was only a couple of days ago, Peter Navarro sat here and referred to Modi's war, remembering that the 25% that was added on here to bring it to 50 was punishment for India buying Russian oil. Now we find them together in a literal embrace. Did the U.S. push India there?
So the imagery was stark, as you've walked through, not only individually between Modi and President Xi of China, but obviously President Putin of Russia, hand in hand, talking, laughing. President Modi, or Prime Minister Modi, also took a ride, and President
he got an hour in the limousine.
In the limo.
Did Putin wanted to top Trump on that, right? They only got 5 minutes of the beast.
That's right, potentially. I mean, what's clear is that Modi is demonstrating his freedom of action, his own autonomy, and the fact that India has other choices out there, not just the United States. And the timing of this summit, which has obviously been on the books for a long period of time, gave him that opportunity to demonstrate that there were other options. Now, to be clear, though, the scope of his discussions with both Russia and China were far more limited than the pictures would let us believe, particularly when we look at China, a country that Indian soldiers have actually gone to blows with as recently as just a few years ago, that has deep structural problems in their relationship, deep concerns about competition that China has about India's growing economy, and India's concern about China dominating its economy and limiting its autonomy in the region, both as a security partner and as an economic entity. And so with that in mind, this was a tactical shift on Modi's part, not a strategic shift in terms of realignment with President Xi in the long term. And when we look at the announcements, actually the substance of what came out of this, we saw very little. Right? We saw talk of returning to direct flights between China and India. We saw some discussion of smaller levels of border trade, but that's the level that we're talking about. Despite those pictures, there's still a lot to do. And with Russia, we saw a much friendlier relationship, right? Putin and Modi see themselves as strategic partners and have for some time. Modi was demonstrating directly, a pushback against the White House, that he could still have his relationship and that he was going to continue to buy oil and trade with Moscow. And all of that designed for both the domestic audience and for those in Washington to understand that they can't push him around.
Well, it's really interesting that the White House was having this conversation last week ahead of this taking place. And I want to go back to what Peter Navarro said here on the program when he was referring to India purchasing Russian oil to the benefit of Moscow and its war machine in Ukraine. Here's what he said.
Everybody in America loses because of what India is doing. The consumers and businesses and everything lose, and workers lose because India's high tariffs cost us jobs and factories and income and higher wages. And then the taxpayers lose because we got to fund Modi's war.
We've got to fund Modi's war. What role, just backing away a little bit from the specifics of what he just said, is the war in Ukraine playing in this relationship?
So the reality for Modi is that Ukraine is not front of mind, right? He's thinking about...
It's a non sequitur.
It's a separate discussion.
But people see them laughing and shaking hands thinking that, these bad guys were funding the war. Prime Minister Modi is simply looking for the cheapest oil for as many people as he can. Is it as simple as that? How about President Xi?
So for both of them, oil prices are important, right? I mean, it makes up a large portion of their need. Both of them are very dependent on energy imports. And as you said, for Modi, this is about cheap oil. It is about a broader strategic relationship with a key defense partner in Russia. But Modi has tried to work his way in the middle, maintaining a strong relationship and developing a relationship with Ukraine and Russia, and even trying at times to try to push for that peace agreement, but not risking his own political capital to do so. Beijing is in a very different position, right? Following Russia's broader invasion of Ukraine, Beijing stepped in to support Moscow as Western sanctions really started to cripple the economy and has now become its primary and principal economic and security partner globally. And so this meeting with President Xi and President Putin was yet another moment for them to highlight that that relationship isn't changing and that they're going to continue to grow what has become a over $250 billion trading relationship and a key lifeline for Moscow as it continues to conduct its war in Ukraine.
I've only got a minute, Adam, but I'm just wondering what happened to your phone, what happened at your desk on Friday a little after 5 o'clock when the appeals court ruled along with the International Trade Court to say that most all of Donald Trump's tariff regime is illegal.
So I think this didn't catch many of us by surprise. Based on the arguments that were put forward before, there was an understanding that the court was likely to rule that the president exceeded his authority under IEEPA to put these tariffs in place.
Ruling.
That said, across our, people we're talking to and what we're hearing from, other global partners is that there's an expectation that Trump is committed to these tariffs, that he's going to find a way to get those tariffs in place, whether it's through IEEPA or through a variety of other mechanisms.
So just replace the emergency and it's a different conversation.
Yeah, but that said, uncertainty looms large again, right?
Well,
while tariffs might come back, at what rate, on what goods, and how will they be implemented? So, and throw on top of that this question of whether they'd have to refund all of the tariffs they brought in. And, there's some really big questions left
We may not want to be spending that money right now. Adam, it's great to see you. Thank you so much. It's always a smart conversation with Adam Farah, Bloomberg Economics. And it's exactly what Adam was just talking about, the uncertainty. The very reason we wanted to talk to Christine Aquino, managing editor for Bloomberg Markets Live blog. This is the person who's got the minute-by-minute breakdown on stock trading. And the last time I looked, we were pretty close to our lows of the session here. We woke up with a 500-point decline right out of the gate on the Dow. The S&P 500 is down almost 100 points, 1.5%. Christine, uncertainty is the word here? Because you'd think that tariffs going away might make the market happy, but the fact is we don't know again.
Absolutely, Joe. Again, markets are back in limbo, and that is ultimately what they're allergic to when it comes to all of these policy developments, right? I mean, the impact of the policy is one thing, but just questions over how it's going to be implemented, when it's going to be implemented, and now whether it's going to be implemented, given the questions over the legality of all of this. I mean, this is exactly the type of stuff that investors don't like to see, and this is exactly what we're seeing. And combined with the seasonal weakness that we do tend to see in markets in September, it really just makes for a recipe for bad news. And this is exactly what we're seeing in both stock and bond markets today.
Well, I'm glad you mentioned the seasonality. So tell our listeners and viewers what we might be in for here, because you've got a market that some would suggest is priced for perfection, certainly one that's near record highs. And we just learned a lot in what's at least left of this earnings reporting season. Are we begging for a little correction here?
It certainly seems that way, Joe. Yeah, absolutely. Just because, as you mentioned, stocks enter September priced for perfection. And we already got some whispers, for instance, of some of the big themes, right, that have been driving equities in the first 8 months of the year. That is still that AI tech theme. But we did get a signal from NVIDIA that growth in that space will be moderating over the next few years. I mean, and it's inevitable that it can't just keep growing at a record pace year after year. And so there's that realization at a time when the valuations, even though they've come down from record highs, are still pretty lofty. And then you add in uncertainty over what's going to happen to the Federal Reserve, both in terms of its personnel and also the policy meeting that we're going to see on September 17th. Is there going to be a rate cut? Or if not, what the rate path looks like for the rest of the year. Throw all of these in together, and this is what we get for a September back-to-school reality check.
Oh, you had to remind me. I know. It kind of. Do you feel like it's back to school today? It's not like we weren't at work already, but I feel like I'm stressed out to go back to work and school. How about this Bank of America call? This is something else, considering the backdrop that you just painted, Christine, in our remaining moment. The S&P 500 to hit 9,914 by September 27, 52% higher from these levels. What are they drinking at B of A?
Listen, they're obviously drinking optimism juice over there, and I would like some if that's possible. But again, there will always be equity bulls in this market. That's never going to be a shortage. But perhaps what we're seeing is just a short-term correction. It really remains to be seen. But every time we do see something like this, there will always be people willing to buy.
Well, I guess so. I'll take what they're having. Pass the optimism juice around up there in New York, Christine. It's great to have you. Come on more often. Christina
자,
Kino,
현재
managing
약수익권에서
editor for the
실시간
Bloomberg
대응
Markets
중에
live
있습니다.
blog that you rely on every day. We'll assemble our panel next. They're back together, Jeannie Shanzano and Rick Davis off the long weekend. And only here on Bloomberg.
자, 개장 이후 약 3시간 지나고 있습니다. 장 마감까지 앞으로 약 3시간 30분을 앞두고 있습니다. 자, 여기서 수익 청산 사인 드리도록 하겠습니다. 수익 청산 후에 재진입 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 수익 청산하도록 하겠습니다. 자, 이 계약金약 80만원 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
자, 25차 진입뷰 대기하도록 하겠습니다. 자, 25차 진입뷰 대기하도록 하겠습니다. 자, 이전과 마찬가지로 조금 면밀히 분석 후에 진입 사인 드리도록 하겠습니다. 자, 그리고 진입권 대응이 길어질 수 있는 점 참고 부탁드리겠습니다. 점차 거래량이 줄어들면서 대응에도 시간이 소요될 수 있는 점 참고 부탁드리겠습니다. 자, 분석 후에 진입 사인 드리도록 하겠습니다.
is 12:40 on Wall Street. I'm Lisa Mateo. Tech stocks leading the losses. We have the Nasdaq down more than 1.5%, 369 points. Checking with Nvidia shares. Those shares, they're down nearly 3.5%. Let's move on to the Dow. Down more than 1%, 499 points. The S&P 500 up down more than 1%, 89 points. In the yield space, the 2-year 3.65%. That's up 3 basis points. The yield on the 10-year, we have 4.27%, and that's up about 5 basis points. To commodities, WTI crude $65 a barrel, with COMEX gold $3,591 an ounce. The Bloomberg Dollar Spot Index up about 0.5%. Japanese yen down 0.7%. We have the euro down about 0.5%. Treasury Secretary Scott Bessent, he tells the Washington Examiner President Trump may declare a national housing emergency this fall. So because of that, we're keeping an eye on some home building stocks. We look at D.R. Horton, they're up about 0.4%, but you look at Lennar down 0.6%. Installed building products down more than 1.5%. And Dreamfinders Home, they're down more than 1.5%. And low-cost Frontier, flying high. Their shares up 13%. Deutsche Bank raised the recommendation of the carrier to buy from hold, saying it's best positioned to benefit from that Spirit bankruptcy. Sumitomo-led group will buy aviation finance firm Air Lease for about $7.4 billion in cash. And finally, Elon Musk, he is predicting Tesla will derive about 80% of its value from humanoid robot Optimus. It's an initiative he first talked about 4 years ago. Now, meanwhile, deliveries from Tesla's Shanghai factory extended their slump in August. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. I'm Joe Matthew. This is Balance of Power, live on Bloomberg Radio on the satellite radio. We're channel 121. Hear all of our shows all day on Sirius XM, or watch them on Bloomberg Originals or YouTube as well. Search Bloomberg Business News Live to watch the radio on TV. We'll welcome our global television audience to the conversation in just about 20 minutes. And Kriti Gupta is going to be joining us here in Washington as well. President Trump on social media Sunday evening, in case you were wondering, all caps, never been in better shape, he writes. After several days of speculation about the president's health, and if you were on social media, you saw exactly what I saw. Somehow people speculating that he may have died. That was the conversation over the weekend, because he didn't appear in public for 3 days. By the way, there were pictures of him, I think on all those days, doing one thing or another. He was playing golf out over the weekend. But this has become a social media phenomenon. And I'm wondering if it speaks to the cadence that Donald Trump already has, the true level of overexposure that he has in front of the cameras for hours. We started last week
확인
with a
바랍니다.
3-hour and 17-minute long cabinet meeting. As the playbook pointed out, that's longer than The Godfather. So the man goes away for 2 days or something, and you've got social media and the internet melting down over whether or not he's alive. This morning on the Drudge Report, Don's attempt to dismiss health concerns backfires. I'm pretty sure it actually was he's fine. But there have been a lot of images of bruising on his hand, right? The swelling that he has seen in his ankles. And we hear a lot about the fact that he looks tired sometimes. And this is interesting because we're coming off the Biden administration, when public events were not a guarantee every day. And the fact that he was aging was something that we were all accepting at the time. Donald Trump is just a different animal. And it's where we start our conversation with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, both back with us off the weekend. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. And Rick is our Republican strategist partner at Stone Court Capital. I want to talk to you about the congressional agenda, guys, and a lot of things here. I don't want to belabor this too much because it wasn't real. But, Rick, I'm wondering about the optics behind this, and if it speaks more to just the insanity of social media and kind of the gossip-driven world that we're in, or the expectation that Donald Trump has created for himself to be before cameras every day. What do you think?
Yeah, that's a really good point, Joe. I mean, when you feed the beast like he does, and really enjoys it, obviously, hours and hours a day, as you point out, the 3-hour cabinet meeting was just an example. I mean, there have been pressers that lasted 4 hours. But like they say, you live by the digital and sometimes you die in the digital. And so digital buried him this weekend. I hope he had a good round, but he's back with a furious intent, today.
Yeah. You better believe it. He's going to be making an announcement right after we get off the air. Not entirely sure what he's got up his sleeve, but he will be before cameras again today. Jeannie, what do you make of this? Is this some sort of hangover from the Biden administration?
Well, Joe, I just can't get over the fact that on your 3-day weekend, you, Joe Matthew, didn't take a break and you just were on social media looking this stuff up.
Yeah, you didn't either.
I saw it too. By the way, the Drudge Report should start calling him President Trump, not Don. That's just my little beef. This was all over social media. I'm not sure. Maybe people were bored, but the man, to your point, did a 3.5-hour press conference on Monday. He never stops. He too deserves to go play a round of golf. So there you have it. I think people are just bored and they miss him and they want him back. So 2 p.m. today, we may get him back.
That's right. He's never been in better shape, he says. And I'm pretty sure I couldn't play as many rounds of golf he does every week. So it's fly-in day. Here we go. Let's get back to the fun stuff. Lawmakers coming back, and they're probably really glad to be here, having spent a month in many cases being yelled at town hall meetings. I don't know what your expectations are, Rick, but the bar is pretty low. I won't even ask you about regular order because getting 12 spending bills done in 14 days is obviously not possible. Will Democrats and Republicans look at each other and say, we can't do this. We can't shut it down. Let's pass a CR to get us through the end of the year?
I don't know. Politics is pretty depressing on Capitol Hill these days. The good news is we start the week with a nice bipartisan effort to pass the NDAA, the big defense authorization bill that typically passes when nothing else does, which could be the case this year. And that will set a positive tone in the United States Senate this week, where Democrats and Republicans overwhelmingly will support this bill, and maybe that sets a tone for the balance of the confirmations and the budgets and just the incredible amount of work that is stacked up because of an early holiday. And so we'll see. I think that anybody who's betting on this being a functional Congress between now and the end of the month is making a bad bet.
Jeannie, there was a request for a meeting that Chuck Schumer and Hakeem Jeffries made with their Republican counterparts. I'm pretty sure it hasn't happened yet, but the Democratic leader in the Senate is out with one of his famous Dear Colleague letters, basically urging Republicans to pass bipartisan legislation and reject further rescissions, both of which could get you a laugh in certain quarters here in Washington right now. I think it was Brendan Boyle, the top Democrat on the Budget Committee, who said on this program, one more rescissions package and we're done. We will not vote for any Republican spending measure. And well, we've got one coming. So 14 legislative days will produce what for the American people, Jeannie?
Well, it is anybody's guess at this point. A lot of this, I think this is a big moment for Democrats, to your point about this Dear Colleague letter that is out from Schumer and Jeffries. They are claiming that they are on the same page. They are working together, but reading it, I'm not clear what the strategy is. And that's the big issue here. What is the strategy of the Democratic leadership, and can they pull their caucuses along, and do they stick with it? Because we saw the last time around, they diverted. There was a lot of tension between Hakeem Jeffries in the House, Chuck Schumer in the Senate. He allowed the GOP to go forward with government funding, much to the frustration not only of the members of the House and Jeffries, but to the Democratic base. And I think Chuck Schumer has likely learned a lesson from that. We probably won't see that. But again, it's still unclear. But in their defense, it's hard to be clear on your strategy when you don't know what the Republicans are going to do. Last week, the White House was calling for a clean CR with very little details as to what they mean by clean, what the time frame is going to be. So, I mean, it's hard to counter a strategy when there is no strategy put forward. So I do think they all need to meet, but we haven't seen a meeting set yet. And of course, to your point, there's only 14 days and we shut down by the 30th of September.
Well, Chuck Schumer writes in this letter that instead of keeping even his most basic commitments, like releasing the Epstein files, Trump stonewalls, foments fear, attacks critics, and hurls lies to distract from his failures. We got to the Epstein files, Rick, in the second paragraph in the letter here, and it's a pretty long one. And the fact is the House Oversight Committee is today meeting in private with victims of Jeffrey Epstein, and you've got a discharge petition out there with a D and an R on it, Massey and Khanna, that they say will get the numbers to 218 to bring this to the floor and require the release of the so-called Epstein files. How quickly did we get bogged down in all of this fall? Are we picking up right where we left off?
Yeah, a little bit. I mean, we saw that the speaker, basically told everybody to go home in order to avoid this issue of Epstein and the vote that you mentioned. And yet, during the break, he was quoted on many shows saying, a lot of very positive things about the investigation that Comer is doing and the need for transparency, and didn't outright say that he opposed the discharge petition. So, but I think it's a sideshow compared to the importance of the federal budget. And so these two things will happen, I think, along a parallel line. I would say Schumer, to me, does have a plan. I don't think that there's anything much in his category other than the insurance subsidy for ACA expires with the end of this budget, and he desperately wants to re-up that, and he'll deal away whatever he needs to do to keep ACA whole. And this affects 4 million people, most of which are probably Democrats. So I think he's just setting up the big bargain.
How about, remember Rick said that those Obamacare subsidies are going to be a huge deal as we get closer to the end of the year. Jeannie, I don't know your thoughts on this, but when Tom Massey and Ro Khanna are on the same page, it does make you wonder if something's about to happen. They've got a news conference planned tomorrow with about a dozen Epstein survivors who are in town for this oversight committee hearing. How loud is this going to get?
It's going to get very loud. I mean, all attempts to quell this by leaving early have obviously failed. The reason this is still resonating is because representatives and senators are hearing from constituents. And as you mentioned, tomorrow we have a big press conference with victims, which they are hoping lights a fire under some of these Republicans. And then we had today the speaker come out with a competing resolution. So he is hoping that he can pull over some of those Republicans and keep them from voting for the discharge petition. But we have a long way to go on this, because even in the best case scenario for Ro Khanna and Tom Massey, they get this passed. What happens? It's got to get passed by the Senate. We haven't seen a lot of support for it in the Senate. And then the president has to sign it. So it's a long way to go on this. But all it means is that this Epstein story is going to continue to dominate Washington for many, many weeks. And all efforts to put it by the wayside by releasing transcripts and other things have absolutely not worked. And when you have the victims coming to speak today behind closed doors and tomorrow publicly, that is going to get a lot of attention from particularly the Republican base.
Yeah, well, I don't doubt that. And the president will continue to be asked about it. Rick, is there anything else on the docket? We get one more rescissions package just to make everybody even more upset?
Well, the current pocket rescission is really the hot topic, and that's what's really angered the Democrats, because any deal they make on the federal budget, it could be rescinded without even a vote by Republicans. Yeah, so there's a lot of tension related to fiscal issues, and now you've got Speaker Johnson going out saying, well, maybe we're going to have another reconciliation bill. And I think a lot of Republicans I talked to over the weekend were like, oh my God, that's the last thing we need. So I think it could be a pretty heady October, getting ready for the end of the year, once we get past this current standoff on the budget by September 30th.
Yeah, I think it was Patrick McHenry who said on this program on Friday, October is going to be insane. Are you running odds on a shutdown, Jeannie? Just to be clear, we've got about a minute left. Do you agree with Rick that Chuck Schumer wants to make a deal on Obamacare by the end of the year, therefore we don't shut down?
I'm not sure, surprisingly, that I agree on that. I know Rick's right. He wants that. He is desperate for that. But the fact is, he's got a base which is angry and does not want him to deal with the Republicans. How can you, given that they just rescind what you deal with? So I'm not sure he's going to be able to do it even if he wants.
We're feeling the anger here in Washington, even though it's a beautiful day out. Did you get outside to smell the roses? Rick and Jeannie did. They'll be back in hour 2 of Balance of Power as we welcome our global television audience to the conversation. Stay with us right here only on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Uncertainty returns, if it ever went away. Welcome to the Tuesday edition of Balance of Power as President Xi tries to rewrite the geopolitical map, just as an appeals court rules that most of the Trump tariff regime is illegal. I'm Joe Matthew alongside Kriti Gupta in Washington. We've got a lot to talk about today as lawmakers also return to town with just over a dozen working days to avoid a government shutdown. So it's back to work, back to school, and in your case, Kriti Gupta, back to the USA. Welcome.
Thank you so much for having me. I feel like the timing is perfect. It's almost like I planned it this way.
Well, you definitely picked a peculiar time to be here. We're counting down to a potential government shutdown at the end of this month. As I mentioned, tariffs are up in the air right now, and as lawmakers come back to deal with the Jeffrey Epstein story and everything else, we do have a lot of questions to answer around here. This tariff move, you must have been in the air somewhere between London and the United States when that happened. Has the markets a bit on edge today, too?
I mean, it feels like the markets have been on edge since Liberation Day, really, and they've been looking for a reason to really respond. And you would have thought that having that court appeals kind of work against Donald Trump would be a positive for these markets, and we're not seeing that today.
Well, we're not, because I guess we still don't know what's going to happen. He's going to keep appealing this and could rewrite the whole tariff regime. And so we want to start with the markets. As always, we'll bring you a live report from the White House coming up from Bloomberg's Tyler Kendall. We'll talk to Michelle Jamrisco about this fascinating session in China, the meeting in China. And Henrietta Levin will join us from the Center for Strategic and International Studies, all after a look at the markets. Lisa Mateo has that for us from World Headquarters in New York. Lisa, how's it look?
You got it, Joe and Kriti. Well, Wall Street kind of returning from the long holiday weekend on a down note. This week, traders, well, they're looking ahead to key labor market data, looking for any clues on economic growth, the path of interest rates. So right now, if we take a look at the NASDAQ, it's down more than 1.5%. We have the Dow down about 0.9%. The S&P 500 down more than 1%. In the yield space, we have the 2-year 3.65%. That's up 4 basis points. And the yield on the 10-year 4.27%, and that's up about 4 basis points. Over to commodities, we have COMEX gold. It hit a record right now at $3,591 an ounce. Over to oil, we'll go to WTI crude, up more than 2.5% at $65 a barrel. The Bloomberg Dollar Spot Index up about 0.4%. Checking with the British pound, down more than 1%. The euro down about 0.5%. The Japanese yen down about 0.7%. Few companies making news. We'll start with Anthropic. It has closed a deal to raise $13 billion from investors. It's a new funding round that nearly triples its valuation to $183 billion. Then Kraft Heinz, they say they plan to split into 2 publicly traded companies. One will include Heinz Ketchup and other condiments. The second's going to include slower growing grocery products. Shares, though, down more than 6.5%. Activist investor Elliott Investment Management, it's built a $4 billion stake in PepsiCo. And finally, the U.S. has pulled Taiwan's semiconductor manufacturing's waiver to freely ship those essential gear to its main Chinese chip-making base. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa Mateo, thank you so much. Watching Wall Street for us. We'll get back to Lisa in New York about 20 minutes from now to check in on the Tuesday trade, even though we all want to say it's the Monday trade. Still reacting on this Tuesday, feels like a Monday session, to the news of late Friday. What we like to call the Friday news dump, in fact, came from an appeals court, and a pretty important ruling here that called into question the entire basis, the emergency status for President Trump's tariff regime. It would impact most, if not all, of those tariffs. And it coincides with a remarkable moment overseas, President Xi hosting Vladimir Putin and India's Prime Minister Modi for a visit that Bloomberg is asking whether is rewriting the geopolitical map as we know it. We're going to talk to Michelle Jamrisco about that in just a couple of minutes. But let's start at the White House. Bloomberg's Tyler Kendall is standing by on the North Lawn right now. We are expecting to hear from President Trump a little bit later on today. Tyler, what do you have?
Yeah, hey, Joe. So this ruling really is dominating the headlines after the weekend, though it did come out perhaps on the quiet end, considering that it was 5 p.m. Eastern on Friday night. Now, this really has to do with those tariffs enacted under IEEPA, the International Emergency Economic Powers Act, and the court found that President Trump violated his authority because, as you well know, in order to invoke IEEPA, the president had to declare a national emergency. So for those so-called reciprocal tariffs, he cited persistent global trade imbalances, and for those tariffs against Canada, Mexico, and partly on China, he cited concerns over the border and fentanyl. And I'm bringing this up because I would expect to hear a lot of messaging around this from the administration, as we are expecting the Treasury Secretary Scott Bessent as soon as today to file a brief to the Solicitor General, which means that the White House might have their sights set on appealing this all the way up to the Supreme Court. Now, I think it's worth mentioning here, Joe and Creedy, that historically the courts have really been deferential to presidents when it comes to their ability to invoke national emergencies. But at the same time, we've never seen a White House invoke IEEPA in order to impose tariffs, let alone ones that are so broad ranging. Now, I don't need to tell either of you that there are trillions of dollars at stake here when it comes to this decision. I was pretty struck by a recent analysis from the Committee for a Responsible Federal Budget, which found that if the Supreme Court upholds this ruling, 71% of the expected tariff revenue for this year would all but vanish. But that doesn't mean that tariffs or the revenue with them are going away completely. A person familiar tells us here at Bloomberg News that the administration is looking at other federal authorities to invoke tariffs going forward, even as they plan to appeal this ruling.
Tyler, you're talking about trillions really at stake here when it comes to this particular court ruling. Talk to us about how this bleeds into the corporate space. We know that the White House has been in the kind of back and tug of war, a little bit of love and hate when it comes to NVIDIA. Now another major chip company in the crosshairs. Walk us through it.
Right, exactly. And Creedy, you're highlighting really what we saw come to light today as that tension, that push and pull between this administration as well as chip makers. We saw them mirror a similar move to last week that impacted Samsung and SK Hynix, essentially revoking TSMC's authorization to freely ship essential gear to its mainland Chinese operation base. Now, the administration here has really highlighted these companies as ones that are willing to work with the White House. They've pledged to reshore manufacturing. But then on the other hand, you also have them now policing their actions abroad. And that could lead to some
주문 청산이 완료되었습니다.
administration official tells us here at Bloomberg News that U.S. officials alerted TSMC recently that they were going to revoke what's known as their validated end user status. Think of that sort of as a blanket permission, and now the company is going to need to essentially seek individual approvals. But we know that that could pose some difficulty considering that the U.S. is already dealing with a backlog of export licenses. All of this to say that it just adds some uncertainty to the picture here, particularly as the U.S. has been trying to court these chip makers to get on board with President Trump's
체결되었습니다. 확인 바랍니다.
There's a lot there, Tyler. Thank you so much from a beautiful North Lawn. On this first week of September, Bloomberg's Tyler Kendall at the White House. This TSMC headline is really something, Creedy. In the process of talking about reshoring, we're also talking about upsetting the Chinese at a period of time in which we were supposed to be in talks about a deal. That's where Michelle Jamrisco comes in with her expertise on the Global South with us now in Washington, D.C. Michelle, it's great to see you. Revoking Taiwan Semiconductor's authorization to freely ship essential gear to its main Chinese chip-making base, just as President Xi sits down with Prime Minister Modi and Vladimir Putin for a weekend of festivities ahead of the big military parade tomorrow. Bloomberg is writing about the redrawing of geopolitical lines. Is that what we're seeing?
Yeah, a lot to unpack from the weekend's events, especially with all three leaders,
Amazing
Presidents
optics.
Xi, Modi, and Putin, all kind of getting together at the, the Shanghai Cooperation Organization meetings, and had bilateral meetings as well. Yeah, you can call it a redrawing of the global map. I think we're seeing a lot of this sort of culminating energy around the sort of BRICS countries and others that are finding, the enemy of my enemy is my friend. They're coming together with this frustration over the Trump tariffs, and they're finding ways to resolve, or at least move to resolve, decades-old disputes that they have with each other. You saw it with Xi and Modi talking about resolving border disputes that came to blows at different times, and talking about counterterrorism operations, and building their own bilateral trade ties, restarting direct flights between their two countries, and all of it. I think what you can see among those three leaders is a sort of almost taunting signal to the U.S. These photos, these embraces, handshakes, smiles, all over social media. Modi calling Putin, saying it was always a delight to meet with President Putin, all kind of meant to needle at President Trump, who has so far not taken the bait and typically likes to kind of pretend BRICS doesn't exist and doesn't have the power that it thinks it might have.
How much of this, though, is just a expansion of an economic relationship that really has already existed, especially when it comes to the likes of India and Russia, for example? Oil, defense, it feels like this has been in the works for quite some time.
Yeah, I think in that case, it's certainly just a doubling down of their warm economic ties. We did see where, this is crossing into the Ukraine-Russia situation. Modi reportedly spoke with President Zelensky before his meeting with Putin, before leaving for that trip. And Zelensky had said that he was assured that India would bring the appropriate message, the appropriate signals to Russia in that. I'm not sure he got what he wanted out of that bilateral meeting that happened between Putin and Modi, but certainly that is an element here that they're playing, India and Russia are trying to play to their advantage, saying, we're not giving up these decades-old ties either, even though we might not agree on everything that goes on with the relationship and with the war itself. They're setting that aside. It's all economy and economic ties for them in those meetings.
The idea of Prime Minister Modi for 50 minutes in Vladimir Putin's limousine, after we saw Putin do the same with Trump for only 5 minutes, I'm sure it was not a coincidence. What were they talking about? What happened in that car?
And that's what I mean when I say, this is perhaps some sort of taunting signal. Our colleagues on the other side called it limo diplomacy. And as you mentioned, after this remarkable invitation by President Trump to have Putin in his vehicle, in the beast, as we call it, with all the security implications that sends, for Putin to turn around and then do the same for Modi at a time when both countries are having very tense relationships with the U.S. It certainly does send a sort of diplomatic signal in some ways. We don't know the details of what they discussed, but there's still plenty on the table between Modi and Putin, and certainly, I think how to kind of help together thwart the Trump tariff energy was probably top of the list.
Yeah. Well, Michelle, those are three key, of course, allies now in Asia as well. But the secondary sanctions bit is so interesting to me because this is something that Donald Trump has really taken a very fierce step forward on. You now have European leaders say they're going to be doing the same thing, especially when it comes to targeting China, India. It's been put out in the ether. Whether it actually happens is a different story. Right. How effective could that be?
Yeah, well, it'll certainly change the game because as to this point, we haven't had China be involved in that direct target of secondary sanctions, as we're awaiting certainly a leaders summit between Trump and Xi, a sort of thawing of that sort of trade relationship. And of course, we got the 90-day extension of the trade truce with China just last month, just a couple weeks ago. So there's kind of a holding pattern that we have right now between the U.S. and China. But India, as well as some others, are asking, well, why just us? If you're going to do secondary sanctions, what's going on with China? Why aren't you targeting them for these same penalties?
So let's talk about secondary tariffs, as the president put it at the time, secondary sanctions. The deadline just passed. It was a 50-day deadline. Remember that? We just passed it, I think, 2 days ago here, having been revised multiple times. There's no end in sight when it comes to the fighting. There's no actual deal or hope, it seems right now, for even a ceasefire. At what point do these secondary sanctions take effect?
Well, we certainly have a lot of overlapping deadlines.
That's
so
true.
I think you have
the
the 2-week deadline. We've got the 90-day truce with China. We've got deadlines that have been threatened. And as you know, Joe, the president is fond of saying in 2 weeks.
That's right.
Using that for many different issues. So we'll have to see how these kind of coalesce. I think we will probably hear from the president today in some form that speaks to the nature of these issues. He's been, I think, loath to comment directly on these leaders' meetings of the triumvirate of folks that we've been talking about today because, he doesn't want to lend credence to any leverage or power that gives them against the U.S. right now. So we'll have to see. I see where these other powers are kind of playing their own game, trying to play Trump off himself. And so we'll see how those conversations go. But obviously, when you have these conversations going on 3 different tracks with 3 different countries, and Trump wants to win them all, it's going to get a little sticky.
Yeah. Great analysis from Michelle Jamrisco, as always, balancing the White House and national security and the stories that she's reporting on and editing here in Washington, D.C. Creedy, let's assemble the panel. They're both with us today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Rick is our Republican strategist and partner at Stone Court Capital, and Jeannie is a democracy visiting fellow at Harvard Kennedy School's Ash Center, Bloomberg Politics contributor, of course. I'd like to get into this with both of you. We've been talking about it for a couple of years with regard to the war in Ukraine, with regard to Russia, and of course America's relationship with China, which has evolved in interesting ways between both the Biden and the Trump administrations. Rick, what went through your mind when you saw these images from over the weekend? Putin, Xi, Modi hugging, laughing, talking together in China, not to mention Modi and Putin together in a vehicle for almost an hour. These lines are being rewritten before our eyes. Is it because of the Trump administration?
Well, you didn't see this kind of participation just a few years ago with these dialogues. So it is a troublesome situation. Troublesome that we don't have a better relationship today with India, somewhat sparked by the punitive tariffs that President Trump has put on them. But I'd point out another one. Turkey's Erdogan was there too, and he's a member of NATO. So we have a NATO member sitting in a group with, all of our global antagonists, and so it's got to be a warning shot for the Trump administration and their national security group to start getting serious about how they play these global affairs. Because even though America First says, "Oh, let them do whatever they want to do," this is not good for democracy and freedom around the world.
Jeannie, hop on in here in this conversation. I feel like we've been focusing so much on the negatives of this. Let me take my Debbie Doomsday hat off for a moment and put my positive one on. If we start to see relations between the United States thaw with either Putin, Xi, or with Modi, does that have a cascading effect on this trio?
It possibly could. And I wish, Kriti, I could join you and be optimistic, but I am so not. I think in terms of foreign policy, this administration just 8 months in, it has really been a disaster. You look at just the impact of the tariffs on our alliances. If you're going to confront and compete with China, the one thing you need is allies. You cannot win this competition without them. And what does he do? He goes and he inflicts tariffs on our closest allies, including, as you guys were just talking about, India, secondary tariffs. And of course, they thumb their nose at him, and Modi goes right over and is now with Xi Jinping and Putin. So yes, a thaw in relations could be beneficial, but I'm deeply worried that things have gotten too far now, and the president promising his promise about 24 hours he could, make Ukraine safe again, end the war. You look at what's going on in the Middle East, you look at our relationships with India, the entire world has now reconfigured or is in that process, even Japan meeting with Xi Jinping recently, and that's as a result of these policies. So I am not as optimistic, although I will try to be when I come back and talk to you next.
Ever the optimist. I don't know. It sounds to me like the secondary sanctions could have quite an impact right now, which is something that Rick Davis has been calling for a couple of years. Our great panel will be back with a lot more to talk about as we turn to domestic politics. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, with us here on the Tuesday, even though it feels like a Monday edition of Balance of Power. We'll take a look at Wall Street. Lisa Mateo checking stocks for us with a new whiff of uncertainty in the air over tariffs. And we've got Kriti Gupta with us today in Washington, D.C. And for the next several weeks, we'll be back with a lot more smart talk from Washington by way of Wall Street straight ahead. I'm Joe Matthew in the nation's capital, right here on Bloomberg TV and radio.
It is 1:21 on Wall Street. I'm Lisa Mateo. Some trade uncertainty in the air. Traders also looking ahead to the labor market data out later this week. The jobs report comes out on Friday. Ahead of it right now, stocks are lower. We have the NASDAQ down nearly 1.5%. The Dow off about 0.9%. The S&P 500 off more than 1%. The 2-year yield, 3.64%. That's up 3 basis points. The yield on the 10-year, 4.27%, and that's up about 4 basis points. We have the Bloomberg Dollar Spot Index. That's up about 0.5%. Checking with other currencies, the Japanese yen down 0.7%, the euro down 0.5%, the British pound down more than 1%. Some IPO news. Fintech company Klarna, some of its shareholders, they're looking to raise as much as $1.27 billion. This is as the company revives that New York IPO that was delayed earlier this year. Then we go to BlackRock Coffee Bars, looking to raise as much as $265 million in an IPO. It'll become the largest publicly traded coffee retailer on a U.S. exchange, joining rivals like Starbucks, and Dutch Brothers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Lisa Mateo with us today. Great to have you along for the ride, Lisa. I'm Joe Matthew in Washington, and this is Balance of Power. Alongside Preeti Gupta here in the nation's capital, in for Kaylee Lines, as we turn our attention to domestic politics. Preeti, we've been talking so much about the potential for National Guard troops or federal law enforcement to enter Chicago has been the next city that President Trump has highlighted here. Of course, they're on the streets of Washington, D.C. He's suggested other cities like New York might get that treatment next. All of this, of course, began in Los Angeles a couple of months ago.
And at the time, even when he was threatening Los Angeles, no one really took it that seriously. This was an unthinkable move in terms of troops, in terms of actually the legalities around it. And now we find out, well, it's actually not legal to do that.
Well, we did get a court ruling that's going to raise some real questions about going into other cities. The president has a lot of leeway here in Washington, D.C. in the federal city. It's not like that when you go into another state with an executive that actually is the commander-in-chief of the National Guard. So here we are, the judge ruling here that the president's deployment in L.A., this was in June, against the immigration crackdown, violated federal law with much to wonder about the way forward. We assemble our political panel. Rick Davis and Jeannie Shanzano are both with us, Bloomberg Politics contributors here on the Tuesday edition. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, democracy visiting fellow at Harvard Kennedy
주문
School's
청산이 완료되었습니다.
Bloomberg Politics contributor. You know, one thing, Jeannie, that Donald Trump has always said since he got back in the White House is that he will comply with court orders. Could this slow down the role of National Guard troops, if not federal law enforcement in other parts of the country?
자, 수익 청산사인
You know,
들었습니다.
it absolutely
27차
could, but I'll tell you, I am
하겠습니다.
doubtful that it is going to slow down this administration, and I'll
대답하도록
tell you why.
하겠습니다.
Very much like
자,
his
개장 이후 약
imposition of the
4시간이
tariffs, which
지나고
is something
있습니다.
he has talked about almost his
사망까지 약
entire
2시간
adult
만에
life.
앞두고 있고요.
He has been fixated on violence in Chicago
사망까지
for much of his life.
트레이딩을
He built the Trump Tower there. He has
노력해보도록
talked about it
하겠습니다.
since
자,
before he
27차
ran for
진입
election the
쭉
first
대기하도록
time,
하겠습니다.
continued right through to the current moment. I think as
자,
early
바로
as
진입
today, if
사인
I'm
드리도록
reading my Truth
하겠습니다.
Social,
자,
right?
이전과
So
동일하게
I'm not
5개
sure this is going to slow him down.
하겠습니다.
The other thing
자,
is
매도
that we
진입
also
사인
have a
드리도록
Supreme
하겠습니다.
Court
자, 매도
decision
진입
just
5개야.
earlier a few months ago in which
체결되었습니다.
they said they
확인
will allow
바랍니다.
federal district court judges to impose nationwide injunctions, which raises the question. Is Judge Breyer's
자,
ruling
매도 5개야.
just for his district, or does it
입니다.
apply nationwide? So as much as I would like to think this may slow things down so we could get a real decision of the Supreme Court, I'm not sure it's going to slow down this administration.
Rick, weigh in here. Do you agree with Jeannie on that point? Does this serve as some sort of deterrent when it comes to other cities across the United States? Or at the end of the day, could this simply be just something that happens months after the actual action of putting troops in those cities? How do you view it?
Yeah, Critty, I think this is exactly what Trump is looking for. He wants to test the legal boundaries of a very powerful presidency. And he's done it in various ways. And this is just one of the most current ways that he has said, sue me. I'm going to deploy these troops. I'm going to stake out an emergency. I'm going to take the powers that the Constitution gives me and exert them. It would not surprise. And then, by the way, take me to the Supreme Court, where he's running a pretty good track record right now. And so I have no doubts that there are voices inside the White House saying, great, this is exactly what we planned. we want to take this all the way to the Supreme Court. If we are given the authority by the Supreme Court to deploy National Guard troops anywhere we want for basically any reason we want, this is what they're looking for. They want that carte blanche, and they want it within the first year of their presidency. So I think we see this playing out exactly the way they wanted it.
Well, Donald Trump on Truth Social, to your point, Jeannie, today, this is just a couple of hours ago, at least 54 people, he writes, were shot in Chicago over the weekend. 8 people were killed. The last 2 weekends were similar. The president writes, Chicago is the worst and most dangerous city in the world. And I'm looking at a list of cities by homicide rate. The first American city that appears on the list is, in fact, New Orleans, and that's at position 28. It is followed by Memphis and a few others here. Before you get that far down the list, Jeannie, it's pretty much all in Mexico or in Central America. The president doesn't actually think Chicago is the most dangerous city in the world, I presume, right?
Not if he is looking at the data, but as we know, he is not fond of looking at data. He is fond of finding data or creating his own reality and talking about it. And he very much believes that Chicago is violent. And we should not underestimate the fact that 54 shootings over a weekend of Labor Day is stunning. It is violent. It needs to be addressed. The problem here is, as this federal judge said, the president doesn't have the power under the Comitatus Act to do this. It is an overreach of his power. He does not have the ability to set up a nationwide police force as it is under his power. And so that is the problem for Donald Trump, which is why I think last week in that long extended cabinet meeting that you sat through, Joe, he said, I want to be invited in. And of course, he's not going to be invited in either by Mayor Johnson or by the governor. But it is very much in keeping, to Rick's point, with what the Republican administration here has been really wanting to do, not just to address crime, which they think is a winning issue for them, but immigration as well.
Jeannie, from a state rights perspective, we know that the mayor of Chicago has been very vocal about just how welcome those troops would be. What more can they do, Chicago and other cities across the country?
Well, they are going to have to read carefully this federal judge's decision. I think, if the president does send troops in uninvited, they will take him to court and follow that. We heard the mayor of Chicago say that his police force would not cooperate with law enforcement. There are other more moderate Democrats and Republicans saying maybe the governor and the mayor should try to work with the president to address crime. But I just don't see that in the offing, in part because of the politics of this thing, because we know that Pritzker, just like Newsom, has designs on the White House himself potentially. And so this does give him a way to make a national forum for him to take his case to Americans beyond Illinois.
Well, Rick, you wonder if the president is going to need to rewrite the sort of baseline foundation, the real motivation for using these troops, not unlike the ruling on tariffs. If he can rewrite the tariff emergency and create another reason to keep the tariffs in place, certainly he can find another reason to put National Guard troops in different cities in America, correct? This is something they've likely gamed out at the White House already, no?
Sure. At a minimum, they have already been saying that they're using the National Guard troops to support the immigration plans, which means that you have federal troops supporting the function of a federal law enforcement officer, which actually gives him better standing, within the legal system. There'll always be a reason for this administration to try to do what they're going to do. They're extremely good at finding cause and effect. And even the president's comments on Truth Social this morning about these 54 shootings, you don't have to be ranked number one. It's always an overgrasp for him. But most people would look at that and go, wow, that's a dangerous place if 54 people were shot at, in Chicago this weekend. And so he does play on the fears of people when they say these things. And of course, then he always takes it a little bit too far. But the reality is, I don't think he is going to suffer the desire to find a reason to.
Has suggested that, yes, it will be looking in those areas. Question from a terminal user here, Jeannie, with regard to Chicago. He writes, we could hate Trump for going to Chicago, but the city's been a mess for decades. What is the counter from local officials?
I think that's a great question. And this is where I mentioned before, you do have some voices on moderates on both the Democratic and Republican side saying, hold on, let's work together. Why doesn't the governor invite the president in? But to be clear that he can't just come in without being invited, and they have to have a plan as to what they're going to do to combat crime, you know, hiring more police officers, better training, all the things that we could do to address these issues. Because to the terminal user's point, Chicago has been violent, as have many cities for a long time. The problem here is that Chicago, if you're really looking at the data, is not nearly the most violent city. And of course, you just mentioned Memphis. The Tennessee governor sent National Guard troops to Washington, D.C. when two of his own cities are far more violent than Washington, D.C. Why aren't those troops in his home city? So there's a lot of politicking here, to Rick's point. And I think the danger for the Trump administration politically is that polling-wise, this is, at least at this point, wildly unpopular. The American public, particularly independents, do not want armed troops on the nation's streets. But they do, to the terminal user's point, want to combat crime, and we should all want to do that. So hopefully there's a way they can work together to make this happen.
Great conversation with Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Thank you both for the insights. We will keep talking about this, something tells me, in the future. I want to mention a quick breaker here. Headline crossed the terminal a short time ago. We told you it was coming. Joni Ernst reports last week, now made official. The senator from Iowa says she will not seek re-election next year, and she's up with a video post making that formal announcement today. This is Blue.
청산 사인 드리도록 하겠습니다. 청산 후에 트레이딩 종료하도록 하겠습니다. 자, 금요일 트레이딩은 여기서 마무리하도록 하겠습니다. 자, 청산 사인 드리고 금요일 트레이딩 여기서 종료하도록 하겠습니다.
주문 청산이 완료되었습니다.
자, 김대현과 다들 수고 많았습니다. 여기서 트레이딩 정리하도록 하겠습니다. 자, 금일약 400만원대 손실 발생하였지만 금주 리스크 상세 및 수익권 형성을 위해 노력하도록 하겠습니다. 자, 금일도 수고 많으셨습니다. 장 마감까지는 약 2시간 반을 앞두고 있습니다. 여기서 트레이딩은 마무리하도록 하겠습니다.
It is 1:40 on Wall Street. I'm Lisa Mateo. Tech stocks leading the losses on this shortened trading week. We'll start with the NASDAQ, down more than 1%. All mega caps are falling, with NVIDIA seeing its longest drop since March. NVIDIA shares down more than 2.5%. Let's hit to the Dow, down about 0.7%. The S&P 500, that's off about 0.9%. In the yield space, we have the 2-year 3.64%. That's up 3 basis points. The yield on the 10-year 4.27%, and that's up about 4 basis points. To commodities, WTI crude up about 2.5%, $65 a barrel. We have COMEX gold at $3,589 an ounce. The Bloomberg Dollar Spot Index, well, that's up about 0.4%. Few companies making news. Nestle turning to the executive who runs its Nespresso coffee empire to lead the company, and this is after it was hit by the second CEO firing in little over a year. American Vogue, well, it's named Chloe Mahl as its new editor, and she's succeeding Anna Wintour. Now, Mahl is the daughter of director Louis Mahl, also actress Candice Bergen. Wintour does remain chief content officer for Condé Nast. And finally, McDonald's bringing back its extra value meals. The deals begin September 8th and include a few limited time items like a Big Mac meal for $8. Meantime, in an interview with CNBC, McDonald's CEO, well, he said the reputation of American brands, it's dimmed, and the company wants to focus on strengthening the brand's identity in local communities. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa Mateo, thank you so much, and thank you for being with us here on the Tuesday edition of Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg TV and Radio, alongside Kriti Gupta in for Kaylee Lines the next couple of weeks here in the nation's capital. Kriti just in from London with many questions about the stories that are unfolding here. Someday I'm going to have to ask you about what the conversations have been like in London against the backdrop of all the tariffs. Now we've got another court ruling that has brought us to another inflection point, and the markets are clearly not terribly